Welcome, everybody, to AFTS DC 2026. We're so excited to have you. We're going to start our virtual part of the program now. So all of you joining virtually, we thank you so much for joining. And we're going to kick it off with a welcome address from the Managing Director and co-founder of AFTS, and then we'll continue with the program. So we'll allow some people to continue to flow in, but I will give the floor to Zakaria Samsalu. Thank you so much.
Thank you very much, Mickey. Very good morning to all of you from this beautiful spring morning here in Washington, D.C. It's been a busy week during the World Bank and IMF spring meeting. Welcome to the 15th edition of the Africa Fintech Summit. We've been doing it for 9 years, every April in Washington, D.C. during the spring meeting of the World Bank and the IMF every April for obvious reason, because of the facilitating the US Africa Fintech and Investment Connection, but also we have a large African central bank, policymakers and investors here in Washington, D.C. So it will be very convenient to foster the African regulatory policy making and the startup discussion. We're very much happy to join us from wherever you are. This year we've re-engineered our approach a little bit because of the various travel constraints. The last time we had a fully virtual summit was in 2020 because of COVID. This year we made it hybrid. By hybrid is a little bit different from what we had the last 4 years, where it will be on-site and streamed globally. But we wanted to make the room a little bit bigger this year. Because of travel constraints, we wanted our pitch contestants to pitch from wherever they are without any travel constraints as bootstrapping early stage startups. So we have 11 startups joining us live from 9 countries in about 2 hours by 11 a.m. East Coast time zone. So please hear their story and see how they're going to impact the financial inclusion and then the digital leapfrog of the continent. We have keynote speakers, fireside chats, as well as panels, both in virtually this morning and later on in the afternoon from 1 p.m. We'll be meeting in person at the iconic AWS headquarters 2 in Crystal City in Virginia, and we look forward to welcoming you for those of you joining us virtually and in person at AWS. To give you a little bit recap of what's coming after this keynote, after I finished, we will have a fireside chat moderated by Foster with Kwame. For those of you who know Kwame, he has been a key figure when he was with the Bank of Ghana in Accra, both for the fintech license passporting and also the virtual assets regulation that Ghana has passed last year. So we want to hear his insight from a regulatory policy making and now from an industry point of view. We are also very much excited to welcome Expedia, who just launched their business banking platform for those businesses here in Canada and in the US. So we'll be hearing from Kingsley about that product launch. This November, we are heading to Rwanda. Rwanda has made headlines this year for many reasons. One, for the fintech license passporting that they've signed both in Kenya and Ghana. So basically, any fintech startups registered and headquartered in Rwanda automatically get more than 110 million market access because the license is passported, so to speak, to Ghana and Rwanda. So we really, Ghana and Kenya. So what we want to hear from operators and investors is that how does that fintech license passporting impact the fintech expansion across the continent? And also, how does that mean for investors? So we're very much happy to hear those perspectives in about an hour and 5 minutes. And then 11 a.m., we have 11 startups pitching. The panel of judges will be here at the AWS headquarters in Crystal City. And after the program has ended, the judges will make their determination, and then the top 3 winners will be announced towards the end of our summit this evening. Then from 12 to 1 p.m. As we transition to in-person, we've made this a special face-to-face with investors initiative for seed and pre-seed investor founders. So we have 2 breakout rooms that will be on Zoom. That has already been shared, and you can check that on our website. So those founders who need to have that insight they need from an investor point of view, please join that Zoom breakout rooms for pre-seed and seed founders. Our website has a live schedule. Follow us. And without further ado, I will invite the next session, that is a fireside chat with Kwame, moderated by Foster. Thank you so much. Enjoy the day. We know that it's been a very busy week and day for all of you, and we're very much grateful that you decided to join us. Thank you.
All right, it's a pleasure to connect with all of you once again. My name is Foster Akugri, and I am very excited to be here. As Zach has officially opened and introduced all of you to the programming for this year's DC Summit, I'm very excited to be the first opening of this conversation, and I am privileged to invite the legend and of the fintech industry or financial services industry in Africa, Kwame Opong, to join us on stage to discuss some of the growing trends on the continent and what he sees ahead of the curve. So thank you very much, Kwame, for joining us. You're here in DC, welcoming you virtually. Hello, Kwame, can you hear me? Hello, Kwame.
Hello, Foster. Can you hear me?
Yeah, I can hear you. Can you hear me?
Okay. Looks like I can't hear your audio. Not sure what's happening there.
I can hear you loud and clear from here.
Just to double check, just stepping in, Kwame. Can you hear me
hear
okay?
you. Yes,
Okay.
I can hear you, Mikas.
Okay, Foster.
Can you hear me?
I can hear Foster now.
Okay, perfect.
Fantastic.
I will let you continue. Thank
But
you.
he sounds far away.
Is it better now?
Nope, Foster's gone.
Me now? Can you hear me now? Can you hear me now?
Hey, Kwame, just stepping in. Is your volume on the computer all the way up?
It's all the way up. I can hear loud and clear. I could hear Foster as though he was far away, but his audio could be your mic.
Okay.
Is it better now?
Give us 1 second.
Can you hear me now, Kwame?
Loud. Yes, I can hear you loud and clear.
Fantastic. So yeah, thank you. Apologies, everyone, and apologies, Kwame, for the technical glitch. I'm glad we have restored this. So allow us to jump in quickly. It's been a journey with the Bank of Ghana previously. A lot of transformation happened during a tenure, and we are privileged to see a lot of changes that have had a ripple effect and spilled over into many other countries in terms of the policy landscape, in terms of
restructuring of central banks and how they see and identify innovation and the speed at which they adopt and accept new innovation very quickly. And we would love to appreciate you for that effort that you were able to put in. I think what I'm very curious and to the audience as well to learn about was what are some of the biggest levers you identified over the period, and that's where sitting between velocity of policy catching up with innovation, and what do you see different now?
Right. I think first of all, things have changed quite a lot. I've had the opportunity to continue to interact with various regulators and central banks across the continent. And if you look at the journey, even in my previous life in private sector running fintechs and mobile money companies, and what you notice is regulatory capacity has improved significantly. That's the first thing I think we have to acknowledge. I remember in 2014, one of the early attempts to do remittances was completely confounding. It seems to have confounded our regulators, but today it's the order of the day. And you're finding a comfort among not just the operational folks in central banks and regulatory bodies, but at the senior leadership level. And so today you can have conversations with governors and their deputies and senior directors, and they can at least have a good appreciation of the emerging tech and its implications for the sector. I think what remains outstanding is a collective effort, because I've always highlighted the fact that good news is good for everyone, not just industry. And therefore, if we can find a way to co-create by first appreciating the legitimacy of each party's concern or interest, I think goodwill and intent is able to birth co-created policies that can help bridge that gap, which no one, by the way, has figured it out. You speak with industry from a G7 country to any other corner of the earth, and there's always that gap between the regulators' capacity or ability. It's not even a capacity issue. Their ability to say a yes to something that they don't fully have the assurances of safety and stability for the broader sector on. So it's a matter of there will always be a gap, but how do we make sure the gap is as narrow as possible? And how do we have a mechanism for resolving it? And I think, fortunately, in Ghana, for instance, having a cooperative industry with whom we enjoyed a good working relationship, having regulatory partners, not just the central bank, so the Securities and Exchange Commission, the National Communication Authority, and several regulators having a good working relationship with them, have all inured to our benefit, and that's why you see the progress that we're able to make during that period. And of course, an army of new supervisors and regulators who are now the lifeblood, the re-energizing lifeblood of most central bank young at heart professionals who are powering many of these innovative policies that regulators are putting out.
It's a very big topic about interoperability and portability between central banks, between financial systems, between capital markets across the various African countries. More importantly, as a driver and anchor to realizing the Africa Continental Free Trade Area and the opportunities it presents. We've seen in your tenure, one of the biggest successes piloting the passport licensing program between Ghana and Rwanda. And then we started to see a spillover of that into many other countries with emerging names like Kenya, which was recently announced at the Inclusive Fintech Forum in Rwanda, and also in Kenya, which is South Africa and Nigeria, which are coming up next. Do you see this trend following through, or do you think there's still some work to be done to accelerate the adoption of this passport licensing? And do you see this translating into various areas like the SEC and other agencies, regulatory agencies, who potentially come together to govern, making sure we have some sanity and fairness in the financial services industry?
Thank you. So This is a very strategic matter. And as you mentioned, already you've seen some countries coming on board. The good news is there's a lot of goodwill to achieve certain outcomes. There's a consensus around positive outcomes, and that shows in the work that the African Union is doing, and the Secretary is also doing. And the Secretariat is headquartered in Accra, Ghana. And to that end, we expect that several countries will come on board, not just for licensed passporting, but even for payment interoperability and all the things that make it easy for us to trade and interact economically amongst ourselves as Africans, right? We've already breached that barrier when it comes to culture. We've breached that barrier when it comes to lifestyle and entertainment. But obviously, when it comes to economic matters, there are complications there. And I tell people, the innovation part is hard. I mean, the payment part is hard, but the settlement is complicated for several reasons. So how do you tell that story? How do you work through it? That's the painful journey that we have to continue to work through. But a few things that I'm seeing that is very encouraging. Around the continent, you're seeing not just individualized country efforts, but regional efforts to explore things like open banking, right? Which suggests the level of cooperation is improving. You also will look around the continent and you're seeing an increasing change in stance to issues such as virtual assets and blockchain innovation. And as we know, blockchain is here. It's not news. It's not the next thing. It's already here. Stable coins have shown themselves to be a very viable rail. And at this point, you don't even look at them as currency, so-called. They're really rails that can enable things like cross-border payment interoperability in a place like Africa. So how do we accelerate those conversations? How do we convene around the right conversations? How do we have the right people at the table? And how do we not duplicate efforts, which is very important, because I think that's one of the challenges that naturally emerges with the various bureaucracies involved. Duplicative efforts that eventually do not do not really help in making progress in terms of pursuing things like interoperability, addressing things like licensed passporting, etc. Many of the principles underpinning licensing regimes are standard across various markets. That's the interesting thing, which really means, in plain language, we have more alike than more, differences. So how do we begin to work from that standpoint of known to that point of unknown? And I think doing it through a process of recognizing that not every central bank or even regulator, you mentioned the SEC, capital markets authorities around the continent have various degrees of capacity when it comes to digitization and digital transformation. Can we be reasonably patient to ensure that they have the opportunity to learn from best practice, to observe an ongoing test, and be able to decrypt and disaggregate all of that into what it means for them, so that they can also embark on such level of integration with their counterparts and domestically as well. So that's what we need to see a bit more of going forward.
This leads me to our biggest new hot, the VASP bill, the VASP acts, the VASP sandboxes, VASP programs, digital assets bills and programs that are starting to emerge across the continent. Also, as a spillover and ripple effect of some of these conversations that have been going on, the worry about intervention currencies and stable coins stepping in to help the whole de-dollarization agenda of the African Union and its members. What do you, CBDCs were theoretical 3 years ago, just 3-4 years ago. And I remember you championing the Central Bank of Ghana's CBDC. There was a white paper that was published along with some guidelines and some architecture that was being proposed as a concept to consider in creating a stable coin for Ghana, and by stating some good examples from Singapore, etc., etc. Where do you see this? Do you see a similar trend also of these of stablecoin adoption becoming central to bringing the CBDC conversations back to back to life? And what would that architecture look like as a whole from a continental perspective? Yeah.
Thank you. I want to say two things. And fortunately, sometimes old video clips can be dangerous for you. But fortunately, our hypothesis, which we openly shared, was that there had to be a recognition of private forms of money, so-called. So whether it's crypto or stablecoin. And right now, when it comes to stablecoin adoption at a global level, I think there's no question about that. If you look at the transaction volumes, it's far surpassing many TradFi type infrastructures volumes. So that's on a trajectory of its own. And of course, it's also regarded as more of a rail as opposed to sort of money itself, depending on its implementation. So that's the first point. The second thing to also highlight is that CBDCs themselves were an important response from the state-mandated institution to provide the public with money, fiat, actual currency in a digital form, because everything else around us, all the tokenization efforts, including tokenized assets, suggest the world is getting tokenized. Currency and payments were getting tokenized. And so we couldn't sit and leave ourselves at the mercy of market development such that we would not be able to respond appropriately in addressing all the potential risks associated with private money being more successful and more popular and adoption than traditional currency in real form. And I want to highlight CBDC is currency. Stable coins are pegged to something that gives it stability, even if it's pegged to a currency. But it is not by itself currency. And that distinction is very important because it has legal, commercial, and economic implications. What you're seeing as evidence of this is look at the UAE and look at China and look at Europe. They have not backed off from their efforts with CBDC. In fact, in many regards, they're accelerating it. That tells you, in case, and the US is a bit of an anomaly for obvious reasons, there are geopolitical dimensions, and we're going to leave that out for now. I think we've been quiet on the US conversation for a while when it comes to this. Stablecoin is going great, but digital dollar, we'll see what happens next. But as it stands right now, you're seeing key economies around the world advancing their CBDC efforts. But this is also happening at a time where central banks, particularly in emerging economies, appear to be dialing back the efforts on CBDC. And that's a risky choice that we have to be careful about. They are complementary. It's about on-ramping and off-ramping for visibility, for control, and the types of things that regulatory bodies and policymakers need. Otherwise, having to provide policy in response to market and consumer reaction to stable coins is an important step. But if you're leaving your flank uncovered, you're going to be responding from behind. And that's going to be another scenario where the regulator is too far behind industry. And so my general advice has always been focus on the immediate, which is stablecoin, but do not dial back the pressure on CBDC. That effort needs to continue, and you need to have your form of tokenized, digitized money and digital money. Currency is only issued by one institution in the States, and we have to make sure there's a digital form of it.
Fantastic. I know we've run out of time. Thank you very much, Kwame, for joining us. But I'm sure everyone who is here is curious about what are you up to next? What is Kwame up to? And as we wrap up, I'd love to hear quickly what you've been up to or what you're up to next. Yeah.
Okay, what I've been up to. Okay, so I've been engaged, obviously, by several former counterparts and institutions to advise. So I've been on advisory, but I've accepted a role with the Stellar Development Foundation as a senior advisor for Africa. So that's what I do now. So I fully transitioned to my blockchain life.
We love to see you on the other side, and I'm sure everyone will be excited. Please reach out to Kwame on LinkedIn if you want to stay connected and see how you could collaborate together. He's back to being on the private sector side as an innovator, and we are curious to see what you are going to influence next. Stay tuned, guys, as we transition to the next session. Thank you very much, Kwame.
Thank you.
Yeah. Continue. So we are getting into the Expedia conversation now, and joining me is Kingsley. Kingsley, can you hear me? Can you see me?
I can both hear you and see you live.
Fantastic, my chief. Please give me some energy. Where are you dialing in from,
I'm
Kingsley?
calling in today from Waterloo.
And how is it going?
It's going well. It's a nice weather out there today. It's sunny, and we're grateful for that. Yeah.
Fantastic.
Amazing.
You have been on this journey for a while. I'm not sure you recall, but we met 2 years ago at one of the Africa Fintech Summit, had a very interesting conversation. And I tried to play the devil's advocate. I love that. I love the motto. I love the enthusiasm. I love the journey. It's been 7 years on this journey, and a lot of progress Expedia has seen. Before we get into the launch, I'm curious, like what's inspired this path, and I'd love to hear that brief story before we go into what you are launching today. Yeah.
Amazing, and thank you for having me today. I am most grateful. Thank you for being here today with me, and thanks to the AFTS team at large, and for folks like us. You help us with a voice that allows us to amplify what we are doing, and we don't take any of that for granted. So thank you again, and I'm glad to be here today. So one of the things that has always bothered me was the fact that as it were, seemingly, in Africa, we do not have what we might call a true global bank or global banking infrastructure, as the rest of the world does, right? Like it's so difficult to even send money between two neighboring African nations. It almost doesn't exist, right? But I didn't know how bad it was until I started traveling globally. And then that was when it hit me so hard. Like it was so very painful and difficult to move money around. And I had instances where it was really almost near devastating for me. So I decided to say, you know what? There has to be a solution, and we can solve it together. And long and short, that was what gave birth to Expedia. It came from my own personal pain points, not being able to easily move my money around. And I just wanted to be able to do that. And then, as they say, the rest is history. And today it's a global brand that is helping businesses all over the world with easier way to move money around, right? But that said, we're just getting started with what we're doing. We have, I don't think that we have really reached that climax for us, because ultimately where we are going is having an Africa banking infrastructure that is interconnected to the rest of the world in a way that anybody in Africa can just open up their mobile phone and send money to anybody anywhere else in the world, and not just Africa. And in a matter of minutes, not days, those funds are delivered. Like it is so let me share this with you. You know that if you wanted to send money from, say, Lagos to Accra, right? That money either has to route through the US. You send it first goes to the US before it comes back to Accra. There are no rails to take it from Accra to Lagos or Lagos to Accra instantly. It doesn't exist. Africa doesn't have that. But I think the time has come for Africa to have its own, and that's what Expedia is living for.
So what really is the business banking product about? The Expedia Global Business Banking Solution.
Amazing. Thank you so much, Foster. Yes, drum roll. We are Expedia this way. We're really excited to be announcing the launch of our global business banking platform, right? And the simplest way I put it is this. It allows businesses and business owners access to a global banking rail that allows them to not just get paid locally, but to also pay out locally in any country in the world seamlessly, effortlessly. And that is the Expedia Global Banking Platform. We just recently launched that, and we are seeing businesses in their droves, in their hundreds, signing up and saying, look, I want to be a part of this. This is so amazing and this is so smooth. I once had a client from the US reach out to our team and says, like, is this for real? And the team was like reaching out back and said, what do you mean? It says, it is so simple. It is almost near too good to be true. And I'm like, no, it's not too good to be true. It is true. It is that simple and it's that true, right? That's what we build to enable businesses globally move money in a way that hitherto has not been feasible before, and particularly for businesses in Africa who do not have that easy access to be able to move their money globally. And we're doing this with partnership with AFTS banks all over the world. For example, we recently secured our PSP license from the Bank of Canada, right? But not just that, one of the things that does for us, or one of the things that our global banking does, which is really what makes us really, really unique in that offering. Every fund, every money held by a business in their account with us is not only secured, it is guaranteed to the last dime, to the last cent.
So if I had a 500, how much insurance do you have on depositors' money on their accounts? Yeah.
All of it is insured.
Interesting.
There's no limit. If you've got $1 million, the entire $1 million is. If you've got 5, the entire 5 is. If you've got 10, the entire 10 is. And if you've just got $1, the $1 is. To the last cent. That is the kind of infrastructure that we have built for global businesses. It gives them peace of mind. It gives them rest. It gives them assurance, knowing that, yes, not only can I move my money easily, but that money is safe. It doesn't get lost, right? Like, it is so secure that what we say people is, even if anything were to happen to Expedite today or tomorrow, your money is safe. Nothing is going to happen to your money, right? And that is under regulation. It's not just by me saying it. That is under regulation.
Fantastic.
Amazing.
So, drum roll, guys. We are excited to officially launch the Expedia Global Business Banking Platform. And Expedia is one of the named partners for the summit in DC. It could not have been possible without them. We'll have to say thank you. Let's watch this video to officially launch Expedia's Global Business Banking Platform. And you can check their website out for more information. Reach out to Kingsley as well on LinkedIn to connect more and understand what the product does. And I'm sure you'll be very excited and fascinated.
Hi, my name is Kingsley Madden, and I am the CEO at Expedia. After living in over 15 nations, my family and I decided to immigrate to North America. On arrival, we were essentially stranded. Everywhere we turned, we were asked to provide credit history. We couldn't even rent a car, we couldn't rent a house, we couldn't even get a cell phone. It was frustrating. But I wasn't alone. In North America alone, there are over 100 million people who are considered credit invincible, and these people are grossly underbanked and grossly underserved. But it's even getting worse. Immigration to North America is at an all-time high, driven by regional wars and climate change. So I decided to do something about it. Allow me to introduce Expedia, the first Google-backed global money app that allows users to get a bank account without even visiting a bank branch. They can get a card for their online or in-store transactions. They can pay their rent and bills and even send or receive money internationally. And then it gets more interesting. As they do all of this, they're able to establish and build credit with everyday banking transaction. Little wonder then that our app has been downloaded over 10,000 times, and we're experiencing a 60% surge in user growth. We have experienced over 2,000% growth in transaction volume and processed over $20 million already and counting. With over 500 five-star ratings, our users are just raving about us. Given our growth rate, we are projected to exceed $10 million in a few years in revenue because our acquisition and revenue are just growing. And this is because we have built a perfect solution for a huge 500 billion market that is largely untapped and growing. Unlike others, our solution allows our users and their businesses at the same time with options that enable them to build credit. Credit building for businesses is set to revolutionize the industry. We have an all-star team with a combined enterprise experience of over 200 years that has been further amplified by mainstream media. Expedia has been featured across several reputable media outlets, and through our strategic alliances, we have established ourselves as clearly the leader in the market. We are raising $1.5 million to help us scale our user acquisition and to also scale our revenue. In fact, we have raised over $500,000 from our users already. Talk of validation. So join me in making the next big thing. Thank you.
Congratulations, Kingsley. It is officially launched at the Africa Fintech Summit DC, landmarked and time-stamped today. Thank you very much for choosing to use this platform as a medium to launch this event, and I'm sure the audience are equally and very excited. Stay through the session and listen to if and when you can, and we look forward to seeing you in Kigali in November.
Thank you so much.
Up next, we have Jean-Marie coming on stage. Jean-Marie is from the Rwanda Financial Center, or Kigali International Financial Center, as we will call it sometimes. Thank you very much, Jean, for joining us. We know it's a bit late in Kigali, but we are very excited to have you here. You look amazing, by the way.
Thank you very much for having me, Foster. It's a pleasure. It's not that late actually in Kigali. It's 4 p.m. So
still within your working hours.
Absolutely.
We are glad we did not get to steal you from your free time. It's a pleasure to have you here. Would love to learn a lot about the Kigali Financial Center in the short time that we have. Love to bring the attention of our audience to the fact that Rwanda is our host country this year for the Africa Fintech Summit happening in November, on the 16th to 18th of November at the Kigali International Convention Center. And we look forward to welcoming and hosting all of you there. You can check out our website for more information about the Kigali Summit. And Jean is here to tell you why you need to come to Kigali and to tell you why the Kigali International Financial Center was set up for you if you are listening and you're an innovator. So Jean, let's learn a little bit about yourself and let's go into why the center was set up. So tell me, who is Jean and what do you do at the Kigali Financial Center? And why do we need to know your center? Yeah.
Thank you very much, Foster. It's a pleasure to be here. And so my name is Jean-Marie Kanandura. I'm the Chief Investment Officer at Kigali International Financial Center. What we do pretty much is to facilitate and to convince investors that they should use Rwanda as their platform or gateway to investments in Africa. So we started like 6 years ago now. And the idea behind is that Rwanda, the government of Rwanda, really wanted to kind of play a bigger role in attracting capital to finance Africa. Most of the time, let's say in the past, a couple of years ago, you are probably familiar with this. When you are a founder, or if you are a VC or a PE on the continent, you want to raise money. Probably we go to structure or to set up your company, your SPV, your holding, your funds outside of the continent, right? Mm-hmm. And yet you are targeting to invest on the continent. So we wanted to change this to say, look, we have what it takes to also attract and facilitate investors to be domiciled on the continent. You can still, of course, use Delaware and the other jurisdictions for other reasons, but should you want to focus on Africa, raise money globally, invest in the continent, Rwanda has put in place a framework, a platform for that. And that's what is Kigali International Financial Center. So it's very much a complementary jurisdiction to what Mauritius, Dubai, or Luxembourg have been doing for Africa. And yeah, so that's pretty much what we do. Three biggest pillar. One is to make sure that we have the progressive and the robust regulatory framework to make sure that we can accommodate global investors in trusted, predictable jurisdiction. And then second is really promotion, right? Now is to go out and pitch investors, pitch founders. That Rwanda is a country where you can definitely invest, but also use as a platform or as a jurisdiction for continental or cross-border investments. And lastly, we're also working, of course, on the skills and the capacity building. These are, I will say, the three pillars that we're working on to make sure that Rwanda is also a preferred jurisdiction for cross-border investments.
Now, walk me through who should come to the Kigali International Financial Center. What does it look like when I book a flight or I decide that I'm choosing Rwanda, or I am considering Rwanda as a potential domiciliary for my company, where I want to set up my entity to operate in Africa, or if I'm in an African country already and I'm intending to choose another African country. What does the journey look like for the innovator, for the investor, for the entrepreneur who is looking at the financial services sector as an interest area?
Yes.
Where do they start from, and how does the end look like?
Yeah, very good question. I would say that the entry point is KFC. That's what we do. That's what our team does. It's really to make sure that we provide you with comprehensive information as to what type of company you can set up, what are the tax incentives that you are eligible to, or what is the process. And basically, we help you to navigate the setup and the establishment here in Rwanda. But we have also made it very, I'd say, friendly process. You can absolutely create an entity, of course, digitally, online. There's an online platform, or you can go and create a company. And from there you can even apply for license also online. Should you need a license, let's say, on the capital market or central bank for fintech companies, for example, you can do that. All can be done online, and we made sure that it's the process is clear, streamlined, and very. I would say probably the most or the shortest framework or time frame in the continent, definitely. And we are also, of course, because we are becoming more and more sophisticated, right? We are also building an ecosystem of service providers, right? So if you want a management company, law firms that can help you and assist you to structure a more, or let's say, complex or sophisticated structure, we also have global service providers that can help you, navigate and meet the requirements. So yeah, but for example, if I may go into a little bit into details, if you want to set up a company, let's say you are a founder, you are based in Nigeria, you want to set up a company, into payment system, PSP, right? Creating a company in Rwanda, it takes a day or 2 days maximum, right? From there, you have to apply for a license, PSP license at central bank. Framework or time frame is 1 month. So within 1 month, you should have your license. If you have compiled and you put you have submitted a comprehensive file within 1 month, you should have your license. And opening a bank account is as fast as 2 to 3 days. And very important to note is that you can open a bank account in, of course, local currency, Rwandan franc, for, let's say, domestic operations, but also you are allowed without any justification or approval to get to have a bank account in any hard currency, be it in USD or Euro or Pound. So I think that's also something that is very unique. And our role as a KFC is really to make sure that you go through this process in a smooth way. We follow up. We are, I think, one of the biggest, value proposition or uniqueness for of Rwanda is that we operate as a team Rwanda, right? So from the Registrar General Office to regulator to policymakers to ourselves as promotion agency, we are very we collaborate very closely. We update each other. We follow up. So we work toward a common goal. So this is very helpful. And this is what I think makes Rwanda very attractive and very convenient to operate or to set up in. Yeah.
So do I require a membership do I require some form of membership with the Kigali International Financial Center to access your services? Is it free to access those basic advisory services and get that packet of information? And how deep is this information? Is it enough to make decisions, or do I require an augmented opinion or a secondary opinion from a legal advisor from Rwanda, maybe to be able to make that informed decision?
Yeah, that's a great question. Our mandate is really to facilitate and to develop, facilitate, and help investors to set up. So we do that as a KFC. This is our mandate. This is my daily job. We don't charge anything. My job is to provide information, to guide you, and to make sure that you have confidence and trust in what we have put in place. Now, if you want to go ahead and set up, that's why I say that we have a framework, an ecosystem of service providers that can help you. Right? I know, for example, some of the, let's say, founders, they want to have, or investors, they want to have, let's say, legal opinion. And that's where they, for example, they use the Big Four, right? One of the Big Four to provide the legal opinion or tax opinion, and then they can maybe convince their boards, because at the end of the day, I'm a government agency. Maybe my explanation might be maybe a bit, I would say, subjective or biased. So some of them go through legal firms or tax advisors to provide them or to confirm what we've done. But and this is we have a list of regulated management company that can help you, that we can recommend to go through or to use. We can use, of course, the well-established, like a Big Four that are present in Rwanda, or any law firm of your choice. But we are always next to our investors throughout the journey, from convincing them to come, even when they have set up, actually, and that maybe that's something I can add on, which is also very unique. It's also like the government of Rwanda, through different investment arms, are willing to even to co-invest. And example, we have some fund managers that have set up here in Rwanda, and they were able to raise money locally from our pension fund or from sovereign fund. So that is also something that I think is unique, right? I don't think there's any other jurisdiction where you can have this type of facility or engagement. So we help you to connect you with potential investors, let's say locally, if you want to raise money. But even when if you follow us, we do a lot of road shows. We organize events locally and on the continent and beyond. We also feature and to kind of give platform to our investors to kind of want to share the experience in setting up in Rwanda, but also to connect, to make foster connection. If they are raising money, can introduce you to DFIs. We have some close relationship with few DFIs. So the idea behind it is really to make sure that not only you set up here very easily and in a friendly way, but we also want you to prosper, right? So to attract and to have more transactions. So it's also part of our mandate. Yeah.
I think one of the very, very important things, and just to before we wrap up, is to understand two big questions that we tend to see some of our investors who we take to various countries is about repatriation of funds. What is that framework? What does that framework look like? And number two, investor grievance. If I came to Rwanda with all the great intents to invest, is there somewhere I go if I have any challenge, blocker, if I partnered a local and it did not go as planned? Are there programs or frameworks that surround investor grievance management and the follow-through process to give investors the confidence that me getting into the country wasn't the only interest of the Kigali International Financial Center and your peripheral agencies, but also protecting my interest while I am there through the process? What does that look like? Yeah.
Excellent questions. And I will start by the last one. Investor protection. I know this is very important question and very valid concern from investors, but Rwanda is well known to be a country where we have like a rule of law, right? So if you look at check different indexes when it comes to rule of law, good governance, Rwanda is number one or number two on the continent. So that should give you, let's say, comfort. And why is it so? Because of course, the government of Rwanda has put a lot of measures or initiative to fight against, say, corruption or any illegal, let's say, activities that can frustrate the investors, right? So when we, for example, we have an arbitration court, arbitration center. I think from the last 3-4 years, it's even being used by regional players. So nowadays, if there is any dispute, we see investors actually coming to Rwanda to use our arbitration center. We have instead of going to London or Dubai, which is normally the biggest used arbitration center. So that's to provide you comfort. You can check any index. You see that Rwanda is well positioned in terms of rule of law. To your first question, in terms of capital repatriation, there is absolutely no restriction in terms of capital repatriation. For example, as I said, you can set up your bank account in dollars or in euro or pound, and you can transact freely, right? And once you have, for example, paid your tax, of course, we have a comprehensive and very competitive tax incentives for funds, for fintech, you name it. You can absolutely repatriate your capital without any justification. There's no restriction, and this is something that we see being enjoyed by. We have now more than 300 investment vehicles that have set up. So it's what I'm saying here is not like a initiative. It's the KFC or the center is really up and running. We have investors that are enjoying those benefits that I mentioned earlier.
Thank you very, very much. I think we have learned a lot about the Kigali International Financial Center. We have learned a lot about Rwanda just now. If you have never heard about the Kigali International Financial Center before, this is a government agency responsible for promoting investment opportunities or promoting the financial services industry as a priority area for Rwanda. as part of its agenda to becoming a financial hub in Africa. So do visit their website and learn more about who they are and what they do. As I always say, information is key, information is power. And we really appreciate each and every one of you for taking time to listen to this conversation.
Thank you very much.
Thank you very much, Jean.
Thank you. Thank you. Thank you. Pleasure. Right. Thank you very much. Yeah.
So we would be moving shortly into our next session, and I would like to remind all of you about the Africa Fintech Summit happening in Kigali in November on the 16th to the 18th. Please visit our website to learn more about it. There's going to be a lot of Rwanda-heavy conversations, and I look forward to seeing you guys starting to purchase your tickets. We'll be doing some early bird discounts, early bird promotions, and we look forward to seeing as many of you taking advantage of that opportunity. I would quickly play this transition to break our ice for a little bit, and then we will zoom into the next conversation with my panelists coming up next.
See the sunrise in the morning glow. People hustling, moving to and fro. Money flies with the speed of light. From a smartphone into the night. From Lagos to Accra, Nairobi, Cape Town. Mobile money future, beware.
All right, thank you very much, and welcome my panelists, Giselle, Bolanle. Can you guys hear me loud and clear? We would love to see your faces as well.
Yeah.
Fantastic.
Yeah, I can hear you. I'll be on camera shortly.
All right. Do we have Dut with us? Okay. Fantastic. John, can you check in? I'd love to hear your sound as well.
Hey, Foster. Hi, Giselle.
Hey, John.
So I'm not sure if I get your energy levels fully checked in yet. Where are you dialing in from, if I may ask? John, Giselle, and Bolanle.
Yeah, Foster, energy is low. Yeah, I'm kidding. Yeah, I just landed Abidjan. I'm talking to you from Abidjan, Cote d'Ivoire.
Fantastic. And Giselle?
Hey Foster, yeah. It's end of day here in Nairobi. But yeah, excited to be here. I'm ready to chat.
Fantastic. And Bolanle?
Hi, I'm actually here at the AWS Center for the physical event.
Oh,
so yes, I'm joining from there.
So thank you for checking into the same location.
Yes.
So isn't it a very beautiful opportunity to be joined by a very and where's Tanya? Oh,
Hey, can you guys see me?
Yes, I can see you now. I thought we were going to miss you out on this.
I had FOMO. I was just frantically typing in the chat, but yeah, glad to be on the panel today. Hi, guys.
Hi, where are you dialing in from too?
I'm in Nairobi. Yeah, rainy Nairobi, actually.
Oh, so Giselle and Tanya, greetings from Nairobi. Isn't it a very beautiful opportunity to really represent what the Africa Fintech Summit is, having a very diverse perspective from participants and speakers from various countries. In this very first round, I'd love to give the opportunity for each and every one of you to introduce yourself. I think in order of my screen, I have two very beautiful ladies preceding the two handsome gentlemen. So Tanya, you go, Bolanle, you go after Giselle, and then John, and then we can proceed into the conversation.
Awesome. First of all, thank you so much, Foster, and to the entire AFTS team. Really excited to be on this panel discussion today. I think it's something that's very close to my heart, so looking forward to the discussion. But yeah, my name is Tanya Alves, Regional Director for ONAfrique, looking after the Southern African markets for now. For anybody who doesn't know who ONAfrique or what ONAfrique does, we've been in the fintech industry for the past 16 years. Some of you might know us by our old name, which is MFS Africa. We rebranded in 2023. But essentially, ONAfrique provides one of the largest payment gateways on the continent, where our hub provides a network connecting 44 African countries, providing interoperability for cross-border enterprise and remittance payments. We see ourselves as an amplifier and an equalizer. So wherever you are on the continent, we want to enable you to either make or receive payments seamlessly. So yeah, excited to be here, and thanks again.
It's a pleasure to have you, Tanya. Bolanle?
Hi, everyone. My name is Bolanle Barua. I lead the SME business at Flutterwave. Really happy to be here. I don't think Flutterwave needs an introduction. We've always been with the AFTS team for all these years, and we're happy to be here again. Thank you for having me.
Thank you very much. Giselle?
Hey everyone, how you doing? Jazeel here, calling from Nairobi. Super excited to be here. Excuse me. I lead Africa Fintech Investing for Axion Ventures. We're an early stage fintech investor investing in pre-seed to pre-series A fintech companies across global emerging markets, including Africa. Super excited to be here and to be chatting with you. And nice to see you again, Foster.
It's a pleasure. John?
Yeah, Foster, thanks. This looks like a Real Madrid, the Galacticos here. John, Chief Operating Officer at AutoCheck Financial Services. AutoCheck is a Pan-African business currently operating out of 10 markets in Africa. And essentially what we do is we're helping Africans get access to asset financing and really targeting and solving the transportation poverty that we see across the continent. Quite pleased to interact and share today. Thank you, Foster.
It's my pleasure to have all of you. And I am very privileged to be having this conversation, and more importantly, being the one moderating this conversation, because I think aside from Bolanle, I can confidently say I've interacted with all of you more than once, more than twice, and met all of you in person. And thankfully, I'm going to be meeting you today, Bolanle. So it's a pleasure to have all of you here. This conversation is a very, very important part of the narrative we are trying to drive globally. This year's summit is Powering the World from Africa. And the conversation, as we've heard in the last year, has been Africa has transitioned from Africa rising to Africa has risen. Africa is no longer positioning itself for aid, but for partnership. And every one of you's entity has demonstrated fully and clearly that we are capable of doing more and far beyond what is expected of us. The demographics has also demonstrated clear trends of opportunity on the continent. The biggest challenge and the biggest keyword, and I'm sure Giselle will agree with me, Giselle has a very famous newsletter he writes every week, and I am a big fan of it. I learn something very new every day. So if you don't know about it, Giselle, when you have the chance, please plug them into the newsletter, because it takes a lot of dedication and effort to be publishing weekly for an audience to learn about some of the basic things. And in your day's job, you scan pitch decks every single day. And I hear the pain every time you write about your challenges with pitch decks. And one of the keywords you find in every fintech company's deck when they talk about Africa is fragmentation. The payment system, the payments infrastructure in Africa is fragmented. It is fragmented. It's fragmented. What does that mean? And from a regulatory and infrastructure standpoint, what does that mean? And this panel is focused on some of the big signals that are emerging out of recent announcements around passport licensing that Ghana and Rwanda piloted and now has started to extend to other countries. And I know the pain point you all face from an investor perspective around what's the incentive, what are some of the big blockers or risk, political risk or policy or regulatory risk that could potentially limit your addressable or serviceable market. And on the innovator side, John, Tanya, Bolanle, all of you play a key role in expansion of your products and services across the region. And one of your biggest pain points is navigating the regulatory landscape. I'd love to hear your initial reactions. And at this time, we can start with the gentleman. Maybe John, you can go, Giselle, and then we can take Tanya and Bolanle. To hear your initial reactions to what this painkiller of passport licensing is going to cure for you guys, or is already curing for you from a headache standpoint. Yeah. So John, you can take the first jab.
Yeah, thanks, Foster. So I think that it's one of the hot topics out there if you're building in Africa. So I'll take a jab at it from 2 points, talent mobility and also then regulatory impact. What it does, and I felt it firsthand, is you are now able to crisscross and seamlessly transition talent from one city to another, right? And that helps the keyword you use, fragmentation, because building in Africa, it's almost like you're working in silo market. When we say fragmentation, it just means that those markets have different shapes and form in terms of problem solving. So you often don't find yourself copying and pasting a model that has worked in one market in another market. So, but having that ability to move talent easily to the corresponding country gives you that edge to attempt at solving a localized problem, right? That's the first take at it. Then the second is we are seeing this policy evolve, right? Obviously, Rwanda, Ghana, we've seen some around between Kenya and South Africa as well, right? We do know that it's a moving goalpost, right? It creates a lot of uncertainty because you don't know when next it's going to happen. And as an operator, it just means you have to be on your feet, right? Because you have to be very effective to adapt to those realities and keep on reassuring your investors on what you're doing. That's my take at it. I'd love to hear what the other panelists would say about that.
Yeah, absolutely, John. I think you highlight a couple of things that are really critical. The first thing as an investor that we think about a lot whenever we are looking at opportunities in Africa is the size of your initial market. And I think many of us know that markets that we look at, typically the addressable market, people that can pay for your product at the price point that you're charging, is probably smaller than the overall population. And that's what really makes this passport licensing really interesting, because it could, in theory, expand market sizes beyond one country. Because what we typically see happens is that, on average, we're seeing companies take anywhere between 2 to 5 years to leave their core markets, because to actually launch a new market, let's take Kenya, for example. To build a lending business in Kenya, you need to be able to get a lending license here in Kenya by the CBK, which is given out on a rolling basis now. You need to get the right sort of like people on the ground, like John mentioned, regarding talent and mobility. And that can really, while you're trying to do that in the same vein, operate your business in your core market, it's a tough thing to juggle. I know, for example, John himself moved from Lagos to Nairobi. There's different challenges that come trying to build across the different siloed markets, like John accurately said. So I think this passport licensing, in theory, could be really interesting, because it could make sure that we have an easier transition and reduce that time between moving from one market to the other. And the reason why I think investors like me think about what it means to build a Pan-African business is because I'm sure Tanya knows quite well. In different markets, you are exposed in single market currency risk, for example. It can be a big one, or inflationary risk. And so when you're in multiple markets, you're able to then kind of diversify against the potential risk. So 2 years ago, the Naira went up 400% depreciation. If your business was Naira only, all of a sudden you were a business that was 4 times smaller than it was, even if you were just staying flat, right? And so that complication, I think this kind of initiatives could potentially solve for, because then we can go from 53 independent markets to potentially 10 coordinated markets that make it easier to move in and out.
Tanya, what do you see? And after that, we'll introduce Dutz, who's just joined us. Yeah.
Awesome. And thank you so much, guys. Definitely agree with what's already been shared. I think from our perspective, we were really excited when we did see the passport licensing, one, actually launching, and also 2, in fact, even this year scaling, when we saw the partnership between Rwanda and Kenya. I think first and foremost, what's exciting is that it kind of indicates a shift in mindset from what has been what has been a more traditional actor within the fintech ecosystem, right? So normally you'd kind of hear like fintechs, tech companies are eager to go, they're agile, but the regulator was kind of always kind of behind or playing catch up. But in this case, when you kind of see regulators providing or trying to create networks of interoperability, it's almost like they're trying to act like a fintech, right? Because even from our perspective, over the past 16 years, that's exactly what we've tried to build, is like interoperability from a payment rail perspective. But we now actually see regulators trying to change that mindset and create these frameworks that will help us. In terms of when, an actual pain point and then how that's going to be helping us, I would say would be twofold. One, just from as an operator, it would really minimize duplication of efforts, because a lot of our day-to-day activities when we're dealing with our receive partners or even send partners is due diligence and compliance, KYC and onboarding. So when we have, this kind of more harmonization between different markets, key markets, I think that will also help us in terms of time to market, time to revenue, how quickly we can actually onboard our partners. So I think first and foremost, that's really exciting. And then even from our clientele perspective, or the people who we partner with, one of the biggest things that they have a challenge is that they really want to go fast. They're winning at home, but they want to scale. But then the first question we have to ask them is, do you have a license in this market? Are you domiciled? Are you regulated? And of course, the answer is no. So suddenly you've got a company that has huge prospects. They're doing what they need to do. They're fixing the product. They've identified the market, but they're not able to actually hit the ground running because of that issue around the regulatory aspect, right? So I think from our perspective, it would really help us just in our own day-to-day, but also in terms of the partners who are connected to our hub, we'd be able to definitely see them scale much faster.
Bolanle, I think we lost Dude, so we'll go ahead with you and come and once he joins back, we can bring him into the conversation.
Can anyone hear me?
Loud and clear.
Unfortunately, I can't hear you guys, but I heard Tanya last. I couldn't hear Foster, but I know the question we're talking about. And like Tanya said, we're pretty excited about the, the opportunities that passporting offers. As you all know, Flutterwave operates in 35 plus markets. And I can tell you over the last decade that we have been in existence, that has been probably one of the largest, cost lines for the company. It's costly, it's time, it's time consuming. And when you think about all the requirements, like Tanya said, from compliance to regulations, it's just, it's been a very stressful situation. I think the bigger story that is exciting for us, because really our business is one that our goal is to see many other businesses grow and build on our infrastructure. When you think of an average African founder who's showing you a pitch deck, I'm sure Jasel sees that a lot. When you ask them what's your addressable market size, unfortunately, because of the issues around licensing and the areas and where you can start from, they might be solving a problem that is a pain point for Africans in general in many markets, a use case that applies to many markets. But when you ask them what's your addressable market, they can't tell you that large 1.5 trillion people, 1.5 billion people size. They'll probably tell you, oh, if all they have is a Cameroonian license, then they are limited to the population there, maybe a percentage of that population. That affects the kinds of, opportunities that come from them, who's willing to invest in them, because then they become almost, the returns are not as great as every other person sees. So imagine the prospects of passporting for many fintechs on the continent, and for Flutterwave, that is like a super highway enabling other fintechs and startups build on us. It's one that we're really, really excited. We've been advocating for long. I'm sure you've seen some of the posts from our end around, why not let's make this thing interoperable? Why not let's harmonize and work together? So the excitement is there. The next thing is to see that we execute it well and that it makes, it works, it makes sense for everybody. Thank you.
Thank you very, very much. I think at this point, I'd love to hear your perspectives. What does this change in your world? What does this change in your businesses from your growth perspective or strategic growth perspective?
maybe from Giselle's point of view, really love to hear, does this stimulate the investor ecosystem in any way, shape, or form? Is appetite starting to increase? Are you starting to hear more about, hey guys, are you opening up a next round of fund? Are you shifting focus to fintechs? Blah blah blah. Are you starting to see some form of stimulation happening internally based on the growing policy changes or regulatory environment? So Giselle, you can take that, and then I'll take the reactions from the other guys here.
Yeah, of course, Foster. I think it's in two fronts. One, I think it's changing not changing, but it's refining the way we think about what the right founders profile is to back on the continent. I think that given the complexity of Africa, we've always been focused on founders who understand their core market well. I think what the next level now is to find founders who understand their core market well, but also understand what they'll require to get into their next market. Because by definition now, there's potential, and we're still in the early days yet, so I don't expect it to change the next year or so, but I think there's potential really for companies to be able to start and go to market in other geographies quicker. I think the second thing that is really bringing up for us are portfolio companies that are in specific markets. The question becomes, how are you thinking about your next market? When are you thinking about the next market? Because as we continue to we've seen the last 2-3 years, having a single market exposure can be quite risky. And at the stage that I'm investing in, which is like really pre-seed, C stage, they are not Flutterwaves or AutoChecks or Honor Freaks. So they're really single market, already have a single market risk built in. So now my question as board members to say, how do we become in at least one other market? What does that one other market look like? And this potentially makes it easier for us to say, if you're in Kenya, is it possible that you go to South Africa now? Right. Or if you're in Ghana, is it possible that your business is in Rwanda now? And the more of those conversations that come up, I think the more opportunity it gives for companies to survive. And if they survive, then that will continue to make interest for later stage investors to want to come into these like functionally a bit more de-risked assets. So that's kind of like one of the things, some of the ways that we're thinking about this having an impact on the work that we're doing here as investors.
John, thank you very much, Giselle, for that submission. Very interesting perspective. John, you guys have carved a very interesting niche, playing a dual side of the business, owning a marketplace for vehicle purchases, and owning a financial services business that underwrites vehicle asset financing. Do you see any significant change in the opportunity, especially accelerating your growth? Because on the marketplace side, you don't really face too much regulatory hurdles expanding, but you are limited on the speed at which you can grow your financial services business without being too innovative in how you get into these markets, trying to buy out a company with a license, all of that nuances. What does this represent for you? And I know you are not operating. I don't know if you're operating in Rwanda yet from your financial services vertical. And does this create some sort of incentive to really look at Rwanda as a market, as a market to originate from a growth strategy, a strategic growth perspective?
Yeah, thanks, Foster. So I think it's very easy to get so excited about the possibilities, right? For AutoCheck, one can say the easiest win would be cost optimization, because then if these licenses are interoperable, it means easier operational and speed to market. So I think that's a very big one that comes to play, because then a license in Kenya can operate easily. In Ghana is understood in Rwanda, and really you're dealing with more around understanding the local nuance of the business. So that excites me as well. But I think it's also a point to caution ourselves as operators to understand that these markets are quite different. That you have a license to operate doesn't mean that business is going to blow up. And capital would only hide inefficiencies for a while, right? So it's always important to go quite granular, understand the real risk, build for that local ecosystem. In my case, understand Rwanda has been quite flexible in terms of business registration, the support systems and all that is quite efficient, but it doesn't mean that the consumer behavior in Rwanda would be similar to the guy in Accra or the dude in Nairobi. So it's taking a very granular approach to understand the unit economics, understand the market, the consumer behavior, and then as you export this capacity to go to market faster, we're really doing it where better, where capital is efficiently deployed, and you can really tap into the upside that people like Jasiel are betting on for. Foster, you're mute if you're speaking.
Yeah, thank you very much for drawing my attention to that. Bolan, a very interesting time for Flutterwave. And can you let me know if you can hear me? Fantastic. It's a decade since your journey began. This year marks a very big milestone for you. There's a big saying that if you go past 5 years in Africa, then it means that you are going to stay for a very long time. And this is a big signal. And I always say it's a great opportunity to see firms like you take precedence to create that confidence that is possible. Flutterwave has been a very important symbol on the African continent when it comes to demonstrating what success could look like. You've recently acquired a banking license in Nigeria, and that's just the beginning of many things. You're one of the largest network of financial technology service providers on the continent, with some very big partnerships with some of the multinationals in terms of collections and settlements on their behalf on the continent. Not to bore you too much with what you guys already know, what does this mean for you from a signaling perspective as a business? And you oversee the SME proposition as well,
yes,
which is a very critical piece on the continent, considering SMEs contribute almost 70 to 80% to the GDP of the continent and constitute about 90% of businesses on the continent. So what does this mean for you, and what does this mean for the opportunity available to serve many more people?
Thank you, Foster. It's exciting times, obviously, for Flutterwave. I think one of the things that's most exciting is, when you do advocacy over the years and finally you see those, your advocacy begin to yield results, it lets you know that it's not a wasted effort. I think one of the things first that I'm thankful for is platforms like African Fintech Summit that has continuously over the years ensured that the right narrative about African, tech space is put out. That has done a lot for not just global signaling, but even local signaling. I know we have a few regulators and all that here. I think one of the first things is to even appreciate the regulators. This is a landmark move. We've always said that, the real model that will work is to almost run like the EU. If you're in the EU and you get licensed in Belgium, for example, you can wake up tomorrow and start a business in Cyprus. Yes, like John said, your playbook obviously will be different, which is more nuanced strategy that you can do. But in terms of the core, cost to actually set up, it's pretty easy because, you can move anywhere around Europe. I can wake up tomorrow and say I'm in Germany. As long as they see that you've passed in one country and it's standardized processes and playbook, it makes it easy. So for us, it's one to, thank the regulators for hearing, guys like you for continuing to show that it's possible. I think it's a landmark initiative. Yes, early days, everyone is still on the edge saying, how will it be executed? Obviously, we know that in the past, we've tried to do this type of stuff with the AFTS, sign, and how long it took many countries to sign up. But I think this one will work. I think it will work because of the maturity of the countries that are in this, and the maturity of their central bank systems. We all know that the Kenyan, Ghana, and Rwandan central banks are very mature in terms of how they are working. And so we expect that this will reduce what we call friction tax, the time that it takes for us to start and for businesses. Now, when it comes to SMEs, honestly, I've had many SMEs ask me, what does this mean for me? Like, I hear you guys say passporting. I hear you guys say this. I hear you guys say that. Today, with Flutterwave, I can be selling in Lagos, Nigeria, and have someone in Rwanda pay me, and I'll still get it. But what does that really mean for me? And I'm like, yes, that is possible, but it just opens up more possibilities. It will go from there. Quite a number of businesses and startups. I manage SMEs and startups that are pre-seed to Series A in my portfolio. And there are quite a number of startups that when they come in, they're trying to bootstrap and they're trying to figure things out. And for some reason or the other, I'm unable to enable them in a market because that market has a different regulation that is different from where they're coming from. Sometimes I have to be the one to go and stand in for them with regulators to explain what they're doing. And all of that, becomes a little more easier when there is a uniformed set of procedures that is expected when it comes to capital requirements, audits, and the breaking of infrastructure silos. So, it's scale at speed. It's really about integration and consolidation right now. You said it at the start. We've been shouting Africa is rising. Now we've risen. What's the next step is to consolidate and be able to show that it's possible. I feel that if the Rwanda, Kenya, Ghana, passporting relationship works well and we can show the returns, then you see other countries also sign up. You see the Central Bank of Nigeria sign up. You'll see the West African, the Francophone West African League, WEMU, also signing. You see most of these countries, even the SARB, will begin to think about how to connect the Southern African space. Because today, I can tell you, we have Southern African business, we have Mozambique, we have South Africa, but it's two different things. I've been on my Mozambique license for a while now. If there was a passporting situation with the SARB and Southern African countries, the South African Reserve Bank is one of the most mature, systems. If I already have been licensed as a PSP there, then it would have made the opening of other South African countries easier to me. So those are the things that we're looking forward to. I think right now is just let's execute it. Let's see what it can look like so that we can build confidence in other regulators and then confidence in the ecosystem, telling for investors that it's possible.
Tanya, before we go into our last words, Afrique has also made some big milestones this year, launched some very big partnerships between the last quarter and this quarter, in partnership with MTN, in partnership with PAPS, and a lot of pilots are currently running. You recently moved to the SADC region, one of the biggest to crack when it comes to financial services, especially South Africa. Every financial services industry that did not start in South Africa, or financial services business that did not start in South Africa, aims to get into South Africa as a big milestone. And it is a very hard nut to crack. We have heard news that South Africa is about to join this whole passport licensing program. What does this mean for you in that region, and what are you already seeing as businesses start to prepare and in anticipation of the launch of this program?
Thank you so much, Foster. I think Bolanle's wish list and my wish list are very similar. When you think about the SARB, it is one of the most, I would say, mature reserve banks, and it has very mature frameworks as well. So I think for us, hearing news that they are thinking about how to support and join this kind of initiative is quite exciting. And also just to echo what Bonanle mentioned about like Southern African markets. Something that I've learned, just having focused on those particular countries over the past 6 months, is that there's a lot of nuances. They also look towards South Africa a lot in terms of being a guiding principle, in terms of, benchmarking, especially around reporting, data. And I think that's also the beauty about the passport licensing concept, right? It's creating an opportunity for many countries that might not be as mature as South Africa or Kenya or Rwanda to actually understand what the playing field looks like. What do I need to improve locally or nationally in order to meet international standards or like more mature standards, I would say. And I think that's actually going to be a huge benefit for the whole continent. And not only from a central bank perspective in terms of shared lessons and nuances, but also for fintechs, right? Because like you said, a lot of fintechs that work and operate in South Africa or manage to get into South Africa, it is assumed that you have very robust compliance, due diligence, reporting, automation of reconciliation and settlement. And so those are the kinds of things that I know even Giselle looks for in terms of the fintech that he invests in, because you want to know that if I invest a certain amount of money in this fintech, do they have the systems that are going to be able to support scale and also to be able to grow, over the next 5-10 years moving forward. So that's something I've definitely learned. I think one of the things that that in terms of signaling that is exciting for me is not even necessarily that we have, because it's quite restricted right now in terms of the countries that are part of the pilot. But I think what I've noticed is that there's a bit of like soft influence, whereby even if countries are not necessarily being fully onboarded, let's say in partnership with Rwanda or with Ghana or with PAPS, there's a domino effect that's taking place where people don't want to be left behind. And I think when you look at the vast licenses and how that is scaling very quickly, it's actually as a result of the concept of passport licensing. You've got countries, I was in a meeting with someone from the central bank in Zambia in January. They're already looking at, putting a VASP license through. And this is really just kind of piggybacking off of what's happened in Kenya recently. Obviously, Nigeria being such a large market, when that also became legal and there was certain frameworks, it kind of signaled to the whole continent that, if we're not part of this, we're losing out. And so now you're just finding people who are not necessarily open to vast, like virtual assets or anything of the sorts. They're kind of being forced to, even though they're not necessarily part of the official partnerships. The only thing that I would say that is a little bit, to John's point about caution, is I think there needs to be hand-holding for other key stakeholders in the environment, in the ecosystem, that also look to those same licenses. So in this case, mobile network operators or mobile money operators, they need to also understand that, okay, we have this passport framework. What does this mean when we onboard new partners? Because I think there might be a bit of a disconnect in terms of this MOU that is existing between different markets, but how does that actually trickle down to some of the other actors where they do need certain boxes to be ticked? And do they also have an understanding of who are the actual, exactly. And that for me is just something that we need to work together as industry players and leaders, just to kind of make sure that, we're walking this journey together and we're not leaving anybody behind.
While you still have the mic, Tanya, your last words as we wrap up.
So I think for me, again, excited. I think there's a lot of opportunity. The fintechs, the clients that we normally onboard onto our hub are definitely clear beneficiaries in terms of the licensing concept. But again, just echoing my point that I'd made before, I think the impact is going to be determined by how we can walk the journey with all the different stakeholders. And that's where we'll actually have real pilots. We can actually, really map the impact of that licensing concept, and then be able to have some success stories that will allow us to scale beyond the countries that are already part of the project.
Thank you very, very much, Tanya. Bolanle.
My last words to the regulators. I know that they listen to African Fintech Festival. Like I already said, thank you very
Africa
much for
Fintech Summit.
Africa Fintech Summit, sorry.
Yeah.
The first is later on, the bigger one. Well, thanks to the regulators. We truly appreciate them and the speed with which they are, trying to learn these things and get on board with what is happening. But the truth is, one license in a well-regulated jurisdiction being accepted in another isn't just convenience. So it's not like they're doing the fintechs a favor. It's not convenience. It's actually a competitive necessity for our continent right now. Jasel is here. When you have a startup founder in any part of Africa, he isn't just competing for funds to come into his business in Africa. He's competing with thousands of other fintechs across Europe, across Latin America, across the US, where there are more uniformed interoperable systems. And so the earlier, our regulators help us with speeding these things up, executing it in particular, not just the news of saying we'll do this, but we've done this, executing it. It's actually going to be a competitive edge for fintechs and for tech companies across Africa. It's going to put us in a place where we can stand toe to toe with many other fintechs across the world. And then it begins to change the narrative around, not just looking for IPOs in NASDAQ or in the US, but we begin to look at local markets, capital markets, and what is possible, because our continent will be matured for that. So regulators, we're trusting in your innovation and in your commitment to us. But yeah, that's my last word. Thank you.
Licensing on Ferrari speed. John and then Giselle.
Yeah, thanks, Foster. So I think from sitting on the operator end, I think my message would obviously to myself as an operator is remaining flexible and building very compliant or taking very compliant approach to this exciting development. On the regulator side is really asking that we become a bit more predictive and not reactive to the realities of building in Africa, and asking for operator feedback when these policies are being formulated, because that's what would herald continuity in policy and a little bit more stability, because it's of no use to build what doesn't offer value to me, right? So things around policy clarity, because it's announced, but what are the intricate details of it, right? And then to investors is obviously understanding the complexities of building in Africa. You know, Jaziel deals with these things every day, understanding and appreciating that it is quite expensive to be compliant, and sometimes you can't really manage these timelines. But that's my final word, and thank you for
Thank you very much. Giselle?
Yes, I think everyone has said many great things. And for me, just two main things to keep in mind. One is that, as always, this is an exciting potential policy, and to Bolanle's point, we're looking forward to the execution, because that could really open a lot of doors, especially in connecting our 53 different individual markets into a more unified market. And the second thing is what John said earlier, which I think is something that as an investor, I'm always trying to remind my founders on, is that everything that you see comes with a cost and operations, right? Moving to a new market is tricky. You have to understand how to sell in that market, how people like to see products in the market. Something as simple as we've seen, even just providing a loan product in Nigeria, the way it's framed versus the way it's framed in Kenya, where they're a bit more familiar with loans through their SACCOs, is entirely different, right? And so being able to understand the operational complexity that will still come up and we cannot be wished away by this policy will be critical. And the best founders are the ones that kind of walk the line between the regulatory flexibility and the operational complexity. And those kind of founders are the ones that we are always excited to back.
Thank you very, very much, ladies and gentlemen, for being generous with sharing all this information and your thoughts around what is happening on the continent. This conversation is very, very critical at this time, and more importantly for the audience listening and to drive the narrative globally. Again, the Africa Fintech Summit this year's theme is focused on powering the world from Africa, and the demographics and trend have shown clearly. We would be in Kigali in November on the 16th to the 18th and at the Kigali International Convention Center. And we would love to have each and every one of you physically participating. Giselle, last year you did not show up. This year, I want to make sure you are there in person. We would also be launching the Africa Fintech Awards portal today. And so nominations will be open for companies who are intending to make submissions. We have over 30-something award categories. So make sure you find one that fits you as a talent and one that fits your organization. And you potentially could be the one receiving an award in Kigali in November. So thank you all. We will be moving quickly into the pitch competition session soon. And before that, we would love you to stay with us as we play a few of these buffer videos, to shed light on what our partners are doing. After that, we have about 12 companies pitching today, and it is going to be a very lovely session. So do not leave us yet. Stay tuned, and we'll be back with more.
Welcome to Tech Decoded, a podcast where we're decoding Rwanda's digital transformation today. And we'll be spilling all the tea about technology, innovation, and the future, and how technology is changing everything. And I mean everything. Drones saving lives? Check. AI making art? Check. Smart cities that feel like sci-fi? Double check. We're talking to the coolest innovators, the biggest dreamers, and the people who are literally building the future. And guess what? They're telling us everything. So, whether you're a tech nerd, a creative soul, or someone who's just like, wait, how does that work exactly? This podcast is for you. If this sounds like your type of podcast, subscribe right now. Do not let it pass you by, because technology is everywhere all around us, and I want us to geek out together in a fun way while understanding what technology is all about. So stick around and let's decode Rwanda's digital transformation one episode at a time. This podcast is brought to you by the Ministry of ICT and Innovation in partnership with GIZ and the Digital Transformation Center Rwanda.
See the sunrise in the morning glow. People hustling, moving to and fro. Money flies with the speed of light. From a smartphone into the night. From Lagos to Accra, Nairobi, Cape Town. Mobile money future, we wear the crown. It's time for Africa rising high. Make money in fintech. See the sunrise in the morning glow. People hustling, moving to and fro. Money flies with the speed of light. From a smartphone into the night. From Lagos to Accra, Nairobi, Cape Town. Mobile money future, we wear the crown. It's time for Africa rising high. Make money in fintech. See the sunrise in the morning glow. People hustling, moving to and fro. Money flies with the speed of light. From a smartphone into the night. From Lagos to Accra, Nairobi, Cape Town. Mobile money future, we wear the crown. It's time for Africa rising high. Make money in fintech. See the sunrise in the morning glow. People hustling, moving to and fro. Money flies with the speed of light. From a smartphone into the night. From Lagos to Accra, Nairobi, Cape Town. Mobile money future, we wear the crown. It's time for Africa rising high. Make money in fintech. See the sunrise in the morning glow. People hustling, moving to and fro. Money flies with the speed of light. From a smartphone into the night. From Lagos to Accra, Nairobi.
Good morning, everybody. Good morning, good afternoon, and depending where you are, just bear with us for a few seconds as we just organizing all the logistics to make sure that everyone is actually on board, to kick off these wonderful pitch competitions. Very exciting moment, and thanks for your patience and wonderfully thanks for joining us. Just bear with us for a minute. Thank you.
Hi, my name is Kingsley Madden, and I am the CEO at Expedia. After living in over 15 nations, my family and I decided to immigrate to North America. On arrival, we were essentially stranded. Everywhere we turned, we were asked to provide credit history. We couldn't even rent a car, we couldn't rent a house, we couldn't even get a cell phone. It was frustrating. But I wasn't alone. In North America alone, there are over 100 million people who are considered credit invincible, and these people are grossly underbanked and grossly underserved. But it's even getting worse. Immigration to North America is at an all-time high, driven by regional wars and climate change. So I decided to do something about it. Allow me to introduce Expedia, the first Google-backed global money app that allows users to get a bank account without even visiting a bank branch. They can get a card for their online or in-store transactions. They can pay their rent and bills and even send or receive money internationally. And then it gets more interesting. As they do all of this, they are able to establish and build credit with everyday banking transaction. Little wonder then that our app has been downloaded over 10,000 times and we're experiencing a 60% surge in user growth. We have experienced over 2,000% growth in transaction volume and processed over $20 million already and counting. With over 500 5-star ratings, our users are just raving about us. Given our growth rate, we are projected to exceed $10 million in a few years in revenue because our acquisition and revenue are just growing. And this is because we have built the perfect solution for a huge 500 billion market that is largely untapped and growing. Unlike others, our solution allows our users and their businesses at the same time with options that enable them to build credit. Credit building for businesses is set to revolutionize the industry. We have an all-star team with a combined enterprise experience of over 200 years that has been further amplified by mainstream media. Expedia has been featured across several reputable media.
Hello, good morning, everyone, and welcome to the Africa Fintech Summit DC 2026 New Venture Pitch Competitions. And my name is Ibrahim Okuruma, and it is a real honor to serve you this afternoon, this morning, and today as your moderator for these exciting sessions. I am a digital transformation strategist and founder of Afro Innovations, and my work sits at the intersections of technology, policy, and economic development across Africa and the United States. And today, it is not about me. It is about, it is about more than just pitches. Competition like this matter because they give bold founders like you, many of you, a platform to be seen and challenge, encourage, and connected, to investors, mentors, and strategic partners who can help turn, promising ideas into, scalable venture. They remind us that in many times that innovation grows when talent is given visibility and opportunity. That impact is real. Africa Fintech Summit related pitch competition alumni have collectively raised more than 600 million since 2017, just to give you a little context. And globally, pitch stage momentum has translated into major funding outcomes, including Smart Text, a Web Summit pitch winner that later, raised a 24.7 million in Serie A. Before we begin, allow me just to recognize a few people. Thank you, an outstanding thank you to the support team for making this competition possible. First, our platform and streaming manager, Micus, and I'm sure you came in contact with him in many occasions, and he's overseeing really the streaming, the audiovisual, flow and media presentations for this competition, while also ensuring technical and logistic support, throughout the session together with the AV crew. We also want to thank Gabriel based in Accra, and who has been served as the main focal point for these pitch competitions, and is supporting, coordination around the participant. And of course, now, the work beyond the scene is essential, and we are grateful, for dedications. And of course, the judges panel, support roles, startup list, and competition structure reflected in today's program as really consistent with the event material as we share. And thank you again for the support team. And also, it is now my pleasure to introduce our distinguished panel of judges, an exceptional group of leaders, an expert drawn from venture capital, public innovations, development finance, angels, in investor and entrepreneurship. These are individuals who will be listening closely, asking thoughtful questions, and helping identify the founders and ideas with the strongest potential for scale impact. And please join me in welcoming Margaret Ntambi, the managing partner at Red Brit VC and Velocity Africa Syndicate, Victoria Olaide Adesemia, founder and managing partner of VOA Venture Partners, Matthew Davis, co-founder and co-CEO and chief investment officer at Renew Capital. Tamara Zaidan, I had a pleasure, by the way, meeting her a couple times in our sessions in many occasions here in DC, Director of Innovations at DC government, and Mindful Food Investment Officer for finance inclusion and digital finance at IFC and World Bank Group. Also, we have with us Isaac Ewa Lefo, who's an angel investor with African Business Angel Network, and Devin, who's also a founder and chief marketing officer at Savoir Faire. And of course, our own Foster Awinti, the chairman of the panel today of judges, who will be overseeing all the behind the scene voting process. He's our own at the AFTS US and also AFTS Ghana partnership manager. We thank each one of them for bringing their time, expertise, and leadership to these competitions. Now, allow me to introduce you our first company. Please join me in welcoming Bloom Finance, operating across the United States, Nigeria, and Kenya. Bloom Finance is building brokerage infrastructure and wealth management tool that allow fintech and financial institutions to embed investing into their product through a single API. This is really a powerful step toward expanding access to wealth building infrastructure. And without further notice, and please welcome Ariel Lishman. Ariel Wilson, you have the floor. And just as a quick reminder, you will have 3 minutes, which will be time for your doing your presentations. In 2-minute points, you will be reminded. And the 3 minutes, depending on where you are, I will stop and allow the judges to ask questions.
Thank you, everyone, and Ibrahima specifically. So I'm actually standing in for Ariel. My name is Dami. Ariel is actually attending another conference right now in London. And I'm the Chief Investment Officer at Bloom Finance. And I'm here to speak to you about the massive gap in global finance. So Africans, both on the continent and in the diaspora, lack access to wealth management solutions that actually include African capital markets. So for example, if you're in the diaspora here in the US or in the UK, your investing tools don't give you access to African opportunities. And if you're in Africa, on the continent itself, your access to wealth management is extremely limited, which is often kind of reserved for the ultra wealthy. So for fintechs trying to solve this problem, they take on average about 12 months and about $150,000 just to get started on solving this problem. So the result is you have limited access for users and high barriers for innovators. At Bloom Finance, we are solving this with a single platform, which is an AI-powered wealth management and brokerage as a service. We enable fintechs, banks, and financial institutions to launch global investing products, including African capital markets, in days and not years. Our platform provides embedded brokerage infrastructure, an AI-driven wealth management solution, access to multiple asset classes, equities, fixed income, crypto, and private markets. And we have a built-in compliance SEC-registered investment advisor layer with that. So in a nutshell, you think of us as Stripe for global investing. It is built for Africa and emerging markets. We operate a B2B2C model, powering remittance apps, neobanks, cross-border fintech platforms. And our revenue model includes a platform and onboarding fee. We have transaction and FX fees, and we have management fees for asset under management. So thinking about the
given. Hey, Demi, excuse me for interrupting. Can you present your screen, your presentation, so everybody can see? And at the end, make sure that everybody else to get ready for to share your screen, so the judges can see some data and have a better sense of what you are communicating. And because I stop you, and I will add give you extra time, just to move forward. Okay.
All right. Sorry.
All right.
I'm trying to load the presentation now.
Okay. There is a button right below the main screen called present.
It's processing.
It's loading.
It's loading. Yes.
Okay. Thanks, guys, for your patience and just technical issue. Usually, the first time, the first presenter usually get get more time because of some of the technical issue that we need to fix. Reload.
See the sunrise in the morning glow. People hustling, moving to and fro. Money flies with the speed of light. From a smartphone into the night. From Lagos to Accra, Nairobi, Cape Town. Mobile money future, we wear the crown. It's time for Africa rising high. Make money in fintech. See the sunrise in the morning glow. People hustling, moving to and fro. Money flies with the speed of light. From a smartphone into the night. From Lagos to Accra, Nairobi, Cape Town. Mobile money future, we wear the crown. It's time for Africa.
Okay, Daniel, and thanks everybody for the patience. And Daniel, I think because of that, we'll start presenting, and we're going to give you the leverage and start all of. Okay.
Thank you. All right. Thanks, everyone. So my name is Dami, and I'm a co-founder at Bloom Finance. Today, I want to talk to you about a massive gap in global finance. Africans both on the continent and in the diaspora lack access to wealth management solutions that actually include African capital markets. So if you're in the diaspora, your investing tools don't give you access to African opportunities. And those on the continent itself lack access to wealth management solutions, which is often the preserve of the ultra-wealthy. For fintechs trying to launch access, it takes on average about 12 months and 150 grand to just get started to try to solve this problem. So you have limited access for users and the high barriers for innovators. At Bloom Finance, we are solving this with a single platform, which is an AI-powered wealth management solution plus brokerage as a service. So we enable fintechs, banks, and financial institutions to launch investing products in a matter of days rather than waiting years. Our platform provides embedded brokerage infrastructure, AI-driven wealth management, access to multiple asset classes, equities, fixed income, crypto, and private markets, and is SEC-registered investment advisor layer. So ultimately, we want you to think of us as the Stripe for global investing, which is built for Africa and the emerging markets. We operate a B2B2C business model, powering remittance apps, neobanks, and cross-border fintech platforms. So the opportunity here presents itself as a 3 billion annual recurring revenue total addressable market estimate. And our revenue model includes charging onboarding fee and platform fee. We would also charge transaction fees and FX conversion fees and a management fee for asset under management. Let me see. So our go-to-market basically is to start with remittance apps, people that often use cross-border payment solutions to invest in the global south capital markets. And we are not just currently an idea, we have an MVP currently live with pilot users. We have some broker-dealer agreements already signed, especially one with that gives us access to the Nigerian capital market. And we are led by a team. Let me show what the composition of the team is. So we are led by a team that has deep experience in fintech infrastructure, capital markets, and AI. Our vision ultimately is to simply be the default infrastructure layer for global investing across emerging markets, starting with Africa and expanding across the global south. We are currently raising $2 million on a SAFE to secure key licenses to scale our distributions and to onboard our first 25 financial institutions and 1 million users. So if you are building, investing, or partnering in this space, we would really like to talk to you. Thank you.
Good timing. Actually, you came in like 2 seconds earlier, which is good. And just moving into the next one, please join me in welcoming AgroSys from Tanzania. Just as a quick reference, AgroSys is building a digital agri. Sorry. I think we have 2 minutes for question and answer. Allow me to, I wanted to jump very quickly, but Dami, if you're ready for the questions, and
Yes, I am. I thought I was 2 minutes for
all right.
Q&A.
Great,
Yes.
good job. All right, thank you.
Yep. Oh, we can't hear you. I think someone on the panel is speaking.
Can you hear?
Oh, yes. I think this sound came through now.
It came through. Okay. Maybe should we restart the question? No. Yeah.
Oh, no. I still cannot hear the lady speaking with the microphone.
Okay. Okay, so Demi, what we'll do, because there is a technical issue there, we will come back to you.
I see.
For the question, right? So allow you to, to get ready for that. So what we're going to do, we're going to move on to AgroAssist from Tanzania. As I was saying, AgroAssist is building a digital agri-commodity marketplace that really help the buyers, suppliers, and logistic providers build, verify, and execute across border trade in one single platform. It is the kind of solutions, we were actually investigating a little bit about what they do. that can improve probably like transparency, trust, and efficiency across agricultural trade. And please welcome Aston Stephen. Aston Stephen, whenever you're ready,
Thank
share
you
your
very much. Thank you
presentation.
very much.
All right.
Good evening, everyone. My name is Aston, and I'm the CEO of Agroasis. It's a short form for Agricultural Operations and Systems. So I'll go ahead and share the screen for the presentation. Okay, I think everyone can see the presentation, right? Okay, so what Agroasis is a trade execution and programmable infrastructure for cross-border commodity trade, especially in the agricultural sectors. So think about it like this. All the products we use in your daily activities, for instance, coffee or the grain in your bread, they all have to come from a farm or a field, right? But the whole process of that is very complicated since there are a lot of web of contracts, logistics, and of course, payment issues, right? And naturally, we have two parties, which are the exporters and the buyers who buy those particular agricultural commodities. And so the problem here comes to the trust dilemma, which is the biggest problem in the agricultural exportation market. The problem is that the sellers naturally want to get paid before their goods are shipped, right? And at the same time, the buyers are also naturally want to get their goods and ensure that they are okay before they send the money to the supplier. Now, this is a problem. I actually call it like a trade standoff, where two sides of the market don't trust each other. So that trade standoff alone brings a very big misalignment problems. For instance, payment delays, the lot of terms and fees, constant back and forth of risk of these payments. So we decided to come with a solution, which is Agroasis. So how do we solve a problem like that? Okay, so we decided to build a bridge, right? A single source of truth for the entire trade to get something like a unified connecting everyone in a trade. Let's say, for instance, a dashboard where both suppliers and buyers and also shippers can see and act at the same information at the same exact time, right? For instance, we connect a legal contract to maybe a real world event like shipping leaving the port and connect both of those to the financial payment. So it becomes like a structure completely auditable workflow. So the tech behind this is something that I call programmable settlements. So what is a programmable settlement? It's a system where funds are automatically released by a secure program, but only when verifiable events happen. So imagine something like putting your money in a digital vault, right? Which is Agroasis, okay? And it's guarded by this robot on which it only unlocks these funds when certain conditions are actually met on the trade. Let's say, for instance, when a trade meets maybe quality inspections, logistics have arrived, then the system will automatically release these payments to the supplier. That's what we call programmable settlements. So with that, we come to the how big is this market? So the market is very huge, and we are about to address a market of 100 billion throughout the world, which is ready to be digitalized. But we only begin with the initial beachhead of the East African market, especially the export corridors in that region. So we are targeting a $3.5 billion in the East African export business market. So on the traction and validation, currently we are very early stage. So we are actually very pre-revenue, but we expect to initially monetize after the launch with a realistic target of about 50K monthly recurring revenue within the first 6 to 12 months. But also we have also gathered more than 60 plus enterprise buyers and suppliers who are all already willingly to use the platform the moment it launches, right? Also, we have partnered with various partners in the ecosystem for the compliance, logistic, and finance, like the African Global Logistic, Marex, Samsung for compliance, Base for finance, and Bridge for the verifications. Our business model is simple. Is very simple, right? We only charge 1.5% for every guaranteed trade executed within the platform. But also we have
Hello, Aston.
subscription. Yes.
Yeah, Aston, you're out of time. Just be mindful for everybody to be mindful for your time. We have only 3 minutes, so just think about what you're going to say and how you're going to say it to make sure that we keep moving very fast and allow at this time some judges to ask you questions so we can move forward. Okay, make sure your presentation is saved so we can share with the judges during the deliberation as well. Okay.
Okay. Yes.
Okay. Thank you. Now the judges can ask questions.
Yes, I can hear you. Yes, I can hear you.
There is an echo.
Okay.
There is an echo. I can't hear you properly.
Also, they need to go on mute. Can you hear me?
Yes.
No, don't.
Yes.
Is it better now?
Yeah, a bit.
There's a lot. Anyway, I'm going to ask my question. I think we are a few seconds behind in terms of the streaming. So theoretically, I think your solution looks very flawless. The problem you've identified is very real. Where the world is moving towards also seems like promising in terms of the solution you've developed. But I see from an implementation standpoint, I see very, very big infrastructure and regulatory hurdles you start to face. From where you sit, is this a solution you have developed already? You said you are pre-revenue, but do you have the product ready? Is there a customer piloting this? And what have you seen as potential risks that may limit your ability to grow and get the adoption you're looking for?
Okay, thank you very much. Okay, so the biggest problem so far we have faced. First of all, I'll start with the regulatory issues. So we have structured the platform in a way that most key regulated areas are managed by partners. For instance, if you saw on the slide that, for instance, for KYC, KYB, we have partners for that. For monetary issues, we have partners for that. So the platform is strictly there as an orchestration layer, information layer. So we provide layers with partners included within the platform so that we may not face a lot of regulatory hurdles within different regions, right? So for instance, in terms of finance, in terms of moving the money, since settlements will be within the platform, the movement of money is organized by regulatory layers with partners that are already there, like the base and the bridge XYZ, okay? So the biggest issues for us is mostly not distribution, since we already have enterprise B2B partners that are willing to implement the platform and use it. So the biggest issue there is that the readiness of the users to actually stop the traditional expectation systems to jump on the digital expectation system that we are going to offer, because we are solving the contract issues, we are solving the regulatory issues in logistics. So that means that we are cutting the time that exportation takes by nearly a half within a single platform. I'm sorry, I think I can't hear you.
It's on to the other judges. It's around. How are you solving for FX for inter-country trades? And yeah, I think I'll leave the rest.
So on the FX and inter-country movement of funds, as I said that we created a commercial trade settlement layer, which is the programmable settlements, right? The whole settlement layer, we are the one who have created it, and it's actually open source. It's called CodeCell. That's also a standalone product within Agroasis. This settlement layer called CodeCell is responsible for the movement of funds from maybe one region to another without any regulatory issues, since the movement of funds is actually non-custodial in nature. I think you're muted.
Yeah, you guys can hear me?
Yeah.
Yeah, and thank you, Aston. I think this time we're going back to Bloom Finance. Just to give you a little context, just for this time for the for the judges to ask the questions, to come back to the issue that we're having. And give you a little context. Blue Finance, is operating across the United States, Nigeria, and Kenya. And also, they are building a brokerage infrastructure and wealth management tool that allow finances and fintech and financial institutions to embed investing into their product through a single API. So now I leave the floor to the judges to be able to ask the question. Yeah, yeah. So you go back to your pitch, give you that chance to go back again.
Oh, all right then. Thanks, everyone. My name is Dami, and I'm a co-founder at Bloom Finance. Today, I want to talk to you about a massive gap in global finance. Africans, both on the continent and in the diaspora, lack access to wealth management solutions that provide access to the African capital markets. So if you're in the diaspora, you're investing in tools like the Robin Hoods or the Fidelity and the Charles Schwab. They rarely give you access to African opportunities. And if you are in Africa, access to wealth management is often the preserve of the ultra wealthy. So for fintechs trying to address this problem, it takes an average of about 12 months and 150 grand just to launch an investing product. So Bloom is a single platform that provides market access to the African capital markets, on top of which you have access to wealth management solutions. So the platform basically is an AI-powered wealth management solution plus a brokerage as a service. And we enable fintechs, banks, and financial institutions to launch global investing products in days, not years. The platform includes an embedded brokerage infrastructure, AI-driven wealth management, access to multiple asset classes, equities, fixed income, crypto, and private markets, and an SEC-registered investment advisor layer. So in a nutshell, I want us to think of us as a stripe for global investing, which is built for Africa and the emerging markets. The market opportunity here, we estimate to be about $3 billion in average annual recurring revenues for the total addressable market. And we operate a B2B2C business model that powers remittance apps, neobanks, and cross-border fintech platforms. Our revenue model includes platform and onboarding fees for our direct business clients, and transaction and FX fees to the retail end users, as well as a management fee on assets under management. And at this point, we are not just an idea. We actually have a MVP product, which is live with pilot users. We've secured broker-dealer relationships, especially with some back home in Nigeria, with access to the Nigerian capital market. And we are led by a team, here's the founding team. We are led by a team that has deep experience in fintech infrastructure, capital markets, and AI. So what makes us different is that while most competitors focus only on the US markets or developer APIs, Bloom is the only platform that combines AI wealth management, access to multiple different asset classes, equities, fixed income, and the likes, and a global market access. So it's not just one country here. We're talking about Nigeria, Rwanda, Kenya, and from there, start with Africa and then expand to the rest of the global south, including Latin America. So at this point,
Okay,
we
yeah. Okay, Danny, I think the time is up. Allow us to, to go faster, and we're
okay.
going to leave, the floor to the judges to ask you some questions. Okay,
All right. Thanks, Brian.
thank you.
Just out of curiosity, where are you seeing more demand? Is it from Africans wanting to invest in U.S. securities or the other way around?
Thanks so much for that question. It's both ways, really. But to answer the question directly, I think it's more Africans here trying to invest back home, because for those back home trying to invest in the US, there are a couple of solutions in Nigeria, for example, like Bamboo, that gives them access to US equity markets. But diaspora and Africans here, Nigerians, Ghanaians, especially we are talking about the mass affluent mostly as our initial target market, like doctors, engineers here in Houston or in Atlanta, wherever, that want to access capital markets in Nigeria, Johannesburg, South Africa, or Nairobi, Kenya. Right now, they usually use their home-based solutions using their local currencies. But we are trying to consolidate all that into a single platform where they could even right here invest in with US dollars in those equity markets back home. Did you get my answer?
Dami, Victoria, VOA Venture Partners. You mentioned the buzzword AI, so I'm going to need you to expand a little bit more. How exactly does that fit in?
Okay, so like you said, we are in this age of the AI revolution here. So while many retail investors typically are like day traders or they just buy individual stocks, we are trying to create an agentic AI interface that gives them recommendations as to what securities might be able to fit their financial goals. So in other words, they get recommendations about different asset classes that might be desirable for them based on what they want to achieve in the market.
Danny, this is Minghui from FC.
Yep.
So we focus a lot on promoting financial inclusion by investing fintechs. So I have a question, like, could you introduce a bit more about how you provide the solutions for remittance and what kind of competitive advantage for you compared to other competitors? Thank you.
Okay, so the main moat for the business ultimately is the APIs which we have built. And so it's like an infrastructure layer that allows them to add product features, in this case, an investing product on their platform, on their existing platform to their end users. The API actually gives them direct access to those various capital markets that we have partnerships with back home, mostly right now, Nairobi, Kenya, and Lagos, Nigeria.
Thank you, judges, for the questions. And I think at this point, we're going to move on to Bylight, our next startup from South Africa. And Bylight connect individual families and businesses with vetted helpers from childcare, errand, and business support. It is a purpose-driven platform as we look into it. That really combine practical services delivery with dignity, empowerment, and community impact. Please welcome Libby Bigawaki.
Hello, can you hear me? Sorry. Hello? Can you guys hear me? Even if
Yes,
you just
we can
put it
hear
in the
you.
chat. Sorry.
Yeah, we can hear you. Yes.
Okay.
Yeah.
Okay, breathe. Alrighty. Can you see my presentation? Okay, there we go. Okay, cool. So today I'm going to be discussing my company. We go by Bylight. Bylight is a youth powered service platform, connecting families and businesses with vetted helpers all across South Africa. We currently operate across these 8 service categories. Majority of our work comes from the childcare and the expat/international guest services side. So we believe in dignity by design. We are currently a group of 7 task doers, which are all first aid certified. And, well, sorry, I can't see anymore my slides. Okay, yes. So we believe in human oversight and trust, and we optimize for dignity and not money. So what we found to be the core problem is that access to income through fast and accessible channels is hard to come by in South Africa. So informal work is often underpaid, it's hard to access. It comes with unsafe work environments and often sometimes like no structure or trust. And this work is often also invisible to financial systems. The reality is that the work exists, people exist, but access does not. So the market opportunity in South Africa is that currently over 40% of young people are unable to find work. And at the same time, households and small businesses need flexible, trustworthy help with everyday tasks. Existing platforms, in my opinion, often come across as cold, niche, or impersonal, and they don't reflect our community's values and potential. In South Africa, the informal gig economy is valued at over 700 million, serving as a critical driver of survival, income, and growth. This sector includes approximately 2.4 million people, representing roughly 7.9% of the labor force. And the participation is projected to grow by over 10%. I want to share a story about the 3 ladies that basically were the starting block of this company. They are 3 friends of mine, Melusi, Pearl, and Stacy. Last year, most of them found themselves in a place where they did not have any stable income. Melusi got retrenched a week after buying a car. Pearl had to leave her job due to being overworked and underpaid. And, apologies, I wasn't... Sorry. Melusi and Pearl. And they found themselves in a place of not being able to get a job very quickly in the current market conditions. And I, if you go to the next slide, was already exposed to the world of being like informal work. So being a freelancer, doing a lot of babysitting work, and just a bunch of different things that people would end up asking me for, voiceover artists for radio, and like a bunch of freelance stuff. So I decided to not only create a side hustle that brings myself income, but also to bring them into that. So last year, collectively, those 3 ladies made over 150,000 Rand through doing different tasks, and I myself made over 240,000 freelancing for UK companies, US companies, consulting, doing babysitting, just a vast range of things. And just the above just proves that the income does exist. People do have skills, demand is there, but what's missing is access, structure, and trust. And that is where ByLight bridges the gap. We have only been
Thank you, Lacey D. I know you covered most of your slides because you were getting to the conclusion, but we're going to give the chance to the panels, who are the judges, to ask some questions based on what you have presented. Thank you.
Thank you.
Hi, thank you so much. I really enjoyed your pitch and I loved the impact mostly around it and how you're thinking about job creation for your freelancers. I wanted to understand, what does the onboarding process look like for your freelancers today, and how are you thinking about scalability around that as you grow this out and serve a larger customer base?
Thank you so much for your question. So currently, everyone, I know them. So they are my friends. They are people that I've met through work, and they are, some of them don't have jobs, and I've kind of onboarded them from a trust standpoint, and then I kind of give them like a list of things they need to fill in, providing me with their IDs, a criminal background check, and then they need to be first aid certified, and I provide them with a manual. And in future, what I would like it to look like is an app or a website that they can come on to the platform. They can have like a verification process where they can maybe scan their IDs, and that's how like they're checked, and then that would automatically run through a criminal background check. There are many companies that provide such checks in South Africa, and then they would be able to choose the service categories in which they would like to work in, and then once they are they've set up their profile, clients would then be able to review them, and if they have 1 or 2 bad reviews, then we know that they need to be kicked out of the system and not allowed to participate because they're not meeting the standard. So I hope that makes sense.
Oh, I can ask a question. Can I ask the opposite question? So I want to actually know how you're going about finding the jobs to put onto the platform and how you make
Yes.
that scalable.
Yes. So currently, I myself, I've been in the babysitting space here in in Pretoria and South Africa as large, for a while now. I've put myself out a lot on Facebook groups, lots of community groups, because it's still a thing in South Africa to market through Facebook. So there are a lot of community-based groups. Through those groups, I put out my posters on a weekly basis, put out byline posters, and that is how people are currently contacting us. We do have Google Ads and other platforms, but for the trust factor, people mostly trust those that are recommended within the community group chats and things like that. And then it's just word of mouth there onwards. And because we have such a wide variety of services that we offer, there's always something for somebody to ask us for. So.
Thank you very much, Leslie. I think you had a chance to go through most of your slide, and a great job. And I think next, let's welcome Aldiza Financial Services from Tanzania. Aldiza is trying to transform the student finance through solutions such as emergency loan, device financing, and digital credit tailored to university students. By serving a segment often overlooked by traditional institutions. And Aldiza, as we came to understand, is helping young people stay really on track of, not only academically, but also financially. Please, let's welcome Eli Barik, from Aldiza Finance.
Hello. I hope you're hearing me.
Yep, you're good.
Right?
Yeah, you're good. You can share your screen now.
Okay.
So when you share your screen, then the time is start for you.
Okay, my name is Elbariki David Liza. I'm CEO of Aldiza Financial Services. So Aldiza Financial Services is a youth-led digital microfinance company transforming access to finance to university student and health graduate in Tanzania. Through our application called Chocolate App, Aldiza deliver fast collateral-free emergency loans by working with the banks. So the repayment are automated through digital deduction from student allowance, ensuring almost 100% in repayment. We have 3 products: emergency loan to university student, internet student loan, and device financing, and all these services are available in the application called Chuo Credit App. So in Tanzania, many students face different financial challenges, such as paying rentals and tuition fees, and due they don't have collateral, they fail to have loans in banks and microfinance, and they ended up to street lenders who have high interest percent, up to 40%, and they do require some collateral like phones or laptop for this student to have access of the loans. So Us as Eldiza, we provide fast collateral-free digital loans. The disbursement is within an hour via our application called Chuo Credit App, and we do auto repayment by deduction when this student receives those allowances from the government, always by monthly. We also provide laptop and smartphone, as many students face to purchase these devices at once, so they delay access of accessing these devices, and they have disadvantage in digital learning. So through Eldiza, we provide instantly non-upfront payment, flexible installment plan, sometimes two times or 4 times in a year, and we do collect by doing deduction from the account when they receive those allowance from the government. We also prevent dropout by keeping students enrolled in university by paying tuition fees. As many students during admission, most of time peak at October, they fail to pay those tuition fee, and most of them drop out from college or university. So we help them by paying this through control number, and we debit it throughout the year through the allowance that they receive. All these services are available in an application called Chuo Credit App, where any student in Tanzania can register as a university student or medical intern and can access several services such as borrow money, borrow phones, or borrow laptop, and even quizzes. It appears like this. So we have partnership with major bank in Tanzania, such as NMB Bank and CRDB Bank, which are the only one who operate in university marketing. So we do automatic deduction from student account. Repayment is triggered when allowance received by monthly. No collateral, no cash handling. So zero physical follow-up, low default risk. We operate in a market of 800,000 students annually, and we can translate it to 1.3 trillion annually every year. And last year, we disbursed 316 million to more than 2,400 students. Till now, we have already saved more than 400 students, and we have more than 52 agents across Tanzania, operating 23 universities and 12 hospitals in Tanzania through our 2 branches. We have a team of 5 staff, me as CEO, CTO Luangano, Upendo CFO, and 2 chief operation officer.
Thank you, Eli. Thank you, Eli. To time, we have to be strict on the time, right? So we got to leave, give the chance to the panel, the judges to, ask some questions. Okay. Thanks for the presentation.
Can you hear me? Can you hear me?
Yes.
Can you hear me?
Yeah, I can hear you.
Okay. I'm probably just going to ask my questions and then you can attempt to answer them. So what data do you use to qualify a potential student or medical intern in terms of their credit limit and their risk level of paying back? The second thing is you successfully have 100% repayment rate. How have you done that since this is an unsecured loan and it's a high risk category of people you are lending to? What measures do you enforce to make that happen? And do you underwrite the loans yourself, or these financial institutions you work with are the ones who are actually underwriting the loans on your behalf, or you have the liquidity yourself to do that? What will it take to scale from where you are to how much more market opportunities available for you to serve in Tanzania?
Okay. Thank you. In Tanzania, we have 2 banks, major bank, 2 banks which are operating. That is the NMB Bank and CRDB, which are compounding about 62% of the whole country operation. So I have 2 products, intern student and university student. University student always receive bi-monthly allowance from the government through these 2 banks, NMB and CRDB. But how am I processing this risk is that we have 52 agents in Tanzania across 23 universities, where these agents are the one who checking the educational status of the student and the status of allowance from the government. So after checking if the student is continuing with the studies, that's the first checking, and another check is that this student receive allowance from the government. After that, we have 100% assure that after 2 months, this student will receive allowance from the government. It's almost $250 every 2 months. So through our system, we debit it direct through the account that those students receive those allowance. So we have automatic deduction from the student account. And medical intern is almost the same case. When they attended a 1-year practical program in different hospital, we have channel of agent of to more than 12 hospital, where when this student receives those allowance from the government through these 2 banks, we can automatically debit it, and we can have 100% repayment. But we operate through our own capital currently, but we're looking forward to start working with the bank so that we can have a lot of capital to disburse. And we operate in a market of 800,000 university students annually. So every year there is more than 800,000 students annually. Thank you. I hope I have answered all questions.
All right, thank you. I think is there any last question from the judges? Yeah, let's take one last question.
Um, I do have a question. Thank you so much for your presentation. My question is in regards to regulation. Your model sounds a lot like earned wage access here in the US, where employees are able to access their paycheck before they're paid. And so I'm curious to know, is there any regulation around that in Tanzania? And then if you can talk a little bit about your what you charge. If you mentioned that, I missed it, apologies. But there are some scenarios where, at least in the US, if you access these funds immediately, there's a fee. There's a little bit of a higher fee. But if you wait a week or two or a couple of days, I guess 3 days, then that fee goes away. So is that something that you have in your business model? Thank you.
Okay, thank you. In terms of regulation, here in Tanzania, we have Bank of Tanzania, which regulates banks and microfinance. But myself, I'm microfinance, so we have Tier 2 license to operate in whole country. It's here. I hope you can see it. So we have a license from Bank of Tanzania, and also we have another license for operating as a digital lender. So to operate in Tanzania, to lend students, you must have a license and the digital lending license. So I have all 2 ones, but also I'm charging 10% every month. Every month when a student receives take a loan, 10%, and it's almost 4 times in a year.
Thank you. Thank you, Eli. Great presentations. And now we are going to move on to Frimo Pay from Cameroon. Frimo Pay is, I think I'm good. We're good now. Thank you, Eli. If you can wrap up so we can move on. Thank you. From Cameroon, as I've mentioned, please welcome Frimo Pay. Frimo Pay is modernizing and securing the management of tontine through a digital platform for for savings, payment, and lending, which is very common into the rural community. and it is bringing a trusted community finance into more accessible, transparent, and scalable digital model. And please welcome Lillian. Lillian, please.
Hi everyone. Can you hear me?
Hello. Yes. Whenever you're
All
ready,
right.
as soon you start presenting, then the time will start. Okay.
Okay, I'm trying to share my screen.
No problem. And while Lillian is getting ready, and we really appreciate your time and patience for all
Can
these
you see
technical
it?
issues. Not yet.
Yes. What about now?
Now we can see. Reinventing collaborative
All
saving
right.
in Africa. Good.
In Africa.
All right. So
Okay.
you have the floor.
Thank you very much. So, hi everyone. I am Liliane Kemunye. I'm co-founder of FreeMoPay, a solution reinventing collaborative saving in Africa. So I would like to start by sharing a personal story. So when I reached university, I had to start paying my tuition fee by myself. Naturally, I decided to save via a tontine because I've always seen my parents doing that. In fact, across Africa, and especially here in Cameroon, tontine are more than a financial tool, they are part of our culture. People are really used to create saving group to contribute an amount of money and to distribute the whole amount to each one by turn. Everything went well until it was my turn to receive the funds. That time, our treasurer said that he has been robbed and all my savings had disappeared overnight. I was so shocked. I remember that that year I had to redo the exam because I could not pay the tuition fees on time. Who has contributed? Who hasn't contributed? Where is the money? Those questions are really hot questions for all the 20 members across Africa, and this is exactly where Fremo Pays come in. We want to solve a complex problem, how to lend profitably and at scale to a million of youth across Africa. And we think that by using mobile phones and digitizing the benefit of traditional tontine, we actually help to solve that problem. Running a tontine with FreeMoPay is made more transparent and easier because people can contribute from anywhere. They have automatic reports and they receive real-time notification when someone contributes. All that has been packaged into a well-designed and user-friendly mobile app. By this, we are trying to address those 5 sustainable development goals. We are addressing a market of more than 17.7 billion of USD, and we aim to conquer 1% of this market within the next 3 years. In fact, FreeMoPay is actually proving the demand. In 12 months, you have 25,000, more than 25,000 tontine actually running on the app. We have onboarded more than 10,000 users, and we have transited more than 100,000 USD on our platform plus a lot of partners. So FreeMoPay is not just digitizing traditional tontine, we are actually building the future of community saving in Africa. So join us in that revolution. Thank you.
Good, good timing, Lilian. J'espère que tu parles français, n'est-ce pas?
Oui, oui, oui.
Okay,
C'est ma
okay.
première langue.
Toutes mes félicitations. So allow me just to, showcase a little bit my, my French. Good job, and right on time, right on point. And now we're going to give a chance to the panel, to the panel of judges to ask some questions. And allow me just because Lillian is on, she's speaking French, for her French audiences. Permettez-moi aussi de donner un peu la parole au panel de juges. afin qu'ils puissent vous poser des questions. Donc, je suis sûr que il y a en fait la famille et toute une équipe en fait au Cameroun est en train de suivre ça. Et donc, je vais essayer de faire mon mieux pour traduire un peu ce qu'ils disent en français pour les aider. OK? Voilà, let's go.
Hello. Sorry, I had a little internet issue. Can you hear me? Oh, okay. I should share my screen.
This, what you describe is rotational savings, which we see across many communities in Africa. I am from West Africa, and we have Susu, which is very common. So my question for you is, what do you charge this, like tontines, like these groups, and how do you charge them? Like, do you charge them a one-time fee to set up, or do you charge them a recurring fee, monthly? Just talk us through like how you actually make money from these groups.
All right, thank you for the question. So we are actually taking 1% transaction fees on each transaction on the platform. So they create the group for free, but whenever they make transaction, we take 1% commission. I hope you could hear me.
Thank you very much for the presentation. Transacted $100,000. If I did an assumption that if I divide the assumption that each active user has transacted at least once, you're estimating about $4 of transaction between you and between your platform and the user. Is this the case? Can you walk us through your traction one more time to be sure that, like, just to help us understand what's the science around your numbers?
Okay. I don't know why I have some issues. Now they ask me to sign up to share my screen.
Okay. All right. I think at this point, thanks, Lillian. We're going to move now on to Moto Health. Please join me in welcoming Moto Health, operating all the way from Mauritius and the United States. Moto Health is transforming medical transport through a faster, more affordable, tech-enabled platform that connect patients to care through trained drivers and AI-powered dispatching systems. And it is tracking one of healthcare most overlooked access challenges. And please welcome Nombo Evan Kunchu. Nombo, please, you can share your screen and take over.
Thank you very much, Ibrahim. Can you see my screen?
Yes, thank you.
Okay, perfect.
Now you can begin.
Hi, everyone. I'll be presenting for Moto Health. We're making healthcare access faster and more affordable across sub-Saharan Africa. So the problem we're facing is that healthcare is hugely limited. Access to healthcare is hugely limited due to the unavailability of ambulances, and added to that, there's an added cost when it comes to having an ambulance to take you to a health center, where ambulances cost on average $300. And about 90% of patients across sub-Saharan Africa do not have access to this facility to help them access healthcare faster. We realize that hospitals also lose about 20% of their revenue yearly due to low bed turnover ratio, which means people get to spend more time in hospitals because they don't have reliable transport infrastructure to take them to health centers. So the solution we're providing is a mobility infrastructure that helps people with minor emergencies access healthcare a lot faster. We use a network of vetted taxi drivers and first aid trained drivers to be able to offer this service at a very, very low cost, and they can access that directly through our mobile app or through the hospital dashboard integrations. So we're a team of 6 people currently working across this project. And the way it works is quite simple. We provide a total orchestration layer where we connect hospitals, patients, and drivers through a central mobile app or a hospital dashboard where they get to book rides in less than 3 clicks. And the average cost of this rides is about $30, down from about $300, which makes it a lot more affordable for people, especially people in remote areas and semi-rural areas. So the way that works specifically is that we have what we call mobility partners who come on board with vehicles that we vet directly. The vehicles that you can see here are the type of vehicles that we use, and they must meet certain specifications to be able to offer our service. The market is quite big. We are currently launching in Nairobi, which promises about $12.5 million per year in annual revenue if we're able to capture the market that we have mapped so far. And our business model is mainly B2C, where patients can directly subscribe to your ride package, which means, for example, if a patient, and our business model is mainly B2C, where patients can directly subscribe to your ride package, which means, for example, if a patient, and our business model is mainly B2C, where patients can directly subscribe to your ride package. I think I'm having a quick go. Can you hear me? Yeah. Okay, I think there's a technical issue.
Yeah, don't worry. So just apologies for the for the interference, and go back to your slide, and we'll give you just 1 more minute.
Okay, let me take back the slides. Can you see my screen? Okay, what's going on? No.
Yeah, go back. Go ahead. Go ahead. You can go.
Okay, thank you. So I was talking about the business model, which is B2C and B2B. B2C, we sell what we call the motor pass to patients, especially patients with recurrent healthcare needs like convalescent patients, chronic care patients, patients that go for regular checkups or dialysis. You can buy a ride package containing maybe 3 rides, which can enable you to access the health center at any given time with a dedicated driver. And B2B, we enable hospitals to buy into packages that they can dispatch as an add-on to their patients, so that a patient doesn't have to worry about how and when they're going to leave the hospital, or they are going to leave from their home to the hospital. So currently we've signed 3 LOIs with hospitals in Kenya. We've generated about $15,000 during our pilot in Mauritius, about 2,000 rides, and currently we have about 150 patients on our wait list for the motor pass subscriptions, which will be able to give them access to healthcare at a faster rate. So the investment opportunity here is to invest in an orchestration layer that helps people access healthcare a lot faster. And we are raising through grants and direct equity investment. A $250,000 investment will enable us to onboard about 33 hospitals, about 330 drivers, and hit our target of 1 million in AR by the end of the 12th month. And of course, perform about 125,000 rides by the end of the 12th month if we're able to hit these metrics. So we invite people in the mobility space and in the healthcare space to join Moto Health on the mission of transforming and helping people access healthcare a lot faster across sub-Saharan Africa, where access to healthcare is severely limited by high cost of ambulance transfers and low availability of ambulances. Thank you.
Yeah, thank you, Nimbo. Now, time for the jerseys, to ask the questions. And thank you again for the patience, for the technical issue. Thank you, Nimbo. Now, time for the jerseys. Thank you again for the patience.
Thank you so much for the presentation. It's very interesting. I wonder, how are those vehicles? How are those vehicles adjusted to medical needs? And are there any standards? Are those standards verified by hospitals or Ministry of Health? If you could introduce more.
Okay, I think this thing is so.
Hospitals or Ministry of Health. If you could introduce more.
I'm sorry, I am
Give me a
able to
second.
hear you.
Can you
Could
please
you repeat
repeat
your
the
question, please?
questions? I think there was some interference that going on. If you don't mind, thank you.
I'm
Fine. Thank you.
okay. Internet is.
Yeah, would like the judge to repeat the question, please. We had an interference earlier. Yeah, would like the judge to repeat the question, please. We had an interference earlier.
To repeat my question. So how are those vehicles adjusted to medical needs, and how are those standards verified? Are those standards verified by local hospitals and Ministry of Health? Are those standards verified?
Yeah. Thank you for the question.
And Ministry of Health. Are those standards verified?
Can you hear me? I think thank you for the question. Reverberates a lot.
Yeah, you can put me. Nambi, the question was, and how are those vehicles adjusted to users' needs, and how
Yeah.
those vendors are actually verified? That was the question. So
Oh,
trying to summarize it.
yes. Yeah. Thank you so much, Ibrahim. Yeah. So the vehicles are adapted to patients' needs. As you saw on the pictures, they have ramps that enable patients to easily access it. They have seats that you can, mechanical seats that can easily rotate out of the vehicle to take a patient back in without them needing to put physical effort. And of course, there's also like wheelchair accessible vehicles that help people that might have difficulties with walking or standing to be able to get in the vehicles. If you check inside the vehicles, they have straps that are able to strap somebody seated or lying down so that they don't have a lot of movement during the transportation to health centers. And then the way we work with hospitals is that we really want to integrate with the hospitals in a way that whenever a patient is coming, the driver takes their vitals at the pickup point and send it directly into the hospital management system, which will be given by Moto Health, in such a way that a patient doesn't need to do any further check-ins when they get to the hospital. They are directly taken into care because, of course, all the vitals had been sent prior by the driver that is handling or is picking up the patient. Because, of course, all the vitals.
Yeah. And thank you, and thank you for the judges for that clarifying, question. And next, I think we're moving on to Udora Tech, and Udora Tech from Nigeria is building an AI-powered voice technology for Africa financial institutions, helping them really engage clients in local languages, improving operations, trying to reduce cost, and most importantly, to remember that future financial services must also, be more accessible, local, and more inclusive. And please welcome Sapphire. Sapphire, will leave you the stage to present your solution.
My name is Sapphire, and I'm very excited to tell you guys about Udara. I believe the best way to start this conversation is to tell ourselves the truth. Financial inclusion is the biggest lie on earth, and it's one we have been thinking and eating for a very long time. There's over 1,000 fintech platforms in Nigeria and Africa, and every time a startup founder comes up with another app idea that wants to increase financial inclusion and bank, but it only works in English. There are over 271 languages in Nigeria alone and 3,000 in Africa, excluding dialects. Aside that, these apps require you to have the greatest iPhone 17 Pro Max and the greatest MacBooks to run them. But there are people who still have Nokia Touch. In fact, over 24 million of feature phones were imported in Africa. We don't even talk about how do you get the money to put in the bank account in the first place. Some of these problems are being solved actively by microfinance banks. They take people who are human beings into these rural areas and unmotorable sections to speak to the customers, in local language and get money from them. But by doing this, they go into three big problems. Fraud. Most of these agents, they take money from these customers and they don't remit back. Or maybe they take money from 100 people and they only remit 70. And a customer we have been serving is actually going through this and lost over 10 million naira last year. The second is operation. The ability to scale is reduced. A company that reached out to us, Lapo, has over 6 million customers, but they're serving with over 5,000. In comparison, Money Point was serving over 1 million customers before they got to that number. And the third is insight. You would not imagine that a lot of these customers are still making records on paper and pen. These are the problems that we solve with Odara. With Odara, the customer just has to set up the account, and once they set up the account, they get real-time feedback of everything that's happening on their platform. You can divide into branches, zone, etc., etc. And the second thing is they have a unified growth integration. Whenever a money is received or whenever a customer wants to receive money, you just have to dial the phone number and make a call. And once the AI hears the call, it speaks a local language. It understands either as a customer complaint, a request for cash, or a request for delivery. And the agent is assigned accurately and they come to get it. The most important is that they also get a credit score. Of all interactions that are done on the platform, all interaction that's been done in the microfinance banks or cooperatives, all funnel into a credit score that makes people who are invisible to the informal sector, now visible and able to get loan. And this works very fast. They'll just have to sign up, verify, set up all their compliance issues, because compliance is very important in Nigeria and in finance generally. They deploy and they repeat. The microfinance banks and cooperatives see a reduced operational cost, and customers get a lot of these services in their local language. In just a short while, we've gotten over $7.5 thousand in revenue, and we have reached 6 million users indirectly from our customers. In fact, Lapo, one of the biggest microfinance banks in Nigeria, reached out to us to help them with user activation and growth. And we also have 3 financial institutions that are working with us. But most importantly, we are licensed. We are licensed by the Nigerian Data Processing Commission. We are also verified by NITHub and a lot more organizations. And the biggest problem we have been having with scaling this is security, in the sense that we reach out to customers and they're asking, how are you going to scale? What is going to happen to our users? And we have employed a lot of security features to make sure that the customers' funds are all protected. The idea of Odara was started from a hackathon when we were asked to build a solution that would bank Iyan Banode. And I'm not Yoruba, but I could not imagine how everybody else was building WhatsApp bots and apps. And I kept asking, how is this person that is in this street, this market woman, how is she going to use this WhatsApp bot and apps, and how is it going to be of any benefit to them? And that's where the idea of that was built. The future of banking in general is where human beings speak to agents and agents speak to other agents and orchestrate to make sure that the needs of that human being is met. And Odara is laying the bricks, the actual bricks that makes this scale. I'm so happy to be competing in the African Fintech Summit. I wish I was able to get there in person, but then I'll say, let's make Africa great again.
And thank you, Safar. I think we're going to leave time for the judges to ask the follow-up questions. Oh, just the video. Yes, just the video. Thank you, everybody. I think we're moving on to the next presenter. Our next company is Medical Street from Uganda. Medical Street is a healthcare commerce platform connecting providers and consumers with verified medical supplies and more efficiently procurement. They are prone to helping simplify access, improve trust, and support better delivery of healthcare products. And please welcome Faisal Waiswa.
Hello, can you hear me?
Yes.
Can you see my presentation?
Not yet. If you can put that up. Yes, we can see now. Ensuring no families delay healthcare, right, due to lack of money.
All right.
Great. All right.
Thank you. Yeah, my name is Faisal Waiswa, and I'm representing Medical Street at the Africa Fintech Summit. Thank you for the opportunity. We're looking forward to improve healthcare in Africa by developing digital financial infrastructure. So everyone in Africa, and if not millions of Africans, are one bill away from being financially poor. One bill away in Africa can lead you to death. Think of a mother late at night with their child in a hospital. A doctor does everything on them, but after finishing their job, they do not know how they are going to pay. And this is happening across millions of families in Africa. What we are doing is we are ensuring that no family delays healthcare due to lack of money. We believe that many Africans are not insured. Only 2% of Africans, if not less, are insured. However, there are people in diaspora out there that have families back home, and these families need support in medical care. Providers themselves that treat patients suffer unpaid bills, yet the out-of-pocket expenditure is growing for healthcare. Families delay treatment, families sell assets. Why now? Why do we think we need this solution of Medical Street, this infrastructure? It's because there is that growing out-of-pocket expenditure. We believe that there is a large adoption of mobile money in Africa. There is digital transactions that are taking place. There is growing health infrastructure in Africa, and the employers are seeking healthcare benefits. There is a growing remittances by people living in diaspora. At Medical Street, we have developed a product called Life Care Credits. Life Care Credits is a digital platform that enables people save, plan, and pay for healthcare. Businesses, organizations, individuals, families can save slowly by slowly, incrementally, and use this money to pay for medical bills. Saving at our platform enables them to pay hospitals, clinics, and pharmacies and take care of their bills. Our platform is an infrastructure that is built to have a payment gateway and a marketplace. A marketplace helps you to procure or purchase medical supplies. And the
Thank you,
payment
Asa.
gateway. Sorry?
Thank you, Sapphire. Yeah, time is up, and so we can allow 2 minutes to the judges to ask you a few questions about your solution. Okay. Thank you.
And
Thank you, Asa. Thank you, Sapphire. Yeah, time is up, and so we can allow 2 minutes to the judges to ask you a few questions about your solution. Okay. Thank you.
Can you please help us understand the problem you are really trying to solve here?
So we can allow judges to ask you a question about the solution. Okay. Thank you.
Can you please help us understand the problem you are really trying to solve?
Okay. The problem we are trying to solve is the reactive healthcare. Hello, can you hear me?
Yeah, I can hear you. There is a lag at the Jersey section, so sorry. Yeah, just proceed. If the Jerseys can hear me, just try again. Yes, Sapphire, proceed with the answer. I think you were actually on the right track uh, for for the question that was asked.
Yeah, so many people in Africa suffer medical bills. So many people do not know they are caught in the struggle of paying for medical health care, because each time they go to facilities to get treatment, they are caught when they do not have money on them. So what we are trying to put across is a platform that enables people pre-fund for healthcare. If they can save aside, they can have money when sickness strikes. They can pay for their medical bills. Put across is a platform that enables people pre-fund for healthcare. If they can save aside, they can have money when sickness strikes. They can pay for their across is a platform that enables people.
Yeah, next one, please. Yeah, so let's go to the next presenter. And thank you, Sophia. Yeah, thanks for your time and really appreciate your patience with all the technical difficulties we are having. The next presentations follow is Agro Digital from Tanzania. They are prone to digitizing procurement for agrovet owners by connecting them with trusted suppliers and also trying to really improve the access to quality of input and helping farmers get what they need when they need it. And it is believed to be a strong example of practical innovation serving the agricultural value chain. And please let's welcome Sarifu. Sarifu. Sarifu, can you hear me? Okay. So if they not answer in the next.
See the sunrise in the morning glow. People hustling, moving to and fro. Money flies with the speed of light. From a smartphone into the night. From Lagos to Accra, Nairobi, Cape Town. Mobile money future, beware the sound. It's time for Africa rising high. Make money in fintech. See the sunrise in the morning glow. People hustling, moving to and fro. Money flies with the speed of light. From a smartphone into the night. From Lagos to Accra, Nairobi, Cape Town. Mobile money future, beware the sound.
And thank you again for your patience for all the technical difficulties that we are having. And at this time, I would like to once again thank you all, our founders, for sharing your ideas, your energy, and most importantly, your ambitions for with us today. And and just thank you again for your tremendous patience and understanding about all the difficulties that we are having, and most importantly, demonstrated your kind of innovations and resilience and and the purpose that continue to shape the future of Africa entrepreneurship ecosystem. And I would like also to essentially thank our panel of judges for their time, expertise, and thoughtful engagement throughout these competitions. And I know you must have taken a lot of time away from your different engagement to be with us, and your insights and questions, of course, nevertheless have helped make these meaningful, inspiring sessions for everyone present here very meaningful. And just a quick note: at 1:30 we'll flip on into in-person session, and also our judge will now reconvene later today to deliberate and select the top winners, and the official announcement will be made at the close of today's summit. And also, we encourage everyone to stay with us through the end of the program as we return to recognize and celebrate the startup that have stood out in the exceptional competition today. And but just remember, everybody is a winner. The fact that you stood up today, you present your idea, it just the beginning for success. And we are here at the Africa Fintech Summit to support these kind of ideas, to put you in the hand of the right mentors, to make sure that your idea can be really prosper for the good of Africa today and tomorrow. And again, thank you all, and we look forward to seeing you at the winners announcement. Thank you.
See the sunrise in the morning glow. People hustling, moving to and fro. Money flies with the speed of light. From a smartphone into the night. From Lagos to Accra, Nairobi, Cape Town. Mobile money future, we wear the crown. It's time for Africa rising high. Make money in fintech. See the sunrise in the morning glow. People hustling, moving to and fro. Money flies with the speed of light. From a smartphone into the night. From Lagos to Accra, Nairobi, Cape Town. Mobile money future, we wear the crown. It's time for Africa rising high. Make money in fintech. See the sunrise in the morning glow. People hustling, moving to and fro. Money flies with the speed of light. From a smartphone into the night. From Lagos to Accra, Nairobi, Cape Town. Mobile money future, we wear the crown. It's time for Africa rising high. Make money in fintech. See the sunrise in the morning glow. People hustling, moving to and fro. Money flies with the speed of light. From a smartphone into the night. From Lagos to Accra, Nairobi, Cape Town. Mobile money future, we wear the crown. It's time for Africa rising high. Make money in fintech. See the sunrise in the morning glow. People hustling, moving to and fro. See the sunrise in the morning glow. People hustling, moving to and fro. Money flies with the speed of light. From a smartphone into the night. From Lagos to Accra, Nairobi, Cape Town. Mobile money future, we wear the crown. It's time for Africa, rising high. Make money in fintech. See the sunrise in the morning glow. People hustling, moving to and fro. Money flies with the speed of light. From a smartphone into the night. From Lagos to Accra, Nairobi, Cape Town. Mobile money future, we wear the crown. It's time for Africa, rising high. Make money in fintech. See the sunrise in the morning glow. People hustling, moving to and fro. Money flies with the speed of light. From a smartphone into the night. From Lagos to Accra, Nairobi, Cape Town. Mobile money future, we wear the crown. It's time for Africa, rising high. Make money in fintech. See the sunrise in the morning glow. People hustling, moving to and fro. Money flies with the speed of light. From a smartphone into the night. From Lagos to Accra, Nairobi, Cape Town. Mobile money future, we wear the crown. It's time for Africa, rising high. Make money in fintech. See the sunrise in the morning glow. People hustling, moving to and fro. Money flies with the speed of light.
2025. This year, Rwanda rose with unstoppable energy. We didn't just host events, we created moments that moved the world. 155 events, 57,255 delegates. One nation, one heartbeat, global impact. We celebrated champions who carried Rwanda's spirit across continents, and nights that reminded us how powerful joy can be. We became the meeting place for ideas shaping the future. We amplified what we created at home. Our world expanded, and so did our stages. We invested in people, because excellence starts with those who craft it, and we carried Rwanda's story across the globe. Our industry came together, united in vision, ambition, and belief. And now, a new chapter begins. 50+ events already confirmed for 2026. A year already bigger than the last. 2025 proved it. Rwanda doesn't just host events. Rwanda sets the standard. 2025. This year, Rwanda rose with unstoppable energy. We didn't just host events. We created moments that moved the world. 155 events, 57,255 delegates. One nation, one heartbeat, global impact. We celebrated champions who carried Rwanda's spirit across continents, and nights that reminded us how powerful joy can be. We became the meeting place for ideas shaping the future. We amplified what we created at home. Our world expanded, and so did our stages. We invested in people because excellence starts with those who craft it, and we carried Rwanda's story across the globe. Our
That was mine.
The Mac. The Mac.
I used mine to show them. This is mine. Oh.
I think it's not the real thing.
That's what I can't find.
Voila!
If you could begin to make your way into the room, we're about to start. Thank you. If you could begin to make your way into the room, we're about to start. Thank you. Make your way into the room, we're about to start. Thank you.
You can unlock more than ever with the American Express Platinum Card. Access over $3,500 in value each year. You can unlock explore new restaurants with $400 Resi credit. Access over
I am busy enough, and my boss thinks I can handle training a new hire.
You obviously haven't heard of Scribe, have you?
Scribe?
It's a tool that records your tasks as you're doing them and uses AI to create detailed tutorials that you can hand off to that new hire so they can watch and learn on their own. Tasks as you're doing them and uses AI to create detailed tutorials that you can hand off to that new hire so they can watch and learn on their own. That's exactly what I'm saying. It uses AI to create detailed tutorials that you can just sign up for free at scribe.com. Watch and learn on their own. That's exactly what I'm saying. It uses AI to create detailed tutorials that you can just sign up for free at scribe.com. Watch and learn on their own. That's exactly what
If we could bring the music down. Okay. Good afternoon, everybody. Good afternoon, everybody. Thank you. Good afternoon, everybody. It's an absolute pleasure to welcome you all here today to the 2026 Africa Fintech Summit. Round of applause, please. Thank you. And I'm going to force you all to be a very lively audience. So I hope you brought your energy today because we're going to need it for this afternoon. So my name is Claudine Moore, and I'm delighted to host this year's event themed Powering the World from Africa. And it's really great, and it's always great at these gatherings to see so many familiar faces. And for those of you who know me, you're fully aware why this year's theme, I think the mic's, okay. You're fully aware of why this year's theme, Powering the World from Africa, resonates with me personally. But for those of you who are meeting me for the first time, in addition to being a host and moderator, as some of you may know, I am a PR and communications leader working globally across Africa, shaping narrative that leads to investments, partnerships, and capital flows that position African innovation, talent, and enterprise as essential drivers of global growth. Now, my own personal business story really is a case study in powering the world from Africa, because as many of you may know, my own Africa-focused PR agency, Seymour Media, was acquired by Allison as part of their growth story. So part of the acquisition expanded them into African markets. They were already an international firm. So the theme, Powering the World from Africa, is a notion that I'm deeply connected to and deeply familiar with. We have a jam-packed schedule this afternoon, and I really want to just take a moment to congratulate Zek and Zek's team for hosting their 9th annual summit. So congratulations, Zek, on hosting this summit again. And as always, these events are never made possible without sponsors. And so our sponsors this year are Flutterwave, Expedia, and Prembly. So thank you to our very generous sponsors. I'd like to also say a very special thank you to AWS and the entire AWS team for hosting us in this beautiful office. Do feel free to go downstairs to the 12th floor, I think, and have a good look around. It really is a beautiful space. AWS has been a fervent sponsor of the Africa Fintech Summit, but we've never held this summit actually in their space. So thank you again for hosting us. You've always got to show appreciation to the hosts, right? Or they won't invite you back again, so just remember that. So I'm delighted to welcome keynote speakers and dignitaries, including Chi-Chi Bodart, who's the Chief of Staff at United Nations Global Compact, and also Olubenga Agbula, known to many of us as GB, who's the founder and CEO at Flutterwave. Unfortunately, he's unable to be here in person. He wasn't able to come stateside due to a very last-minute commitment. So we have Bonale Barua, who's head of SME business at Flutterwave, here on his behalf, sharing his words with us today. We also have representatives from the US State Department Africa Bureau. We have central bank regulators from Rwanda, Kenya, and Ghana. And we also have World Bank and IMF Spring Meeting delegates. Now, we also, as many of you may know, this summit actually started this morning. And I will, at some point this afternoon, I will get a number of how many speakers and how many number of virtual attendees that we had. But last year when we did this virtually, we had over 65 countries joining, but I'll be able to update that figure as to what we had today. But I do share that just to demonstrate that the reach of this summit goes far beyond this room. And we also have a virtual audience joining us this afternoon as well. This morning, they also had an early stage, they had a pitch competition featuring 11 early stage startups, and they pitched in front of a panel of judges, and the judges are currently deliberating who will be the winners, and there are going to be 3 winners. And very excitingly, as part of our partnership with AWS, those 3 founders are going to receive $25,000 worth of AWS cloud credit, which is just incredible. So yeah, thank you. A round of applause for that. I'm sure all of us would want $25,000 worth of cloud credit. So absolutely a great, great prize. Before we go any further, some very quick housekeeping. So the bathrooms are just down the stairs, like down the ramp, and to your left, or to your right. At least that's where the ladies are. The men, you can figure it out. But the ladies' bathroom is down the ramp and to the right. That's where I went to. So that's where I know they are. Please all wear your badges at all times. There's pretty strict protocol with security in this building. So keep them on at all times. When you do leave, please hand them into reception downstairs on the second floor. We're serving Ethiopian coffee and Kenyan spiced tea with some snacks and nibbles all afternoon, and those have been provided to us by Expedia. So thanks to Expedia for the refreshments. And then later on today, and you would have got an email this morning, so do check your email for the details. But we do have a happy hour this afternoon, directly after this event, sponsored by Flutterwave. I saw a few people's heads look up when I said happy hour, but that's sponsored by Flutterwave as soon as the session ends. Again, the details are in your email, but that's taking place at Potomac Social Tavern, 5 till 6:30. It's a 5-minute walk from here, and the ushers can put you in the right direction. But again, details are in your email. And then after that, at 6:30, Africa Fintech Summit, they've partnered with Afropolitan Cities for a special spring meeting party themed the Borderless Black Diaspora Experience. And this event is open to all spring meeting delegates, but the Africa Fintech Summit has a special section for attendees. And we do love a special section, Zach, so thanks for that. And the venue is the Abigail DC. Anyway, I like a special section. I don't know about you guys, but I like a special section. So the hashtag for this event is AFTS DC26. So when you're posting on social media, please use that hashtag AFTS DC26. So let's begin the program, and just let's level set here. And so before we get into the actual program, I think it would be great for us to go into very sort of top line details about who and what Africa Fintech Summit is. Many of you know, but I do know we've got some new faces. So Africa Fintech Summit is the premier global initiative dedicated to the African fintech ecosystem. AFTS is traditionally hosted here in DC during the spring meetings and then in a different African city later in the year in October, November. So in the last few years, we've been held in Accra, Cairo, Lusaka, Cape Town, Addis, and in Lagos. And this year, the Africa Fintech Summit will be taking place at the amazing Kigali International Convention Center, which if you've been there, I know that you all know it's a great convention center in Rwanda, and that's November 18th to 19th. Details of that, you can go onto the website. The Africa Fintech Summit really isn't just another tech summit. It's an endeavor to support the financial technology that drives forward sustainable economic growth and financial inclusion. One of the ways AFTS has been able to accomplish this is by directly engaging with regulators and bringing new investors to the ecosystem and supporting early stage entrepreneurs. Having directly assisted in bringing over $600 million in venture investment, facilitating bilateral agreements with central banks and assisting global firms with their company expansions and deal sourcing, AFTS is really tremendously and passionately dedicated to the advancement of Africa's fintech industry. And our theme this year, as I mentioned, is Powering the World from Africa. And 2026 really marks a transition, if you like, from African fintechs going global to the globe being powered by African founders. And the continent is no longer simply adopting global technologies and solutions, but we're exporting them. And that's a really significant shift. Even from mobile technology to mobile money innovations to cloud computing, it's a real shift. And even the building that we're in today, AWS, this is an example of that in action, because AWS, for those of you who don't know, has African roots, having begun in South Africa. And as global remote working continues to grow, with improved connectivity, Africa's youthful population and entrepreneurial resilience position it not just as a beneficiary of global growth, but as a driver of that global growth, powering global finance, AI, and digital transformation from Africa to the world. And also, as many of us know, Africa is the youngest continent in the world, medium age 19, 1.5 million and growing headcount, equipped with 710 million unique mobile users. And they are technologically savvy, educated, and able to power the world from our own backyard. And then you have the African diaspora, classified as the 6th region by the African Union, increasingly being served by African fintechs who now intrinsically design their business strategies explicitly for dual identity users, local users and global users. And it's against all of that backdrop that the Africa Fintech Summit has selected Powering the World from Africa as our theme. And this is a great point for me to now introduce Zacharias Amsalu, co-founder of Africa Fintech Summit, founder of IBEX Frontier Route to Africa Marketing Consultancy based here in DC. Zach, thank you.
Thank you so much, Claudine. Good afternoon. We're very much happy that you chose to be with us in this very busy spring meeting. There are so many meetings take place in DC. You could be anywhere else. So we greatly appreciate that you decided to be with us. But we know that also beyond who is here in this room, we have over 1,000 attendees virtually from 65 countries. Just to give you the perspective, our last summit in Accra was about 1,100 in person and over 3,500 virtual attendees. The last time we had this summit fully virtual was 2020 for the obvious reason, COVID. But this year we made a deliberate choice to split our full day summit into virtual, fully virtual this morning, and in person, but still streamed across the globe. The reason is that because of the travel and visa constraints, we really wanted to expand the room. Especially we had 11 early stage startups pitching from 9 countries. So we want them that access to visibility, capital, and investor facing. So 11 startups joined this morning. This is the 15th summit that we've been holding. And I want to address the elephant in the room, so to speak. I keep on being asked, if this is an African FinTech Summit, why are you holding it in Washington, D.C.? The reason is obvious. Yes, investors need to go to where innovators are. We take them to Africa every November. But also we believe that innovators need to meet investors where capital is sitting. When we started this in 2017, the Africa Rising, the Africa Investability narrative was just emerging. And that has changed. We noticed that actually we need to get the US innovation capital invested in Africa. That require education, socializing, and connecting startups with US investors. We've done that twice a year. We've been bringing on average between 10 to 15 early stage startups to DC every April. And we take US investors to Africa every October and November to one African country. And in Africa, our summit is a 3-day activity. We have between 25 to 35 early stage startups connected and pitching in front of those investors. We've helped over 100 startups connected with investors. And Claudine mentioned actually about 25 of those startups have met investors in that pitch session and raised over $600 million. So that is why we're holding the Africa FinTech Summit beyond the shores of Africa here in Washington, D.C. The other reason is because of the spring meeting, the central bank governors, the FinTech founders, the financial technology experts will be here. So it will be easier to talk about US, Africa, FinTech, and investment connectivity. We have various sessions this afternoon. We're very much happy that Chichi from the UN Global Compact is here with us. And we know, Bolanle, you're representing GB. And we look forward to not only your keynote speech, but also your other sessions in the panels. We are very much grateful for our partners and sponsors. Flutterwave is just celebrating its 10 years this year. And we've been holding this summit for 9 years. And Flutter has been supporting and sponsoring this summit the entire 9 years, and they're our lead sponsor. So thank you very much. So beyond supporting this summit, the happy hour that you're going to enjoy later on is also sponsored by Flutterwave. And I hope you enjoyed the Ethiopian coffee, Kenyan tea, and at some point this year, we will also serve Rwandan coffee. So that is also sponsored by Expedia, who launched actually their global banking platform this morning. So we're very much grateful. We have Premly, who is also another sponsor. And AWS has graciously welcomed us to this beautiful building. Since 2022, AWS has been our strategic partner. Every pitching startup part of our micro accelerator is receiving $25,000 worth of AWS credit because of this partnership. And today they've welcomed us at this beautiful venue. So thank you very much, AWS, and the entire team who worked hard to make this a possibility. So enjoy the sessions, but most importantly, the network and the happy hour later on. Thank you.
Thank you.
Thank you, Zach. So I would like to introduce our very first keynote speaker. If we could welcome Chi Bodart, Chief of Staff at the United Nations Global Compact. Please let's welcome her. And please, an extra welcome. She hurt her ankle, but she still made it here for us today. So please, an extra round of applause. Thank you. You can either stand. We do have a seat here for you too. You can manage to stand. Let's go trooper. So as Chi takes her place, I'll move this for you. Chi leads the United Nations Global Compact Board Relations, United Nations Partnerships, and the Principles of Responsible Management Education Initiative. She also leads the front office operations, internal executive management coordination, and the administrative operations of the United Nations Global Compact, working closely with the UN Executive Office of the Secretary General and with the Foundation for Global Compact. A very busy lady, and she's injured, and she still made it here today. So please, a round of applause for Chi. Thank you so much.
Thank you. Okay, let's try not to do All right, now, good afternoon. Good morning to those online. Good evening. It's a real great pleasure to be here today. Thank you for the introduction. And I always say that my job, is also called the kitchen sink. So where it doesn't go, it fits in there. But I'm really delighted to join you and be a part of this interesting conversation. So Mr. Zacharias Amsalu, co-founder, managing director of the Africa Fintech Summit. Distinguished guests, ladies and gentlemen, good afternoon. It is a privilege to join you at this moment, not just for Africa's digital economic transformation, but for the global one. I also wish to convey the greetings of our Assistant Secretary General and CEO, Sanda Ojambo, and the entire team at the United Nations Global Compact. So as I prepared for today, one question kept returning to me. Why does it matter for Africa's fintech to power the globe? Not the world, but the globe. Zacharias chose that word deliberately, and so should we. Because powering the globe means Africa is not just contributing to someone else's financial system. It means that actually Africa is the system. It means African founders set the standards, African regulators are shaping the norms, and African infrastructure is what the world builds on. So let me tell you why I believe that this is not an ambition and its trajectory. First, Africa is already solving the problems the world has not solved. When the world adopted Africa's premier mobile money model, many of you know that, I think it was mentioned earlier, like M-Pesa, it wasn't an export strategy. That's not what we had set out to do. But it was a solution that was so good, the world had no choice but to adopt it. As we can see now, it's no longer the exception, it is actually becoming the model. The second thing is the skill forces ruthlessly innovation. You will often hear the statistics that we have over 400 million unbanked people in Africa, but that's often spoken from a negative perspective. But actually, it is not just the development statistics, it's actually the world's largest untapped market. India and China, they started at the same numbers, but they still ended up building $1 trillion digital economies. Africa is next, but unlike India and China, we are building with AI from the start. We're using alternative data. We have machine learning today, and we're embedding finance to reach those people the traditional credit system still, in many parts of the world, quite frankly, do not reach. The third for me is that Africa holds significant reserves of critical minerals that power the digital age. We talk about cobalt, we talk about platinum, we talk about manganese. Now, with some intentionality, we're not quite there yet, but with intentionality, we can flip it where the Africa Fintech does not just process the value of those resources, it actually helps us capture those values. The fourth for me is that whoever builds the financial infrastructure for the next billion consumers shapes the global finance for the next century. You all know the statistics. By 2050, 1 in 3 people on Earth, 1 in 3 young people on Earth will be African. These are the founders, the users, the regulators, the investors. They're already here, basically. And the fifth and final for me, it's no longer just about the economic story. It's about who gets to define global finance. And we see that that's becoming increasingly important with every global crisis. It's about who's controlling the capital, who's controlling the markets. It's about African companies setting standards. It's about African exchanges listing the next wave of unicorns. African payment rails becoming the default cross-border commerce. That shift in power is precisely what powering the globe from Africa means. Ladies and gentlemen, I have just given you a trajectory, why it matters to me. So let me tell you a little bit about the scoreboard, some of which you know, so forgive me. So you all know that African startups, some of you in this room, raised over $3 billion in disclosed funding in 2025, a 33% year-on-year increase. We also know the Flutterwave have just acquired Mono. We're deepening opening banking stock. We also know that local exchanges are producing IPOs. We are seeing global giants like PayPal who are returning not to build their own infrastructure, but actually to partner with our fintechs that have already perfected operating in the landscape of the African continent. So the world isn't particularly coming to teach Africa, really, if we're being honest with ourselves, quite frankly. It is coming to learn and it's coming to invest. Fintech is no longer just a sector. It's not an experiment. It's infrastructure, it's trade enablement, and it's increasing, and increasingly, it's becoming Africa's most powerful accelerator for industrialization. So what does it mean for us at the United Nations and specifically at the United Nations Global Compact, and how do we contribute to, as Zechariah has asked me to do, leapfrogging and showcase it? So at the United Nations Global Compact, we have the Global Africa Business Initiative, and we have our flagship convening, Unstoppable Africa. And this is the shift that we're committed to accelerating on these platforms. Our belief is simple. Africa's growth depends on digital and financial infrastructure that is inclusive, interoperable, and investment ready. We believe in a growth where small businesses access capital on their own terms and youth entrepreneurs build at scale and trade flows seamlessly across borders. The AFCFTA gives us that market. So this is the Africa Free Trade Continental Area Agreement. Fintech gives us the architecture. And more importantly, AI gives us the acceleration. But it's also why we put the private sector at the center, moving the global conversations from doing business in Africa to doing business with Africa. We already have nearly 70 African companies representing over $170 billion in revenues and nearly 1 million employees who have moved from dialogue to commitment. That's the coalition behind this agenda, the Africa Business Leaders Coalition. At the Unstoppable Africa convening last year, African CEOs sat beside heads of state and global investors, not to ask for charity, but to demonstrate bankability. That's what we hear a lot, from investors. That is the conversation that we want to continue. This is where ecosystems converge, where ideas become partnerships, and where partnerships become pipeline for investment, for scale, and for impact. Through Gavi, we're not here to celebrate what Africa's fintech has built, no. We want to put it in front of capital. We want to put it in front of the regulators, and we want to put it in front of the investors, because that's what it deserves. We open doors to heads of state. We bring the development finance institutions to the table on specific deals. We use our platform at the United Nations General Assembly to make sure the world investors cannot ignore what is being built here. That is what Unstoppable Africa exists to do, and that is the commitment that we're bringing to this room today. But let me be direct about what success looks like. It's not the size of the sector. It's not the numbers of unicorns. It's great, but it's not. But it's the moment that a market trader in Lagos or Kigali or Dakar or Nairobi or Joburg wakes up with access to credit, a digital identity, and a payment rail that connects her to the world on the terms that she controls. So Africa is not trying to join the global financial system as it currently exists. It is building a better one. And the world, whether we know it yet or not, whether it knows it yet or not, needs that version far more than it needs another iteration of what already exists. Thank you. Thanks so much.
Thank you very much. A round of applause again for Chi-Chi, please. Thank you so much for coming. Thank you. And now we have Bonanle Barua, who is representing GB, who, as I mentioned, couldn't make it today. Bonanle, would you like to come to the stage? Bonanle is the head of SME business at Flutterwave. And welcome. Thank you.
Thank you. Thank you so much, everyone. It's good to see you. Good afternoon, good evening, because I know some people are joining us online and it's evening time in Africa right now, and it's afternoon here. So thank you for joining us. It's an honor to be back at the African Fintech Summit. Zacharias already said a lot of things about the Flutterwave and AFTS relationship, but let me start by bringing you greetings from GB. GB sends his warmest regards. Unfortunately, he can't be here, but this is important to us because the narrative that the AFTS has been able to build over the years for the African continent has brought us this far. So GB sends his regards. And it's important that we acknowledge this time and what this means. I'm happy about the topic or the title for this year's conference. You know, it's a new dawn, and Africa is taking the directive in showing the world what is possible. AFTS and Flutterwave have truly grown up together like kids. For 9 years, through every summit in DC and across Africa, we've been a partner. And without fail, we're deeply grateful for the role that AFTS is playing, and most importantly, the founder, Zach. Zach is a lot of things to many people in this room, but we do appreciate what he's doing. It's a labor of love. People sometimes say that for the last decade, we have been building the roads. Flutterwave keeps saying we're building the rails to connect Africa. And it's true. We're focused on building the connective tissue for the continent's most fragmented financial systems, from connecting Nigerian NIP instant payments to M-Pesa to mobile money in Francophone West Africa. We have been doing that hard work over the last 10 years. And I'm happy to say that today we've processed over $40 billion in value and over 1 billion transactions. And that's just the start. We've always prided ourselves as being a bedrock for many other companies to build upon and change the face of Africa. In terms of where we are at, earlier this week, my colleagues and I, as a company, Flutterwave co-convened an economic roundtable with Invest Africa. And the discussions there were centered on the pivotal shift that perfectly mirrors this summit's theme, Powering the World from Africa. It's no longer about the world coming to help Africa. Obviously, we are aware of what's happening in the political era now. A lot of aid was taken from most parts of the world, and Africa wasn't left out. And the question has been, when there is no aid, what would Africa do? How would Africa continue to lead the front? And so Powering the World from Africa is the right theme for this conference. For a long time, the payments conversation in Africa centered around financial inclusion. How many people are unbanked? How many people are underserved? But today, the focus has shifted to economic integration and leadership. I think we have gone past the period where we are just trying to show that we have a bankable continent, to where we need to now take the leadership role and actually drive the conversation on execution. African payment systems are now benchmarks for the rest of the world. Chichi just mentioned that, you look at Kenya, you look at Nigeria, and, we're showing the world what is possible. However, having world-class, rails is only half of the battle. To truly power the world, we must own the infrastructure at the deepest level. For years, even with the best technology, fintechs operated as guests in the financial house, navigating third-party dependencies and external rails to manage the life cycle. I can write a whole thesis on that, what it means to build on third-party, services, the issues around, support, failures, and all whatnot. And we need to get to the stage where we are an embedded part of it. We're not just a fringe partner, but we are truly in the ecosystem. So building an infrastructure on top of third-party dependencies limits you to some extent. And many people have been asking, Flutterwave and Mono, what's the real game? What are we doing? This is why we're doing it. We want to entrench ourselves deeply in the financial layer so that we can, serve our customers much more better. We can enable people build for the next 1.5 billion Africa in 2030. The partnership obviously offers us an opportunity to consolidate our payment stack from banking to data to identity to payments, which is what a lot of the startups in this room today need to actually build. I was having a conversation with a friend over there who's from the Central African region, and he's building a remittance app, but he requires the right rails that give him access to be able to build for that region. We want to ensure that we're able to build a payment stack that many of the fintechs across this room can actually build on and do a lot of great things. Being here in DC during the spring meetings, we are surrounded by many architects of policy, and I think Zach mentioned it. Why are we in DC? Why are we in DC in this week at this particular time? It's because we get an opportunity to have the ears of the guys that make the decisions that move the world, get them to know what we are doing, what we are building, and how they can be a part of that. So for all the regulators and diplomats and policymakers here in the room, we're very grateful that you're taking time to be here. It means a lot. It means that we have your ears. You can hear how we ideate and how we're building. Regulating at the speed of innovation. I was on a panel session earlier today, and they asked what my last words were while we're talking about passporting and what it means for the African fintech. And I said that it's not a convenience, it's a competitive edge. where we are at today, we need to be able to do a lot more. So we need regulation that is working at the speed of innovation. For many fintechs that are here today, they're pitching to investors who have also probably gotten 10x the number of pitch decks that they have. So they are competing not just with another African founder, but with probably 10 or 15 other founders across the world. And in many parts of the world, those other founders have very different experiences in terms of being able to scale. The average African founder needs to have one license from one market to be able to prove he has an addressable market. But his colleagues or his counterparts in Europe, as long as they are licensed in Belgium, they can choose to tell you that their addressable market is the whole of the EU, because you can wake up in Belgium today and tomorrow you're building in Cyprus. You don't have those limitations. So when we talk about passporting and making the rails happen, it's actually a competitive edge that our innovators, our regulators, need to, do to ensure that we're able to power the world. So we need regulation at the speed of innovation. We all know the stats. By 2030, we are the future of the world, and it's important that regulation is meeting us at that level. Now to the global diaspora, quite a number of us in this room didn't fly all the way from Africa. Some of us are based here in the US. And the question is, why are you here and what does it mean for us? At Flutterwave, we like to call the diaspora the sixth region. You are the extra part of Africa that is outside of Africa. And you make a lot of things possible back home. So yes, we are bringing the institutional power to your pocket. Many of you here might be using Flutterwave Send App, which is a remittance product that enables you send money from the US, the EU, and UK to any part of Africa. You might think you're just sending money to keep home okay, but you're actually powering the market back home. And so you're important to be in this room today. Africa requires 200 billion in annual investment to close its infrastructure gap. That capital cannot flow on broken roads, on roads with potholes. I don't mean that figuratively. I mean on roads that cannot, deliver the service that you're used to in this part of the world. That capital, requires a superhighway that is driven, borderless, and secure. The roads are paved, the superhighway is open. Flutterwave is proof that it can happen. It's proof that Africa is bankable. And so today, I want us to take, interest in every single panel session that would have today, contribute and see that you are adding to what is happening on the continent and leading us to where we need to be. Thank you so much. Thank you.
Thank you so much, Bonale. Another round of applause for Bonale, please. Thank you so much. So now we have our our first fireside chat, Africa in 2026, capital markets, IPO, and local exchanges. And the moderator for this session is Eden Harris. Eden Harris, welcome Eden to the stage. And she is the US Africa correspondent at Connecting Africa News for the FT Banker. Thank you so much, Eden.
Hello, how's everyone doing? Excited. I am so happy to be here. It's my first time joining the summit. So far, I've heard really great things, and I'm really privileged to speak to Chuba Nzinwa, who's the Managing Director of Investment Banking at over Sub-Saharan Africa at Bank of America. Could you come to the stage? Thank you. So if I can have you sit, just briefly introduce yourself and tell folks what it is that you do and why it's important for you to be here today.
Thank you, Eden. Hi, everybody. Pleasure to be here once again. Always very excited to be at the summit. My name is Chuba Ezenwa. I am Nigerian, and I've been working in the financial services industry for getting close to about 20 years now. My responsibilities for Bank of America are for our investment banking business across sub-Saharan Africa, where we help companies we advise companies on strategic mergers and acquisitions, and also capital raising transactions across the continent. And I'm very, very excited about, and have been for a very long time, about the structural growth opportunity in the fintech space. And I think this is a wonderful forum to discuss important themes. And I think, the predictive power of this summit actually has been proven, from time to time, in terms of, some of the things that we're seeing, happening across the world and in the sector. And I'm very much looking forward to the conversation.
Yeah, if you don't mind, I just want to jump right in. All right, so looking back to 2025, Africa had its first local fintech IPO, and it closed the year with 5 local IPOs. But while just this month, EcoNet had its first 1 billion value listing in Zimbabwe. Was this local IPO surge expected, or was it a surprise?
Look, I think it's a good question. Very much expected. I think we've been talking about this theme for a very long time. Actually, also at this forum, I'd go as far as saying it's not just expected, also anticipated and inevitable is what I would say. And I say that for 2 reasons. One is, I think it's a broader market backdrop, which is very supportive for African companies at the moment, and I'll touch on why. And the second reason is really the depth of the domestic investor base that is untapped at the moment. So look, on the first point, I think in terms of the broader market environment, in the last 24 months or so, local exchanges in Africa have been some of the best performing exchanges anywhere in the world. You take, countries like Ghana, Nigeria. The Nigerian Stock Exchange is up 30% this year. I don't think you find many indices anywhere in the world that are up that much in the context of the volatility that we've seen this year. Why is that important? When investors are making money, they're very excited about making new investments and taking more risk. And also, it creates a much more positive backdrop for new issuers to look to tap the public markets as a source of capital raising. Look, why are we seeing that surge? That's for a number of reasons. I think one is, obviously, as I think we're moving into a more stable macroeconomic environment across the continent. And as we know, it's many, many countries, so don't want to talk too generically about Africa, but it's fair to say that certainly when you look at some of the larger countries, we're seeing some very, very positive reforms that is driving accelerated growth. And
Such as?
Well, such as Nigeria, such as South Africa, such as Egypt. So there's a number of countries, the larger countries, and Africa as a whole. I believe the economist forecasts are changing every day, but this year, for the first time, we're expecting high growth in Africa than in Asia, which is quite interesting because that's a structural shift, I would say. So the macroeconomic environment's been much better. 2, I think evaluations, so the cost of investing in companies have been relatively modest in the last 10 years. Some of the reasons for that are just the capital flows. There's been a lot of capital that has been invested in developed markets, particularly the US and in the tech sector in the US. And we've seen that over the last 12 months or so, that's been shifting a bit, not necessarily shifting away from tech, but investors have been diversifying more, moving into emerging markets, and Africa has definitely had its fair share of that capital. So I think those are some of the reasons. The second big topic, and I know we're short on time, but it's really just the depth of the domestic capital that is available and untapped. Africa Finance Corporation, one of the DFIs, did a very good study on this, and I think the punchline is about $4 trillion of capital that is sitting in Africa. Obviously, a lot of that is in banks, but there's about a trillion that is sitting in institutional investors and is relatively untapped. So, I think that's another reason why we're seeing that surge.
Yeah, so what about dual listings? Is it losing its relevance, or is it something that people can look forward to staying?
Yeah, look, I think I always say that you have these debates a lot about what are the right structures to attract investments. Is it VC? Is it PE? Is it public markets? The specific question you're asking is it local exchanges or is it international exchanges? I think the reality is we need all of the above. And every case is going to be very unique in terms of what's the right solution for different companies. For some companies, it's local listings, and for other companies, it's international listings, and in some cases, it will be dual listings. I think if you ask some of the dual-listed companies that are listed, mostly actually London, Nigeria, London, South Africa, I think they probably would agree that they get the best of both worlds, right? I.e., being able to tap a local domestic investor base, but also having access to the broadest international investor base. And so I don't think it's losing its relevance. I think it's here. I think it's going to be case by case.
I want you to take us home with this last question. How are the global oil prices, how are global oil price shocks and geopolitical tensions shaping Africa's capital market outlook?
Yeah, look, obviously very topical question. And look, I think it's fair to say that volatility is no one's friend, right? We hate volatility, and there's a famous quote, which is, the certainty of bad news is actually, better than uncertainty of good news, right? And clearly in that context, I think as we navigate this current environment, I think everyone, investors, issuers, clients are very much trying to assess the secondary impact on inflation and what that means for interest rates and the like. And so I do believe that actually this is quite an interesting opportunity for the continent. For several reasons, right? I think one is obviously the biggest impact we've seen so far has been oil prices, right? We are in Africa have some of the largest deposits of oil and gas, as we know. You take a step down, and in terms of secondary commodities like fertilizers, the continent has vast supply of fertilizers that contributes to global exports, right? And look, lastly, I think in terms of the strategic location for Africa, we're strategically placed where we can move commodities and goods east to west, right? The question is, are we ready? Are we ready to take advantage of this? And but I think that opportunity is there. And look, I think in terms of the impact on outlook, there's clearly, I think we'll have to wait and see how this plays out. But clearly there are countries that the oil-producing countries would be better placed to take advantage of the current oil price environment. And others will clearly have the reverse impact. And so look, I think this is a big opportunity for Africa, and this is the second big global shock. I think if you rewind back to tariffs last year, where you could actually argue that Africa as overall has been a net beneficiary of that. So I think that's where I leave it.
Ladies and gentlemen, Chiba and Zinwe, please give him a round of applause. Thank you so much for your time.
Thank you so much. A round of applause for that panel again. Thank you, Eden. Thank you. Okay, and our next panel is a progress report, FinTech license passporting, and VAS sandbox pilot. And the moderator for that session is Foster Awantiti. Foster? Yeah, there you are. Okay, welcome, Foster, to the stage. Your mic's there. Can you welcome Nancy as well, please, and then over to you, Foster. Thank you.
Hello, good afternoon. Good afternoon.
Good afternoon.
I think do we need a coffee break? Anyways, thank you all for giving us the audience. I think it's been very interesting conversations. The previous speakers have done a great job. If you joined us in the morning, you probably had some very interesting conversations from the Rwandan and African perspective on what is going on. We started a very interesting conversation in Accra last year, October, during the Africa Fintech Summit. And we have the opportunity to continue that conversation around the licensing landscape within Ghana and the pilots with Rwanda, and Rwanda being our primary focus this year as the summit, an opportunity to be able to do that. But before that, I'll have Nancy to introduce herself, and then we can dive into the conversation. Yeah.
Thank you very much for the opportunity. My name is Nancy Madi. I am from the Central Bank of Ghana. I have been in this space almost about 13 years now, traveling from regular financial services within traditional banks and then moving into central banking maybe the last about 4.5 to 5 years. I'm currently back in school. I'm back in school because I believe innovation is not static. And as a continent, the more we advocate for representation at certain tables that takes account of the nuances that come from the continent, we need to have that capacity and build that competence. So I'm back in Georgetown Law, where I'm completing an LLM in technology law and policy, and I'm really, really excited to be here and engaging you this afternoon.
As a Ghanaian, I'm very, very proud that our regulators take their job very serious. So yeah, we had the opportunity to host the summit in Ghana under the auspices of the central bank and the president. And one of the very big milestones was the report on the passport licensing pilots between Ghana and Rwanda, which obviously has been successful so far and has resulted in Rwanda exploring that further, extending that relationship further to Kenya, which was announced in March at the Inclusive FinTech Forum. And we hear stories about Nigeria and South Africa next. Ghana being a pioneer of this, I think is a very important conversation to have and an opportunity to share that narrative with the audience here on what is happening, where is it so far, has it gone beyond a pilot now to being something that is repeatable and can be taught to other central banks, and what would that pattern look like over time?
Thank you very much for that question. I'm sure that in conversations that you've had earlier in the day, we have been able to dissect how small of a continent we are. We may be over 50 countries, but we're closer than we actually think. And one of the things that can really, really bind us together is how we're able to do commerce together. And once we're able to do commerce, it means we are able to make payments for the goods and services that we're able to either acquire or procure from ourselves. And one of the instruments that we can use to achieve this goal, also in consonance with the goal of after now, is payment rails. And how do we get payment rails? By payment service providers. Not disaggregated payment service providers, but I will say interoperable payment service providers. And so we should be able to have payment service providers from different countries, but still able to perform their services in any other country on the continent. This is the philosophy or the understanding behind the license passport. So basically, we will have a licensed entity in one country or the other. Of course, I'm biased, so let me say if you're licensed in Ghana, right? You should be able to have that opportunity to be also able to perform the services, which are probably your permissible activities in another country. So what we will do is that from regulator to regulator, we're not only advocating interoperability between systems, right? We're now asking for regulatory interoperability. So between ourselves, we should be able to come to a certain understanding that with the requirements that we would request or desire as requirements for you to attain a license in Ghana, we should be able to have a certain consonance with another country, with their regulator, so that the commonality between the two of us, an entity that should get a license from Ghana should be able to go to some either very minimal requirement or due diligence, or based on the terms of our agreement, should be able also to perform the activities in that reciprocating country. And so that is why you would see Ghana and Rwanda come to this understanding. I think that it has been a very progressive movement or understanding between the two, and the advocacy or the desire would have been that more of us would do more. So maybe let me use this opportunity to say, my fellow regulators are there, let's get it going so that we can afford that opportunity. Listen, in fact, at the moment, every 5 human beings on planet Earth, 1 is African. By 2040, 3 of that 5 will be African. And so earlier we started doing business between and among and by ourselves, the better. If we don't set our own examples, I don't know how the West will now tolerate us or accommodate us or even get into fair negotiations in terms of businesses with us, right? So in every sector, this time we're looking at the fintech space. This is what we can and should be able to do. But there are challenges. It does not mean that it's going to come on a silver platter. Remember that we're over 50 countries on the continent, most of us with different legal jurisdictions, right? And licensing requirements are matters of law, because for us, especially in Ghana, our licensing regime is based on the Payment Systems and Services Act 2019. And per this Act 987, we have stated the specific requirement that an entity or an applicant will have to go through to get a license. So if I have to go into a license passporting with another country, there should be harmonization of our legal requirements, right? But the good thing also is that those requirements are not exclusive of international standards. So basically in Ghana, I'm also requiring that you should have some, data certification. Definitely there will be data requirement certifications also in the country from which any other entity is coming from. We are asking for some cybersecurity certifications in terms of ISO 27000 and whatever it is, most likely will be the same on the other side. And definitely for every regulatory institution or central bank, financial stability cannot be taken out of the equation. So definitely every country will also be having requirements that will ensure that there's financial stability in the ecosystem, right? So basically we will have some commonalities, but the challenge will come in all those other nuances when it comes to the licensing requirements, which will be a bit different from country to country. But that does not mean that we cannot come to some consensus or some agreement in terms of how we can do that. So basically, it's an exciting time. I'm hoping more of this will be done and we'll be able to do more business amongst ourselves.
Thank you. So prior to the Payment and Services Act being amended and passed in 2019, fintechs as a subclass within the financial services industry weren't really recognized, and there wasn't really proper monitoring systems in place within the central bank, but eventually got passed. As they say, Oliver Twist always asks for more. There continue to be emerging subclasses within the financial services industry, more around digital assets. And within the remit which you are permitted to speak about it, we would love to hear more about the headlines surrounding what Ghana is doing so far in recognizing what a digital asset may be and what the recently passed VASP guidelines look like. Within the remit, you are allowed to speak.
I like the fact that he stressed this and he even repeated it for me. So I'm allowed to speak within the remits that I'm permitted to. But it's exciting to also report that not just Ghana, but many countries on the continent are also looking at emerging financial instruments, moving beyond just fintech payment service provision into the crypto, the stable coins, and all other forms of digital assets that we have. And it's exciting also to see that we are not only speaking about it in terms of our approach or how we perceive it, but going beyond that to also put in place regulatory frameworks to offer opportunities for entities to participate not only within that space, but also for us to monitor and also to be able to exercise our mandatory or supervisory responsibility. So it's in this light that we have the Virtual Asset Service Provisions Act in Ghana now, which was passed the latter part of 2025. It's still yet to be operationalized because there's still a lot of work that needs to be done around that. But it's an exciting time, and I think not only is regulations in the bosom of the regulatory institution, i.e., in this instance, the central bank, but also the government itself, because that law was passed, it's an act of parliament. So it was passed by parliament, it wasn't passed by the central bank, right? So you must always have a certain national strategy or a national view on where we want to go as a people. And it's exciting for us to see that unison between the regulatory institution and then the executive so that we're able to achieve, the desires and the goals that we want. I mean, the FinTech and Innovation Office sitting in the Bank of Ghana has been in existence for almost 6 years now. We've passed several or licensed several payment service providers to be participating in the space. And it's great that we have an opportunity now to put in place a regulatory framework for virtual asset service provision.
So as we wrap up in a two-part question, one being financial inclusion and what this means, largely because the central bank exists to create sanity in the ecosystem, ensure fairness and competition, and ultimately protect the consumer. In that regard, and with regards to financial inclusion, what if you had a crystal ball, what would be your predictions on? And I know within the remit of what you're allowed to say, and this could be your personal opinion. What do you anticipate seeing in terms of Africa closing that financial inclusion gap, whether it's from an SME standpoint or from an individual standpoint? And lastly, with the recent trends of digital assets now being recognized by countries, CBDCs were a thing of theory 3 years ago. They are now becoming a reality, and governments following the digital dollar started to consider creating their own e-currencies, and CBDC frameworks and white papers were published by some countries, but it never saw the light of day. Do you see that finally taking shape and form? And with a crystal ball in your hand, what would that look like in a few years to come?
Thank you very much. I think because I want to go back and do my work in peace, very, very diligently, kindly permit me to recognize the current director of the FinTech and Innovation Department at the Bank of Ghana, my director, Mr. Oriku Asari, who just walked in. So if from now onwards my voice is shaking, please, this is the reason.
You can direct all the questions to him afterwards.
But I think I'm going to attempt my very best to answer your question from the bottom up. Your last question was on central bank digital currencies and what is the view looking into the crystal ball. I think at the time when CBDCs, barely about 3 years ago, when it came about, it was a response by regulatory institutions also to get into the space of digital currencies, right? And the view here was that instead of leaving supervision, regulation of digital assets into a decentralized sort of environment where, of course, the cryptos we would rather have it as a decentralized asset and not really have the eye of the central bank looking really deep down in there. It was a response by central bank to also give an alternative because, of course, if we didn't do that, that would also mean there's a big chunk of the ecosystem that we are not participating in. And with innovation, is either you are next to innovation as a regulator or you are behind it. And being behind is very dangerous. So it's better that we are close by to it as well, right? But we know some of the discussions around CBDCs. There's been argument of privacy and people thinking that the government is following your money and all of that. But I also say, have you forgotten your physical cash is in the bank? And we already know, you know your bank balances and all of that of your physical cash. But central bank digital currency and stable coins, because now we see that when we have a stable coin, we have, a stable asset that is rather backing it. So there's a lot of more comfort in that conversation. That's why probably we are seeing more stable coins conversation, going ahead of central bank digital currency. And of course, also, we are not immune to global conversations. These days, the White House doesn't mention CBDCs. We're already hearing the Genius Act talks only about stable coins. So we also have to move along where the global conversation also is headed. But I don't think that CBDCs are dead. I still think that there's room, there's an opportunity for it. We just have to get that timing right and see whether it is the best alternative for the central bank. And of course, whether you can even use it as a tool for financial stability. And then your last question on financial inclusion, that responsibility is beyond the central bank. That responsibility is for every actor in the ecosystem, because whatever product or service you bring out there, it is meant for consumers. Your consumers are not only people in the cities. Your consumers are not only people that are elite. Your consumers, a bunch of them are actually in our rural communities who are probably not pegged onto direct internet. They are probably using, feature phones, so you may have to reach out to them through USSD and all of that. So that responsibility, I think, is on all of us, but also as a regulator, my job is to create that enabling environment for you, so you will thrive. And when you thrive, that goal of financial inclusion will be an ultimate, but not necessarily an intended goal, but it will be a byproduct of your goods and services that you offer.
As you wrap up, and I'm putting you on the spot, as a regulator, if you had to correct one false narrative or tell the audience to retire a false narrative about regulators because there has been a massive shift in Africa and more specifically Ghana, what would that narrative be?
I am your friend. Come on. I'm right here with you, but my director too is here. It's an open door policy. You can reach us out. All our details are on website. So do not think that the regulator is there for only a specific group of people. We are available for everybody, even some of the local languages. Not many can I speak, but those that I can speak, if they reach out, we communicate to them. So we are your friends.
Yeah, that's it.
Thank
you very much for your audience.
Thank you very much, Foster, and thank you very much, Nandi and Madi. Thank you. Can you round of applause again, please? And well done, Nancy, for speaking in front of your boss as well. Well done. That's never easy to do. So the next session we have is entitled Africa Powering the Global Diaspora, Remittances, Investments, and Global Banking. And we have Leila Bera is our moderator. So thank you, Leila. Round of applause for Leila, please. Thank you.
Good afternoon, everyone. How's everyone doing? Enjoying the conference? Yeah? Well, we have a very exciting panel coming up about remittances. I wear two hats today. I am a program associate at the Aspen Institute Financial Security Program, and I'm a daughter of the diaspora. I've been in the US for the past 7 years, and trust me, I've had to deal with all the kinks that come along with trying to navigate the remittances system. So today, it's my honor to welcome a panel of experts who are working to revolutionize remittances, not just as a form of sending money for consumption, but rather looking at the diaspora as a form of capital market. We send about $100 billion to the continent annually. So how can we rethink remittances? I'd like to welcome Sabrina, who is the founder and CEO of Wakeza Holding. David, who is also a founder and CEO of Light Digital. And last but not least, Bolanle, who also addressed us earlier and is head of SME at Flutterwave. Thank you so much. So let's begin. So from where you sit in this remittance ecosystem, what does the concept of Africa powering the global diaspora look like in your organizations? Perhaps, Sabrina, we can start with you and go on.
And good afternoon. Testing one. Good afternoon once again. Honored to be here. What it looks like for me as the founder and CEO of Wakeza is that the nurse from Ghana who lives right here in the DMV at 11 o'clock at night can open the Wakeza app and navigate it through not only multilingual financial education and in her regard in TWE and be able to invest to support and build her portfolio for her daughter or her son and her husband back in Accra. And so it is to be able to embrace the full culture as well as gender norms or whatever that is as relates to this powerful currency called money.
Thank you. From where I sit, how it looks like is, somebody in the diaspora, US, UK, or the United Kingdom, or Europe, picking up their phone and sending money directly to, their recipients in Africa. Money is received instantly, and the recipient is also able to use the funds to, take care of the family, pay utility bills and stuff, right? With the introduction of things like stable coin, it has made that very, very simple and made the whole workflow inclusive, right? So from what I said, that's how it looks like.
I see that in a dichotomy, we serve both the individuals and the merchant. So from a Flutterwave for Business, which is our merchant tool side, what it truly is a fashion designer in Lagos, Nigeria, being able to sell to someone in Nairobi or even in Cairo, and being able to have them complete that sale in the way that works for them. Typically in the past, the person that wants to buy from Kenya will probably have to think about how to get the payment done in dollar because the fashion designer from Nigeria will bill in dollar because that's like the central currency. And then the person in Kenya has to first find the money in dollar to buy. But with Flutterwave, what we're doing in terms of enabling remittances and payments is that when the fashion designer lists her products, she can choose to either list it in Naira, in Kenyan shillings, or in dollar. But the unique part is when the customer is trying to pay from Nairobi, she would see the price, but see that she can pay with her Kenyan shillings and M-Pesa. And so the fashion designer in Lagos doesn't have to worry about, oh, my only market is the guys in Lagos with me. Now she can sell to more people. Now we also have a remittance app, which is Send app, that enables payments from the US, UK, Europe to many parts of Africa. And I think the most beautiful part of that is the speed at which the payments come in, the value that the payments come in with. We're in the diaspora, we know the value of, we know why we check many remittance apps. We're looking for the one with the right exchange rate that makes the money a lot more for people back home. And so for us, we've prioritized those things because you don't know what people are doing here. Some people might not be in skilled labor. They're, making ends meet as they can, and that money needs to do a lot more. So being able to power that so that the person sending money back home to Ghana, the Ghanaian shillings is a lot more, can do more, and can get it at the time when they need it, because you never know what emergencies the money you're sending from here is dealing for back home. So that's really what this means for us in terms of real life scenarios.
Yeah, and super important. I know sending money back home to South Africa can get a little pricey on the exchange rate side. So it's great to hear that you were able to do that across multiple currencies. Sabrina, I'm curious. So from what you're seeing in diaspora behavior, how exactly are Africans abroad actually investing back home at scale? And what shifts are you noticing?
Shifts in confidence. Can I just pause for a second? I think we should all give ourselves a round of applause, because can you give yourselves a round of applause who are building fintechs that Africa has everything it needs to feed itself. I just wanted to say that right here. Okay, back to the question at hand. So what I'm seeing is definitely an increase in confidence, because as we know, money is one of the most powerful currencies on the planet besides love or your religion. And so when we provide the financial education that builds confidence for our members, no matter where they are, Uganda, Rwanda, wherever in the United States, to be able to interact with this confidence, this currency called money. And so when I'm speaking to our members, and again, no matter what country they're in, they all have the same desires, all have the yearning to build financial security for themselves and their lives, but they feel a little bit that trust has to build as well, because as a global community, we have been the victims of predatory practices. And so that's why the education is important, that we are really centered on, so that our members know the questions to ask themselves so they can make the proper financial decision, and also set a new financial behavior that maybe their parents or their grandparents never set for themselves. So I'm seeing a yearning to start something new, to reset, to try, and to have confidence in whatever financial provider is providing for them.
Yeah, trust and confidence, really big words, especially in the financial system that has traditionally not been as favorable to the diasporans. So, yeah, I'm turning back to the short, medium business perspective for a second. So, Flutterwave recently acquired Mono and also secured a new banking license in Nigeria. How are these strategic moves alongside initiatives like you mentioned, Send App and the travel card, helping to resolve those structural financial challenges or those pain points that have been a burden to diasporans who may lack trust or confidence right now?
I think it's not just the diasporans, it's anybody who's, in business, whether you are the seller or you're the buyer. For a typical African SME, and you could be anywhere in the world, really. You could be in Africa or you could be over here. The biggest challenge has always been the multiple number of tools that you have to use to manage your business. You do payments with one particular service, and then you have to have another service for your bookkeeping, another service for your invoicing, another service for your banking. I think for us in finance, the one that we see a lot of times, and which is why we are where we're at, is where I have SMEs in Africa who know that Flutterwave opens up their addressable market, opens them up to the world. But because I don't have a banking license, the regulation doesn't allow me hold funds. So as great as she has plugged, that SME has signed up on Flutterwave, created a payment link, collected payments. She has to first open her Flutterwave account, see what the money is, have that settled into a bank account, then go into a bank before she can start paying. There's just too many things that you have to do that aren't necessary. Now with Mono, our Mono license doesn't only give us the access to banking like you've seen, but also access to insights, to information because of its open banking systems. So basically what we are now evolving into is a full-on financial operating system for an SME. This lady doesn't have to close Flutterwave, open her bank to pay suppliers to do things. She can literally do everything in terms of its banking, its savings. We've had many SMEs in the past that came to us and complained, the traditional banks don't think I'm lendable. They're not giving me credit. You guys see my business. You know the number of people that are buying from me across the world. When can you guys start giving loans? Because I know if you are the ones, you will not ask me for my mother's land documents or something. Now as a bank, I can give that loan. I already know their history. I know their payment patterns. So it just makes life easier. It's one less thing that they have to worry about. I think that's the most beautiful part about this whole, what's the news around Mono and all that, is the fact that now we can provide an integrated system and they no longer have to shop around.
I like that idea. Can I sign up?
I love that. It's great.
David, I want to bring you in. So you recently founded Light Digital. Could you please share a little bit about what brought you to finding this organization, and also what were the challenges that this platform of yours is trying to solve for?
Right. So I've worked my whole career in banking. Started in Africa, Cal Bank, EcoBank Group, and then I moved to Standard Bank, and I worked in the fintech in Silicon Valley. That brought me to the United States. Across all these experiences, I realized that the traditional banking system has one single challenge, which is speed to market, right? So based on my experience, I was able to develop a modern infrastructure layer that digitalizes the traditional banking system, the traditional banks, to make them to enable them compete with these fintechs like Flutterwaves, and Paystacks and stuff, right? And also for new entrants of fintechs, like also speed up their go to speed market. Yeah. One thing that I've experienced, like one problem I've noted with a lot of these remittance companies coming to me for solutions is, I call it a complexity issue, which has to do with, being able to cater for the compliance in countries the diaspora countries they want to operate in, right? Let's say if somebody wants to launch in US, they need to make sure that, they are meeting the tax obligations and also compliance obligations of US. And that is different across, Europe and also UK, right? So as part of founding Light, I have something we call a Light Marketplace, where we pre-onboard most of these partners. And once you have access to our platform, using a low-code tool, you're able to build your channels and KYC, AML, ID verification, and you have a lot of partners to actually select from, right? So if you are not okay with KYC provider A, you can easily switch to KYC provider B. Everything is pre-negotiated with the vendors, and all you need to do is go through us to get your API keys and governance, and basically you're able to launch your platform quickly. Yeah.
As you can see, three very different phasing when it comes to remittances, either SMEs or the consumer themselves, so providing that infrastructure layer that's needed to make these systems happen. Yeah.
Yeah, and there's also the bit where we connect to a lot of real providers, right? Stablecoin real providers. So based on their charges, you can switch in between them, and you're able to go. You're able to launch your product on the go. Yeah.
Yeah, and I think that's a very important point, because what I'm hearing across as a common theme is making it easier for the user to not only use these platforms, whether they are a consumer themselves, like me sending money home, but also for entrepreneurs who make payments, and not just for within their country, but also across Africa, promoting that intra-Africa entrepreneurship and commerce. So I just want to open this question up to the panel. And when you think about the new instruments that the diaspora need, is it a diaspora bond? Is it tokenized assets? What really would incentivize diasporans to start thinking about remittances in more of a capital market, as an investor in this capital market? Africa is not a country, it's a continent, and there's different markets to tap into. So yeah, I'm curious as to what your thoughts are on that. Sabrina, do you want to start?
I would say it's not what I think our members need, is what they believe that they need. I try to stay away from assuming or putting my perspectives on what, oh, you need this. People know what they innately need in their lives, but in terms of encouragement to them, that also consider using the remittances, at least a small portion of it, for philanthropy. So you're sending $100 home, maybe it's for school fees, but maybe 10% of that can go to a school in Lagos, for example. And so because that 100 billion, the market, or the amount that the World Bank has said is sent home every year, that we also should look at that global financial force and really respect it, and then take it to another tier, and how can at least 10% of that build a school, build a cultural institution that can not only serve for that community, but for generations. And so what they say they need is the education. Okay, well, maybe that's a great idea, but now how? How do we do that? And then what is the power of my philanthropy? How can I encourage that remittances that goes home is actually used to build financial independence as opposed to financial dependence?
I think the other way to look at it is, sometimes when we use the word remittances, it's such a that term is used to mean one thing, but it actually means many things. I'm based in the US here, but I'm Nigerian, and I do participate in the capital market back home. I buy stuff in shares and all that. My stockbroker have an account, like a bank account number, that I just need to pay into, and then I give the instructions, and then they help me with my placement. If you're going to term that transfer when it happens, you term it remittances. Yeah, nowadays, most governments would ask that those of us that are remittance operators ask the users what that money is for, just so that they have a sense of where these monies are going to within the economy. But I think remittance as one word is many things in many ways. And in terms of participating in the local market, the way I try to look at it is the diaspora is the sixth region of Africa. And there is a lot happening in Africa. As someone in the diaspora, my biggest fear is Africa will change and morph one day, and it'll be unfortunate that I'm not a part of it. You don't have to be there to be a part of it, but you need to have vehicles to be able to play and be a part of it. Many people, I've met many people in diaspora here who want to pay for homes, pay for mortgages, do a couple of things that are capital intensive back home. The challenge has always been, what route do I use to pay? Where do I pay that from? And do I need to hold funds in this one or do the other one? At Flutterwave today, for example, on SendUp, where we are evolving to our latest release that should come out sometime this month, is going to enable people not just do remittance in terms of wallets, but actually have multi-currency bank accounts tied to their app, also stablecoin. What does that do? It makes you be able to hold funds. Sometimes you know how markets are. You're not putting the money today because the value will change or something is not ready, but at least you're able to hold those funds funds, take it out of maybe your banking space here, and always be ready for the next, purchase or the next thing. I think we need to have a lot more of these types of opportunities across fintechs for diasporans. Let's stop looking at them just as people who are sending money to keep health or to pay for things for family, but people who want to be part of the economic change happening across Africa.
David, we'll end with you.
Yes, so I totally agree with her. So this is how I'll approach this question. Currently, what we currently observe as remittance, I would term as unstructured remittance, where money is physically being sent to family and friends, no tracking. People who send the remittance are not expecting anything, right? I believe if you are supposed to move from point A to point B, or probably point A to point Z, we need to move from unstructured remittance to structured remittance. What do I mean by structured remittance? Remittance, which is pushed through regulated and repeated investment channels, right? So this brings me to a model that we have at Ally Digital, which is called Only. So basically, what it does is it actually uses your credit score in US, your current credit score in US, not only credit score, bank statements, credit history, and your pay stubs. Upon the consent of the client, we can share it with any financial institution, regulated financial institutions in Africa. And based on that, they're able to give these clients credit facility, be it mortgage or let's say, monetary stuff to do whatever they want to do. And we also have the rails to be able to move the funds, then report the credit back, right? So this is what I call as structured. If you're able to handle that, we just move from sending money for upkeep to keeping the inflows coming in, right? So I believe if you're able to take the approach of moving from unstructured to structured, I think it's really going to help. Yeah.
Do you have a question after this one? Because I wanted to add something to what's.
Yeah, you can add something and then we'll wrap up.
No, I just wanted to add in terms of what I really appreciate is that it's almost building a new infrastructure, what I'm hearing from both of you, and that's really important to add that creativity layer that aligns with everyone in Africa and the African diaspora as well.
Yeah, and that's a great note to end on, actually. Thank you for that.
But I did want to also add that I see the power in partnerships, that there's a one-stop shop that Flutterwave offers, and that you bundle services as well. And that's why we're proud to partner with Paytoda, from Uganda, and be able to serve the African continent as well. There's power in partnerships.
We call it payments is partnerships. You can't do any part of payments without having partners. So as many partners, and I think it's about consolidation. I could talk about Flutterwave products, but I can spend more time telling you about the startups that we power, that most people utilize do not know that I'm the one powering them. But it's fine. That's the only way to really build, because we won't have all the use cases solved for. Someone else has that use case. We have to partner to make it happen. And Africa's change is on all of us. Not one person will solve Africa. The reason why the US is the way it is because there are multiple service partners for the same segment. We need more of those things. So no one should think there's already a Flutterwave, what else can I do? You can do something else. There is a lot to still solve for in the continent, and payments is partnerships.
Payments is partnerships.
I love that.
Yeah, thank you. Well, it's been a pleasure. I think I've learned a lot, and I'm sure everyone has too, about unstructured to structured payments and what that means, to partnership as power. And I like that term, the diaspora as the sixth region. Yeah. Well, thank you so much, and thank you all for listening.
Thank you so much.
Thank you again for that panel and for the panelists. Give you a round of applause, please. Thank you. And so now, before the next session, we actually have a video from one of our sponsors, Expedia, who launched its business banking platform for those who are in Canada and the US. They launched that this morning. And for those of you, they launched that this morning for those who joined in virtually. And so here is the video of that launch as we prepare for the next panel. Thank you. Roll the video.
Asked to provide credit history. We couldn't even rent a car, couldn't rent a house, we couldn't even get a cell phone. It was frustrating. But I wasn't able. In North America, there are over 100 million people who are considered credit invincible. And these people are grossly underbanked and grossly underserved. But it's even getting worse. Immigration to North America is at an all-time high, driven by regional wars and climate change. So I decided to do something about it. Allow me to introduce Expedia, the first Google-backed global money app that allows users to get a bank account without even visiting a bank. They can get a card for their global money app that allows users to get a bank account without even visiting a bank. They can get a card for their global money app. Online or in-store transactions. They can pay their rent and bills and even send or receive money internationally. And then it gets more interesting. As they do all of this, they are able to establish and build credit with everyday banking transactions. Little wonder then that our app has been downloaded over 10,000 times and we're experiencing a 60% surge in user growth. We have experienced over 2,000% growth in transaction volume and processed over $20 million already and counting. With over 500 five-star ratings, our users are just raving about us. Given our growth rate, we're projected to exceed $10 million in a few years in revenue because our additional revenue are just growing. This is because we have built a perfect solution for a huge 500 billion market that is largely untapped and growing. This is unlike others. Our solution allows our users and their businesses at the same time with options that enable them to build credit. Credit building for businesses is set to revolutionize the industry. We have an all-star team with a combined enterprise experience of over 200 years, has been further amplified by mainstream media. Expedia has been featured across several reputable media outlets. And through our strategic alliances, we have established ourselves as clearly the leader in the market. We are raising $1.5 million to help us scale our user acquisition and to also scale our revenue. In fact, we have raised over $500,000 from our users already. Talk of validation. So join me in making the next big thing. Thank you. Already. Talk of validation. So join me in making the next big thing. Thank you. Already. Talk of validation. So join me in making the next big thing. Thank you. Already. Talk of validation. So join me.
I guess I should introduce the panelists. Great. So Morgan Williams is our first panelist from Block Radar. Rafael Espinoza from Chipper Cash, our second panelist. Chooks, your last name, I can't. Yeah, Chooks, you can introduce yourself. What's your company again called?
Stablecoin Blueprint.
Okay. So I'll just start over again. So my name is Barbara Ayayi. I am the managing partner of Unicorn Growth Capital, which is a blockchain VC fund, where I've been investing across Africa and emerging markets, across stablecoins and fintech companies. I'm also the co-founder and CEO of Liquid Credit, which is a institutional grade stablecoin liquidity platform. So we're essentially building a stablecoin credit and settlement network for payment companies, fintechs that are using stablecoins to drive transaction velocity in a very capital efficient way. So for me, I'm very excited always to be part of these conferences to talk about the stablecoin opportunity in Africa. The theme of this conference is Africa powering the world. I personally don't know how you can do that without using stablecoins and blockchain rails, because the biggest challenge with connecting Africa to the world has always been banking rails, trade inefficiencies, pricing inefficiencies, liquidity issues, capital access. All of that is what prevents Africa from really being able to trade to the rest of the world. Stablecoins solve some of these issues, and that's what this panel can really digest. I want to start with that question to the panelists, and they can introduce themselves properly as they answer that question. And the question is, how do you see in the context of your work, how do you see stablecoins being used as a tool for Africa to power the world? And what's the traction and momentum you're seeing right now? I'll start with you, Chooks.
Yes. Quick background about myself. Currently, I'm working on a new entity, and so still under wraps. But before that, I was a product manager at Paxos, which is a leading stablecoin issuer and enterprise blockchain infrastructure company. And now I spend a lot of time with the industry on education, investing as well, and essentially building the infrastructure that folks need in various different locations. Now, particularly with regards to Africa, look, over the next several decades, a lot of the economic growth globally is going to come from the continent. We know what the demographics look like, but economic value transfer is a technological problem. And stablecoins are part of the solution, not all of it, but part of that solution. And so as we think about countries on the continent becoming a driving force of global consumption, but also global supply and innovation, then monetary transfer needs to be solved. And so that's the part, for me, where there's a lot of appetite and opportunity. It all comes down to cross-border payments and investment.
Thank you. So I'm Morgan Williams. I am the co-founder and COO of BlockRadar. And so at BlockRadar, which I'm going to answer your question, Barbara, at the same time of answering who I am and what I do, but at BlockRadar, we help fintechs integrate stablecoins into their everyday payment flows. And so for us, we do that not only in Africa, but also across all emerging markets. And for Africa, I see the largest growth in terms of the stablecoin volume on the continent over any of the other markets that we serve. And that's really because of what Chuck actually just said, that so much of Africa's stablecoin adoption has really been driven by cross-border trade and cross-border settlement, FX inefficiencies, and also savings and investing inefficiencies as well. And so for us, we really are doubling down on the growth of stablecoin adoption in Africa. And so we're working with all of the fintechs and financial institutions who are looking to adopt that.
Hello, so I'm Rafael Espinosa. I'm the chief economist at Cheaper Cash. Cheaper Cash, we sit at the intersection of cross-border money transfer, USD cards, and virtual accounts. And I believe that the most important part of the stablecoin usage comes to how this affect the customer's pocket, right? Because right now we were used to see 6, 7, 8% cross-border money transfer pricing. Right now with stablecoins, we are seeing 3 or 4%, which is a 60% reduction in the pricing, just because some of the biggest companies are using stable coins in how they use the liquidity. So in this sense, the adoption of stablecoins not only powers the innovation and the growth of certain companies, but also improves the continent's GDP and how they transact. So I believe that the real value of this stablecoins usage is around how to bring more money into the customer's pocket.
So, Raphael, that's a great point around pricing and the arbitrage opportunity with stablecoins. Why is this still an edge case? Like, why do we still talk about stablecoins as if it's sort of a parallel universe happening? Why aren't banks and regulators adopting it when there's a clear pricing advantage? What do you think what's in play there?
Well, there's a certain number of challenges around stablecoins about the usage of these digital assets, right? The first one, of course, is the regulation. 85% of the economists in Africa, they still have some work to do around crypto usage. And this will change in the future. There's a lot of movement in certain economies that will improve where we are from now. However, slowly and not that slowly, actually very fast, we are seeing changes around regulation and how other companies use its rails.
Yeah, so Morgan, you mentioned that you work with a lot of fintechs that are, the largest fintechs payment companies are now using stablecoins. What are you seeing in terms of the use cases working with these fintechs? And you mentioned that most fintech companies right now, there's a headline conversation around, hey, I've got to say I'm using stablecoins just for people to think they're real. But there's real activity happening in Africa.
Yeah, definitely. And I think off of Rafa's point, with respect to, banks kind of thinking about adopting stablecoins, what I'll tell you is that I've spoken to some of the largest payment processors on the continent of Africa, and they've specifically said their banking clients want access to stablecoins. And so for them, they're already thinking about what is their stablecoin strategy, what is their local stablecoin strategy to be able to actually fulfill the needs of these banks who are looking to adopt it. With respect to all of the other use cases we're seeing, I think one of the biggest use cases is really on the cross-border trade side. We see so much need, not just for businesses on the continent of Africa, but businesses that serve the African market who need access to stablecoins. And so one of the things that we've most recently done is that we've launched virtual accounts in Nigeria. And this was something that was really important because there's so many inefficiencies today for financial institutions, for individuals to be able to access this stablecoin infrastructure. And so by now creating these virtual accounts, it allows customers to be able to tap into this liquidity in a more cost-efficient way. And so that particular feature has unlocked people in China, people in Latin America to all say, hey, now we actually want to use these virtual accounts to be able to do collections from our Nigerian merchants. And so we see that being a very interesting use case. And I think another use case that the West likes to talk about when it talks about emerging markets and Africa with stablecoins is then savings, right? And, hedging against currency volatility. And so we do see use cases whereby new age neobanks are offering dollar savings accounts. And so they're using stable coins for that as well. And so those are probably the main ones. And then also too, you see a lot of use cases with respect to payouts and payments. And so let's say you have freelancers and these sort of folks who are looking to get paid outside. They're working outside of Africa, but are living in Africa, then they'll actually use stable coins for their salaries.
Yeah, no, that's really helpful to explain how it works for inside Africa, how global companies are interacting with African currencies more with stablecoins. So thinking about global perspective, Chucks, you work with a lot of players across the world. And, everybody likes to compare Africa and, LATAM, Asia, where a lot of stablecoin adoption has happened. What are some of the unique differences between these markets? Like, what is Africa leading on? What is Africa, working on, to compete?
Yeah, there's a couple of key differences. I think starting with the similarities, whenever there are countries or economies with restrictions, for better or for worse, but restrictions on getting access to the dollar or having a government that restricts your access to your own savings, that drives people to look for an alternative. And so when an alternative presents itself, in which case stablecoins were one of those things that were around because of crypto trading, but became available for holding a dollar as an alternative, when those alternatives present themselves, that drives adoption from the ground up. So that is a similarity that we see across countries with capital controls, because that is similar in various different places, and high inflation. But then there are key differences in terms of how you go from the grassroots adoption of individuals figuring out the way to use this different app that their friend told them about to do what they need to do, and institutional volume. And a lot of that comes down to the regulatory frameworks in country, the appetite for the regulators to allow this type of activity, banning it versus turning a blind eye. These things are all different country by country, not just across continent, but within continent as well. And so I think looking at Brazil, for example, who have taken a very regulatory forward approach that has led to some of the use cases not working quite as well, but has also led to more investment going into said companies who are going to do it the licensed way. And so I think the parts where certain African countries are ahead or certain African countries are behind, if you think through the barriers to institutional adoption, start with regulatory and follow that down all the way to down the stack of compliance and KYC, getting your banks to be familiar and accepting of how your company operates. Those things all need to happen. And in the last year, in 2025, many African countries passed virtual asset service provider laws. Many are in draft. Some sandboxes have been created with some early entrants. And so that is catching up. But there's still a lot of work to be done to go all the way down where each participant, the bank, the fintech provider, the end consumer, have a clear understanding of what the regulations are and how to comply. And so I think that is the key thing that we're looking forward to seeing more of in 2026 and beyond. It's a conversion of the newer and more prevalent regulations into kind of practical compliance and onboarding of users and therefore institutional volumes.
Who's getting it right? I know you mentioned that, look, 85% of economies in Africa are just not even talking about licenses. Is it just Nigeria? Is it South Africa? Like, who are the countries that are really model, stablecoin regulatory framework?
Well, the big African economies that are doing it right. You have the e-Naira in Nigeria. You have also digital assets in South Africa, in Kenya. Ghana is on the works. But more about that is the fact that, as Chuck mentioned, this regulatory opportunity that is happening not only powered the stablecoin usage, but also powered the ecosystem growth in the continent. Because as more companies start appearing in the fintech industry and more cross-border money transfer, more usage of stablecoins and liquidity, more products will appear with a better user experience, with a much more appealing design that will help the customers to engage better. And these apps will be built by Africans in Africans, and they will have African capital. And I think that's a real value and a real opportunity for more competition in the ecosystem that will grow the size of the market.
And kind of just playing off of that, I think like if we think about countries that I don't know if I'd say this country is getting it right, but I'd say this country is kind of ahead. And it'd be South Africa, right? South Africa's had regulation for the last several years. And in the most recent reports, they've always stood out across the world, actually, with stablecoin and crypto payment adoption. So going back to Truck's point, right, when you have regulatory clarity and you think through like all of the steps in the value chain before you get to the end user, that has to be done with regulatory clarity. And so if you can look at a market like South Africa and you can say, you know, maybe it's top 10 in the world in terms of crypto and stablecoin collections, that shows that from the institutional to the payment rail to the on and off ramping, that has all been sorted out. And that has a lot to do with the fact that you are now talking about a regulated market.
Yeah, you know, one thing Africa has been really good at is innovation, financial innovation. So you would think that stablecoins would be part of the conversation going forward. The credit gap is huge, and we still haven't solved that with fiat. We could do that with stablecoins. You know, we talked about working capital issues fintech companies face. We're trying to solve that, my company, and the conversations around credit and capital is different when you're talking about stablecoins, right? They're not as focused on what's the Africa risk. They're more focused on what's the rail, what stablecoins are you using, things like that. What else do you think Africa should be doing, or just fintechs? You know, one of the things that I like is that you know, all these companies that are really driving stablecoins are entrepreneurs, are startups, and I think the future, if in the next 3, 4, 5 years, it's going to be the startups that are going to be, you know, building these rails. So I'm just going to, before I get into Q&A, what are 3 of you doing from an entrepreneurial perspective that you think in the next 2 to 5 years would really change the game with Africa's stablecoins?
I think, and I may sound like a broken record here, but compliance is really, really important. And I say that because even though stablecoins fill certain gaps very, very well, we still need the banks. And that may seem strange, as the stablecoin guy says we need the banks. We still need the banks. We need some of them to improve the technology, but we still need the banks. And so how can you fit this new, very fast-moving innovation with the sometimes archaic systems, I think is making sure that the requirements are very, very clear. And oftentimes, even with the requirements being clear, serving or solving those requirements is not very easy. Let's talk about knowing your customer or doing compliance. You need to have a good evidence of who they are, where they're from, you know, background checks and so on. That doesn't work the same way in every country. And even in countries, the information that you have is maybe not very easily digitized and very effective to automate in a cost-efficient way. And so even though we're talking about stablecoins related to economic value and money transfer, improving the kind of overall economic kind of velocity comes down to things like rule of law, like digital identity or other more standardized identity systems. When we talk about credit systems and having credit scoring, or even having just an agreed approach on if somebody doesn't pay me back, how can I go after them? There's all these different layers that are less to do with the rail itself and more about trust. And solving that is actually like the key thing that will lay the foundation for a lot of other evolution that we can talk about with payments and economics.
I think on my side, I think in the next 3 to 5 years, what success looks like for stablecoin adoption is, yes, what Chuck said, compliance, because that really has to be embedded in every transaction, just as we see today in traditional finance. But also, I think having stablecoins deeply integrated into payment systems, and so that really looks at 2 things. That looks like having enough liquidity, right, to be able to fulfill these transactions, because that's one of the biggest gaps right now. So if you have large payment processors already today who are looking to get into stablecoins, there's not enough liquidity that exists that they can get their hands on locally that can fulfill their needs and the amount of like local currency that they have. So being able to actually find a way to do that systematically and programmatically in their system is one of the best ways, I think, to kind of having success in the next several years. And then I think the third is, again, having, really well lubricated on and off ramps. At the end of the day, these are economies that are highly mobile money focused, but also in some economies very cash based. And so it will be a while before, everyone on the continent of Africa is just paying with stable coins. And until that happens, really working with, providers who can help you do cash payouts and bank deposits and mobile money deposits is going to be really key. And that goes back to Chuck's point that banks have to still be involved, right?
And I agree with Morgan and with Chuck. In the next 3 to 5 years, we need to see more stablecoin usage, especially in intra-Africa corridors, right? Corridors like South Africa to Zambia, Ghana to Nigeria, Nigeria to Ghana, or Francophone. And that will not only ease the pressure of liquidity because the settlement will be super fast instead of taking 2, 3, 4, 5 days to the transaction to be cleared. Immediately you can clear the transaction. That will impact the pricing, that will have better clarity in terms of volatility and in terms of pricing as well. That's the end result. And if we are there in 2, 3, 4, 5 years, that will be awesome. That will be awesome news because that means that more volume will be moving in Africa, not only from Europe, UK, or the US into Africa, but intra-Africa transactions using stable coins at market rates. And that will be a best case scenario.
No, this is excellent. Thank you for all your insights. Is there any questions to the panelists? Go ahead.
I have a question. There's been a lot of talk about stable coins, but I don't think everybody here knows what the stable coins are. So I think, are you talking about the primary four? Are you talking about some different? If you can name the stable coins, I think will help everybody.
Chooks, you're really good at this.
Sure. I think the key concept is you take currency that you have and you put it on chain. What does that mean? Take dollars, put it in a bank account. I have $1 million in a bank account. I'm going to create $1 million representing that bank account. And so now I have $1 million worth of tokens that each are valued at $1. Okay, how do you make sure that they stay $1 and they don't go up and down like other volatile assets? I guarantee that if you come to me with one of my dollar tokens, I'll give you $1 from my bank account. And if you come to me with $1, I'll give you a dollar token. And you can do that for lots of other currencies, but the dollar stable coins have been the most prevalent for many reasons. They were dollars in general are the kind of global reserve currency and therefore currency of trade. And so in the early days of crypto trading, the dollar as a reference price was used for crypto trading. And so you'd reference your Bitcoin and Ethereum, and all this infrastructure was built up around the dollar as the reference price. But it naturally fits in well in global trade and emerging markets because the dollar is the largest currency held outside of its native country for many reasons, as many of you are aware. And so a lot of the regulatory progress over the last year or so has been about fitting that concept of putting something in an account and providing a token for it into today's regulatory landscape. Obviously, in the US, the Genius Bill has passed, and what that really does is regulate who can be the issuer, the one who manages this reserve, and what do they need to do in order to protect investors and protect the holders. And there are increasing regulation globally around who can be the ones who move money around. And so virtual asset services providers are a type of that. But then this is how to fit in this new innovation, which is, hey, I've got something in reserve that I've now got a token for, into existing mental models and regulatory models.
I was just going to say a quick addition to that. I think Chuck has very much explained how it works for dollar-denominated stable coins. But I don't think what we're saying is that we want to dollarize the world. And so there is a need for local stablecoins, and by local, because local here would be USD, but local stablecoins in places like Nigeria and South Africa are really important as well. Because as we talk about now getting access to local fiat in these markets, there's no efficient there's no real cost efficient way to do that without having local stablecoin players. And so similarly, as Chuck has described for US denominated, the same is true for Nigerian Naira backed stablecoins and South African Rand backed stablecoins as well. And so these players play a critical role in the ecosystem as well.
Yeah, and I'll just add two things, because we can talk about the actual asset itself, but I think it's more interesting to talk about the implications. Money today is very sequestered because each country has its own system for it and its own ledger. And the banks work with the central banks to essentially manage the money supply. And it's very hard to move money from one country to another. Even sometimes it's hard to move money within the same country. But we care mostly about where the biggest pain is, and that's, banking system from country A doesn't work with banking system from country B. And they all rely on a very small set of US banks where they all have accounts and then they trade with each other. That's how it works. None of us really care because we just want to make the payment. But as we talked about at the very beginning, in terms of economic growth and velocity, all this friction is really inhibiting growth and innovation. And so the key, or one of the key innovations of this technology, is that you are separating who can hold money from the banking system. There's pros and cons of that, but by doing that, you're enabling more people to facilitate value transfer. This has already been happening over the last 10 years or so, even longer, with fintechs. The way that the fintechs would do it is that they get a bank account, and then they create a digital layer on top, and then they move money on that digital layer. PayPal is a good example, and a lot of digital, even mobile money is a good example as well. It's achieving the same concept where you're just trying to make money movement easier for the end user. Now, that has implications because more and more startups and technology firms can innovate much faster than banks who are not incentivized to innovate in that way. That's one angle. And then the second angle is, because it's built on a technology that is open source, and blockchains are open source, it means it's very, very easy for lots of other companies to get into the game of now moving money. And lots of other people, lots of other entities and firms, it's not just moving money now. Hey, we can also tokenize stocks. So if you want to invest in global assets, now you can do that as well from anywhere in the world. What about savings? And you think through all the different aspects of a consumer's financial life, all the different aspects of a business's financial life. Who can provide and construct those financial services is no longer limited to traditional finance. That is the big innovation. It's not about stablecoins, even though we care very much about increasing velocity. It's about opening up the layer of who can innovate on finance. And that just the key thing that is happening is increasing competition, more services, more niche and personalized services, and better access for consumers and businesses.
Any other questions? Go ahead. Oh, sorry. Was that you wanna? Okay, go ahead.
Yeah, so Chuck, you talked about the Genius Act passing. I don't know if you guys discussed that earlier, but it kind of seemed to open the door to make this golden era that we're in now, as far as use cases and startups and kind of what they can do. So, I mean, I know the Genius Act basically turns USDC Tether, like US-based tokens, into regulated financial instruments, so they're no longer like speculative crypto assets. And it seems like a lot of startups like mine, for example, is taking advantage of that. I mean, Y Combinator, the most recent batch, actually asked for companies that are building on this because it allows them to do that. Where do you see the use cases going? I mean, the first couple that you think about as far as Africa is concerned is, are people here that want to buy things, invest in things, fractional investing, team up together and invest in things. Now you have to do that legally, knowing that you're protected under the US government. So kind of where do you see that going use case-wise?
Yeah, so it ties in very well with what I was just describing, which is the cost and effort and ability to create financial product has been democratized. And really, to me, that is the key thing of the Genius Act, and why everyone investors and builders are so excited, is because the banking system has had a monopoly on several financial products. credit has been, not stripped away, but lots of innovative fintech players are in credit. Lots of innovative fintech players are in payments. But holding and savings has been still very challenging unless you build on top and with the banking system. And many businesses evolve, for example, who are tech-forward banks, have made their business model making it easier to build on the banking system. And so where this goes in 10 years or 20, maybe even less, is that if you are a business or entity or brand of any kind, and you have access to customers, you can provide financial services to that customer. And so although we're talking about payments and cross-border payments and so on right now, because that's the immediate pain that is being solved, ultimately, if you think about, I've acquired this customer, I'm providing them gig services, or it's a marketplace, or it is a place for them to come and write, it's like social media, they're already here, I have their attention. If they're being paid on my platform and I'm in the flow of funds, now they can save. Now they've got a balance. Hey, we can put a card on that and now they can spend from it. Hey, you want to invest? So think about every aspect of a consumer's financial life if you're in the business of consumer, and the same of the financial life of the business if you're in the business of serving SMBs and institutions. All of those things are now much easier to provide as an entity. And so the maddening effects on competition is very real. It's the hardest time right now for investors because you don't know who's going to be winning. Incumbents have an advantage of existing distribution, but they don't move as fast. Meanwhile, AI is turning everything over. But in terms of going back to your question, any entity that owns the end user can now be a fintech. Embedded finance like 2.0.
Okay, I think we're probably done. So thank you very much for this panel. Thank you.
Thank you so much to all the panelists. That's a great session, as they all are. So the next session we have, our moderator is Jacqueline Campbell, fondly known as Jack. We just connected earlier. Nice to meet you, Jack. So if you can come to the podium, she is the founder and CEO at the Alexander Legacy Private Wealth Management Company. And this session is entitled Returns, Risk and Reality, Investing in Africa's FinTech Ecosystem. And I'll let you, Jack, take it away. Thank you. Round of applause for Jack, please.
Thank you. Thank you so much. I would love to invite my panelists up, and I'm going to allow them to make their own formal introductions. And as they come up and join me here on the panel again, I'm so glad to be here today. My name is Jack Campbell, founder and CEO of Alexander Legacy Private Wealth Management. We deploy capital on behalf of high net worth families and family offices across the United States. And we're also working across the sub-Saharan Africa as well with our assets. And so with that, I'm going to hand it over to Ms. Margaret to share a little bit about your story, and we'll just kind of go down the list and we'll get this party started.
Awesome. Thank you so much. It's a pleasure to be here with everyone today. I'm Marjan Tambi, managing partner of Velocity Digital. We are a pre-seed Africa-focused investment firm that's backed 75 companies improving how Africans trade, work, and pay.
Excellent.
I am Brian Aware. I'm one of the founders and managing general partners of Refashioned Ventures. We are an industrial transformation and supply chain technology firm investing in pre-seed and seed stage startups across data and AI, advanced materials, advanced manufacturing, and next generation supply chains. Our portfolio, like yours, is 74 startups, and number 75 is waiting for me to get my act together and do some due diligence.
Thank you.
Good. Carlos Sanchez, glad to be here. It's the second time after last year. And I work as an investment specialist for the private sector arm of the World Bank, and basically focusing on increasing financial inclusion globally to different emerging markets, low and middle income in Africa, but also Turkey, Middle East, Southeast Asia, Latin America, and the Caribbean, with a focus on digital finance companies.
Excellent. All right, so we're going to open this up and get the party started here. So this is for everyone on the panel. In one sentence, what do you believe that the biggest misconception is that global investors still have around fintech investing in Africa?
I think the main misconception is that opportunity is crowded. I think that opportunity exists in pockets. And in my opinion, that's around infrastructure, companies that are building not like on top of other fintechs, but are closer to the liquidity providers and the banks, as well as companies that are building for niche or underserved customer bases. At the end of the day, both are really focused on reducing fragmentation, either horizontally or vertically across the fintech space.
Thank you. Brian? I agree with Margaret, and maybe the only thing I'd add is that it's easy to think the opportunity is small, but I think the opportunity is much larger than most people assume it is.
Excellent.
Yeah, I will say too. One is very topical, right? When you speak with European or United States impact investors to bring capital and risk capital to Africa, is that treating the continent as a whole instead of focusing on particular markets with its own jurisdiction, its own market opportunity, and currency risk, etc. And the second, in my opinion, is that because of that increased perceived risk of the continent as a whole, the type of investors they come to the continent, they demand high returns. And sometimes we don't see that level of required returns in Southeast Asia and Latin America at the same time. And I think that's a little bit of bias on that, in which type of investors go into which series. And yeah, there is something to do about bringing more growth to later stage and less venture back and more institutional investors into the region with less appetite for returns. And I would say that's a misconception that we usually see.
Excellent. I'm going to keep it with you there, Carlos. And the IFC has been one of the most consistent institutional investors in Africa. So how do you actually construct your thesis and, for fintech and for the continent? And then a follow-up to that is it driven by impact? Is it driven by market size? Is it driven by economics or systematic gaps in the financial infrastructure?
Sure. I would say that the first layer, it's obviously impact because we're a multilateral organization, and what we care is to support, at least in this side of the table, which is supporting the private sector development for business models that have some socioeconomic positive impact in the countries that we operate. So every single company that we support, or fund manager, or bank, or telecommunication company that we support, that will enable an increasing of financial services using digital channels to happen, we need to have a positive socioeconomic impact. And that would mean is in practice, most of the fintech models that we ended up supporting are lending-based. And lending-based for productive finance. What we categorize that is basically increasing financial solutions and credit for micro entrepreneurs, that also includes farmers and small-scale farmers, and micro, small, and medium enterprises, right? We tend to be a little bit farther away for consumer and buy now, pay later models and focus more on productive finance because we see that driving the growth agenda for, increasing the micro to small and the transition to small and medium enterprises and the stability of job creation. And that's kind of the focus. Once that is met, we look specifically on business models, unit economics, capacity to scale, and one of the most important things, obviously, the size, right? How much are you generating in order for us to give a check size that is enough for this institution to invest? And if it's in small scale, we work a lot with fund managers, right? Either through debt fund managers or private equity and venture capital fund managers in order to allocate resources into smaller scale companies. So I would say first impact, then business model, that there is some competitive and first mover advantages, and third, the size in order to determine whether we go for equity, intermediate financing, or debt financing, which is what we are seeing more and more happening in emerging markets, private credit taking up the space that has been left for the last 3 years for venture capital.
Excellent. Brian, this question is for you. So you've been investing in the U.S. for years. What fundamentally changes for you when you invest in Africa? And the follow-up to that is it deal sourcing? Is it diligence? Is it risk tolerance? Or is it post-investment support? Take us there.
So nothing really changes. We have the same set of expectations for startups from any part of the world. we're looking for at least a 10x. 10x is really not good enough. In fact, we're looking that each investment we make in our portfolio, we think can return the fund if it succeeds on its own. And so that's the yardstick that we look at everything through. Now, the truth of the matter is when you're investing internationally, it's one thing to find the prospective investment. It's another thing to do the due diligence and make the investment. But for us as pre-seed and seed stage fund managers, what we can do to help the team after we've invested is just as important. And so if the team is very far away or in a different time zone, that gets more difficult. And so the way that you get around it is you partner with other investors who have a more on the ground presence, and that's how you work around it. But at the end of the day, we want to make money. That's what we've promised our LPs we're going to do. So the standard is the standard.
That's clear. Miss Margaret, you've backed 70 plus companies across Africa. And so my question is, how do African investors actually price risk and return today? And then the follow-up to that is, are there any expectations that are fundamentally different from global VCs or DFIs?
Yeah, I think Brian led into the question well. The expectations are the same, right? You need to generate returns for your limited partners. So for my thesis, right, I'm also pre-seed. We come in sub $5 million valuation. Our average entry valuation is $3 million. Every investor is investing under the assumption that their deals will return the fund. So for us, we're looking at opportunities that can 100x. So if I come in at a $3 million valuation, I'm hoping that at least one of my companies will get to a $300 million valuation, which can be achieved on the African continent. We've seen it done before. So we've built our portfolio model around those assumptions. Then quickly, a few other points that I wanted to add in is that if I'm going to come in sub $5 million valuation, I'm looking at discounting the valuation based off of where you are from a traction perspective. What do I think around execution risk or regulatory risk, and your ability to navigate and pivot around those things will determine if I'm willing to pay the $5 million or something less. And then the last point is that I am looking for founders that can achieve profitability. We were talking with Carlos in the hallway earlier. We're not in the business of investing at growth at all costs, at least in this day and age. We used to do that back in the day, but that's not the narrative anymore. I need companies to think through how they can become profitable and sellable. And so I'm underwriting that probability when I'm backing deals as well.
Excellent. So this is for any of my panelists as my questions moved away. All right. So when you evaluate a deal, which risk carries the most weight? So is it currency, regulation, founder execution, or market liquidity? So let's talk about risk.
It depends. It depends. In some cases, it is currency risk because you do your analysis and you reach the conclusion that this is an opportunity that's going to remain local. And so you really have to worry about that. In other cases, perhaps the startup started in its home market, but once it gets to a certain point, that might be at the Series A, maybe at the Series B, the opportunity is global. And so in that case, currency risk is not as salient as it might be. But then you have to believe that this founding team has what it takes to go toe-to-toe with prospective competitors on the global stage. And then you might meet another startup and the business model is shaky at the outset. But boy, if they can figure out the business model, this could be the thing that makes you famous. You're invited to Harvard Business School to talk about your investing career. Everybody knows your name and so on and so forth. So it really depends. It really depends.
Margaret, what's your take on risk?
Yeah, so because I invest early stage, I think the first thing I'm really looking at is founder execution ability.
I see founders having to pivot all the time because I do invest early stage. So I'm really trying to understand whether I think you can do the journey for 10 years, right? So when I'm investing, we have two founder profiles, either repeat founders who have built and scaled businesses before, at least above 100 million in annual recurring revenue, or I consider you a first-time founder. If you're a repeat founder, I'm willing to potentially underwrite the deal because you've been there, done that, you know what it takes, and you can do it again probably better than you did the first time. If you're a first-time founder, I need to see some traction. I need to see high growth capability. I need to know you're committed to this journey for the next 10 years. And then as it pertains to some of the things that Brian said around currency risk and so forth, I think that in a global market, a lot of African businesses can serve global customers and can earn in USD to kind of hedge against some of that. But as Brian indicated, I'm trying to understand is what you're building fit for other emerging markets, and therefore are we thinking about you entering Asia or LATAM? And then now I have Carlos in my network or other VCs that can help me help my founders enter these other emerging markets.
So go ahead.
No, please.
So I was going to say, because I live in pre-seed and seed, where Margaret lives, first we have to believe in the team. If we don't believe in the team, nothing else matters. So Margaret is absolutely right. We have to believe in the team first.
Let me add something. Obviously, the first layer are people, right? Execution, having a strong backers, and what is the experience. So people is everything for success when they are early. But then you need to differentiate between different business models, right? If we simplify and we go to infrastructure, then obviously regulatory security risk. If you go to lending, it's more about the capacity and risk management. And if you go to payments, then liquidity is a key risk, right? And on all of them, you're going for equity investment or early stage, the currency risk is always one of the key issues. But as he mentioned, there are circumstances where the type of investment can be done offshore. You can be hedged, so have part of the revenues in hard currency, and that could be mitigated. So at the end, it's also depend on the type of business model, no?
Excellent. So what is one thing that works in U.S. venture investing that simply just doesn't work in Africa? And the follow-up to that is, what's one advantage that Africa offers that the U.S. does not? So that's for any of my panelists.
I'll answer the latter, the Africa advantage. In my opinion, you can do a lot more with less in Africa. So I think that that's why we can come in with discounted valuations. Think about how much it costs for labor in the U.S. to build a tech solution versus Nigerian talent or, Kenyan or Ugandan talent to do the same thing. So founders can do a lot less, do a lot more with less. Yeah, exactly. And that's a huge advantage. But still, like I said, if I come in at a $3 million valuation, I can assume that a company can exit at 200 to 300, and I can still meet the standard VC model of 100x multiple on my deals.
Excellent. So
What was the other part of the question?
What works in the States that just doesn't work in Africa, or the vice versa?
I think in the United States, you can get away with the growth at all costs approach to startups in other markets that just won't work. But even in the United States, I think there are many more VCs who are realizing that the growth at all costs model is due to a fundamental lack of understanding of what a startup is, what entrepreneurship is, and those sorts of things. And I know we don't have 12 hours to talk, so I'm going to pause.
Carlos, did you want to chime in? What works here that just doesn't work over there, or what works over there?
Yes, I would mention, many things, right? But I would mention and coming back to what he said, the availability of Series B onwards capital, right? There is a decent amount of availability of capital that goes to C to Series A. Series A onwards, it needs to be more and more funds, and therefore this growth at all costs. At sometime somebody will fund me. It's harder, and it's harder and harder right now in the last 3 years. And I would say that's one of them, the availability of growth capital, but that's also an opportunity because that is pushing the founders to reach profitability metrics early on. Then if I develop a business model here or in Canada or in Spain, where I'm from, it's not necessarily, it's easy to get credit lines, it's easier to reach on institutional investors. Therefore, you are pushed at earlier than Series A, as we are seeing more and more, to be profitable. And then use, if the regulation allows that, use soft type of assets as a collateral and grow with that or with your own capital, etc. So I think that's opportunity there. And then we are seeing more and more. Obviously, it's harder at the first steps, but it's also a limitation and opportunity. And I think founders are seeing these institutional deficits on many aspects of their society, and they are tapping into those opportunities to grow. And we saw the largest digital bank in the world was founded in Brazil by a mix of Latin American founders, and then we are seeing a lot of use cases of very successful companies because of that, right? With not necessarily a lot of equity raise, but pushing towards profitability very early on. So I think that's the path forward.
Excellent. Before we open it up for audience Q&A, I want to wrap up with a final question. So as we project out for the next 5+ years, what will define success in Africa and fintech investing? Is it scale? Is it execution? Is it profitability? Or is it exits? So let me start with Ms. Margaret.
Of course it's exits. Of course it's exits. We're venture capitalists. We need to return money to our investors. So yes, that's the number one thing for me. And I'll let Brian and Carlos enhance. But I think to get to an exit, all of the mix of everything that you've said, execution ability, the ability to scale, et cetera, is what enables you to get to an exit. But I'll let them enhance on that.
I mean, I have to agree. If there are not exits, there will be a lot of questioning on why are we doing this in the first place, right? Because at the end, you need to show returns, and this has been a huge problem in all low and middle income countries in the world. So an exit, so that needs to happen, or transition, different business models, and how we conceive the venture-backed type of growth into more traditional small enterprise that grinds itself up and start getting credit and grow slower because. Yeah, there's a lot of questioning in the market about, the lack of exits in different markets, and that's why we are seeing a huge growth of the private credit ecosystem, right? And some of the VCs are transitioning to that, curiously so, and I guess that's part of it. So I agree with you. It's exit to keep this momentum happening, right?
Thank you, Brian.
So I agree with Margaret, and I agree with Carlos. But one of the difficulties of a panel like this is that we don't have enough time for nuance. So I'm going to try to introduce some nuance. Yes, exits are absolutely important, but if we focus too much on exits, it is possible that a founder thinks, oh, I have to get impatient, I have to execute, I have to take some of the decisions that are more reminiscent of growth at all costs, as opposed to what works for the startup. And I'll tell two short stories. So one is Palantir. Right now we hear about Palantir in the United States. Palantir was founded in 2001. When did we start hearing about Palantir as this huge successful startup? It's the last 5 years, maybe the last 3 for many people. NVIDIA, probably the world's most valuable tech company now. I think Jensen Huang was working on it for 37 years. And so, yes, exits are important. And maybe instead of exits, we should say liquidity. So that the angel investor who after 5 years decides this is too long, can get their money out. Someone else comes in, maybe 10 years in, they decide it's too long. But hopefully the founder has the staying power to do it for 37 years. If that means after 37 years, this becomes a $4-5 trillion company. And for me personally, I just hope I have the staying power to eventually it becomes a $5 trillion company because, my goodness, that would get me to a case study at Harvard Business School. For sure it would.
I love it. I love it. All right. Well, now we're going to open it up for any questions from the audience for our lovely panel here that's doing some amazing things here in the States, but even better things on the continent. Okay. Yes, sir.
You mentioned that there's an increase in the debt financing. Monitor with the VC model that exits problems. What are some of the, rates that you've seen investors have been attracted to? And maybe just kind of attack that a little bit more.
Yeah, sure. So, and it's coming back to his point, right? Not necessarily lack of exit, but seeing at least that you return back the money they haven't invested 5-7 years. So most of the investors in private debt that we are seeing in emerging markets are USD based, or they're using hard currency like British pound, euros, Singapore dollar, or whatever. And then the ranges are between, it depends on the market, but between 13 and 15% net. And that's because usually you need to incorporate the cost of hedging. And usually, so it's not like mezzanine because most of these deals are secure somehow, but it's kind of ranging there. So still it's very, if I get 12% net return as a private fund manager, it's decent, right? And then you can exit in 4 or 5 years, and then you see that growing more and more.
Good afternoon. My name is Busi Matsiko, and I'm just asking this question. I think I know the answer, but I'm just asking for people who would probably want to ask this question for purposes of the continent. We have seen situations where you see funds on the continent which fail to deploy, as well as you've seen people scared of venture. What would you say to those people, like women who would want to do business but are scared of venture, or those funds that ruin the reputation of venture?
So I think for my fund, as an example, my co-GP is the founder and CTO of a company called Thriver Greek that's built and scaled to 6 African markets, is valued at over $200 million. So he's a blueprint of success. And so for us, we have a ideology that there are other founders like him. Yeah. And so we invest under that philosophy that we can find more women and men like him trying to achieve the same. So I think it's really about being in the right spaces to find those women and men. And luckily for us, because he is a blueprint of success, many of them come to us asking for his blueprint of how did he walk that journey, what introductions can you make and ensure that we also succeed in this process. And so we get a lot of great inbound deal flow from founders who believe that they can do it. And then we underwrite whether or not we also believe that they are capable. And so luckily for us, we do get great inbound. And so like I'm trying to explain, you need to be in the right places, meeting the right founders who are capable of being successful, raising money from venture capitalists, and creating the outcomes that they expect from the founders they back.
Yeah, so I have a question. When you all are, like your attraction methodology, what does that look like for each of you all? Because I'm assuming it's going to be different from those starting your own fund, those working with big banks. So how do you attract new talent, new investment opportunities to you? Or how do you go out to discovery? Like how does a person make themselves attractive to you?
So there are two different things. How does a founder make themselves attractive to us, as separate from how do we source deals? Okay, so how you source deals, you're on a panel, you're in a t-shirt, an orange cap, orange cakes, an orange bag. And if I hadn't forgotten my business card holder, that's orange too, right? Because then founders will be like, oh yeah, he's the guy with the orange, I need to go find him. No, but if you've ever wondered why VCs, especially pre-seed and seed stage VCs, make so much noise, they are on Twitter, they are on LinkedIn, some of them are on Facebook, they're on Instagram. You're probably wondering, do they get any work done? Yes, we do get work done. But if we're not out there so that founders remember we exist, they say, oh my God, I want to go talk to Brian, I want to go talk to Margaret. Carlos, I'm not so sure. Maybe I'll get to him later on. he was wearing a coat. He was wearing a jacket. I'll go talk to him when things are more buttoned up. But that's why, right? So we make a lot of noise, and then we go where we think the founders are. How does a founder make themselves attractive to us? You just have to convince us that if we don't back you, one day we're going to wake up and that is going to have been the worst decision we have ever made, right? We're going to realize this is the company that would have returned the 1,000x in my portfolio, and for whatever stupid reason, I didn't write the check. How you do that, that's above my pay grade, right? But that's why you're the founder and the CEO of your company, and I'm just an investor.
All right. Well, as unfortunately, we're up against time. We're going to continue this party at happy hour and the other events that we have later on. Thank you so much for joining. And if you wouldn't mind giving my panel a round of applause. Thank you.
Thank you so much. Well, another round of applause for that panel. Thank you so much, and thank you, Jack. It's always interesting to hear from the investors. So before we go into the next session, a little bit of housekeeping for those of you, announcements really, for those of you who weren't here at the beginning of the event. So directly when this event finishes, there is a happy hour sponsored by Flutterwave. We have a happy hour at Potomac Social Tavern. It's about 5 minutes walk from here, but the details were sent to everybody this morning in your inbox. So check your email from this morning from Africa Fintech Summit, or you can ask one of the ushers. But it's 5 minute walks from here, and it's scheduled to go from 5 till 6:30, but it's like 20 past 4 now, so maybe a little bit after 5, but certainly ends at 6:30. And then after 6:30, we have partnered with Afropolitan Cities for a very special spring meeting party themed the Borderless Black Diaspora Experience Happy Hour. And while this event is open to all spring meeting delegates, Zach and his team have very kindly and brilliantly have a dedicated section for all of the attendees from this event. And as I mentioned earlier, I love a exclusive little section. I'm sure everyone does. So, or maybe I'm the only elitist in the room who likes to be apart from everyone else. Anyway, that's my problem. But we have a special section for all attendees, and the venue for that is Abigail, DC. And again, the details, the address is in your inbox, but you can ask the ushers. So, unless we have any questions, let's get on to the next panel, the next session. And the next session is Trust as Currency, AI Compliance and Cyber Resilience. And Maria Adebayo, if you could come to the stage, please. Thank you, Maria. And Maria will introduce her panelists. Thank you, Maria.
Not a problem. Hello. Awesome. This is working. Hello, everyone. I am privileged to have the opportunity to moderate this panel. I'll just call up each of my panelists, starting off with Larry. He is co-founder, CEO of Friendly. Then next we have Tomiwa, who is co-founder and CTO of RegFile. And then we have Betra, who is a partner at King & Spalding in the International Trade Practice Group, but also former counsel at Paystack and Stripe. Thank you. Right, I hope everyone is doing well. I know we are at the final panel, but it will be the most exciting one. I am Maria Adebayo. I am the co-founding or founding partner of VM Consulting Group. I'm a tech attorney, and we sit at the intersection of fintech regulation, cross-border services, and the Africa diaspora markets. We are going to get straight into it. We have 3 people who are knee-deep in the industry and about 20 minutes, and so we're going to make this fun and exciting for you all. So I'm going to first allow them to introduce themselves, do a little bit more than my one-liner intro, and so we'll start off with you, Larry.
Thank you.
Yeah.
Okay. Hi, everyone. My name is Larry, and I'm the CEO and co-founder of Friendly. We operate in the KYC verification space and also go more deeply into fraud detection. And so far, we've enabled over 150 million Africans to have access to either local or global services. And we do about 3 to 4 million verifications every single month. Nice to be here.
It's good to see everyone. My name is Betra. I'm a partner at King & Spalding. Prior to that, I was at Stripe and in capacity as general counsel of Paystack. I was living on the continent for about 3 or 4 years as the company expanded. And so that's to you.
Hello, everyone.
Okay. Hello, everyone. My name is Tomiwa Erinosho. I'm the CTO and co-founder of RegFile. RegFile is a full-stack compliance solution for financial institutions in Africa.
Awesome. So we're going to get into the first question, which is African founders or builders, they are building at a global scale, entering multi-jurisdictional concerns and rules and fending off sophisticated cyber threats. And often with lean teams or even arguably no legacy infrastructure. I want to ask each of you if you can say one word or sentence on where that trust deficit is most acute at the moment, whether that's product, compliance, or infrastructure. I'll start with you, Lanre.
Thanks. I kind of conflicted between infrastructure and compliance. But if I have to say one, I'll probably say compliance. Because those in compliance, I think particularly they have the responsibility to bring everyone in the room and kind of dictate how the continent goes.
I think for me, it's infrastructure, but it's more thinking about the trust deficit between regulators and technologists or innovators. I think what I saw in my experience was a lot of friction between those two parties that hampered progress in a lot of instances. And I think the regulator's role of creating an enabling environment, and I think needs to be matched, with thorough and deep conversations with technologists that are bringing to Africa the latest technologies.
I'll agree with Larry. I think it's compliance. I think compliance is what changes or ensures that chaos doesn't become the norm. Compliance is what sets the rules, and it's got to be compliant.
Awesome. Thank you so much for that. So part of my practice at VM Consulting Group is being able to advise fintechs, startups who are probably using financial services or servicing clients or customers that are in the financial services industry for the first time. So trust from a digital platform is a pretty big thing because it's their first interaction with that kind of platform. So Lara, I'm going to ask you, beyond efficiency gains from using AI, which is helping to reshape our trust relationship, how do you think about what that is doing for the industry, for the customer base, and how important is it, or what are the benefits of localizing AI?
Thanks for the question. So the concept of localizing AI, I think it's a little broad idea. And I think a lot of us within the innovation space was just trying to struggle on where, because as innovators, we're thinking about creating new technologies, but at the same time also something that's sustainable. It's not just about creating stuff, it's about would people pay for it? So I want to innovate using AI, and I want people to say that I'm the coolest guy in the block by using AI and having AI around my website. But would people actually pay for it? And that's a big question that I think, at least as innovators, we kind of struggle with. So I think it's still a space that is evolving. However, I think one of the mistakes that we would make as innovators is kind of adopting models or standards that are praised in the Western countries, the US and Europe, in Africa. And that's because it's very, quickly. One, if you adopt AI in, let's say, the insurance space, or let's say, in the insurance space, you're dealing with, in Africa, especially some countries, you're dealing with the religious factor, right? And people do not insure their cars or do not insure their life because religiously they do not want to, they never think they're probably going to fall sick. You have a collection problem when it comes to fintech. You have an environment where where compliance can change 360. You could wake up today and you sleep and your regulators say, hey, now you cannot operate any longer. And so what AI should do, or in my own view, is localizing all these factors, and then you create models that would adjust based on some of these things, based on the fact that you have a user that is competing your product and religion, and then you still try to find some level of balance. And then you have another user that kind of believes is not that religious, and then you use the a different AI model. So in my books, I think the mistake we would make is using the same model that operates in the West across without considering these other factors.
Thank you so much. That's very compelling. I think sometimes we forget about the affordability part and then the religious part as well. Like AI needs to make sense for the subset of people that you're serving. It's not just all kinds of information. What information is going to be most useful for the people who are using AI? So thank you so much for that. I'm going to go over to Laura. I'm going to ask you a specific question because you might add a little bit more, given that RegFile is in the compliance space. And so at times I counsel founders who have the potential or think through the potential of the use of AI and the benefits, but also warn that automation can give this false sense of compliance just because something's happening. They think that they're compliant. And so I'd love to hear your idea on what are the biggest unseen risks in using AI and what is the accountability layer that we can think through if we are using AI as individual products or projects versus a full compliance program.
Thank you. Great question, actually. So I'll speak to two key risks. Both of them, I'll narrow it down to what has happened in Nigeria, where we operate primarily. And also importantly, I'll narrow it down to the last year. The two most consequential regulations, policies, guidelines that have happened in the past year have to do and directly tied to the question you've just asked. The first one is around explainability. AI has to be explainable. And I'll tie it to recently the Central Bank of Nigeria released the baseline standards. And one of the key parts of that piece of regulation, policy, whatever you want to call it, is the fact that not only are you talking about compliance and KYC or having a compliance program, now you have to think about how you explain how you arrived at that decision to the regulator. It's extremely important. Governance has become central to it. And a lot of people think that it was a policy or a regulation that speaks to the use of technology. No, it speaks to the use of to governance and making sure you're able to explain your process and how you reach a certain decision, especially around things like automated decision making and so on and so forth. The second aspect, the second point I would speak to is data privacy. I mean, Larry just spoke about the use of indicators such as religion to train AI models. That's great. But data privacy is actually very key. Again, in Nigeria, there was a very consequential regulation which came off the Nigerian Data Protection Act. It's called the General Application Implementation Directive. And it's extremely important to highlight how that directive, how it talks about the provisions of the data rights of individuals, data subject rights, the right of to access your data, delete your data, and so on and so forth. And those that piece of legislation directly links to the use of AI. It may not say it in plain in two words, A and I, but it actually speaks very much to how AI is governed, and that ties to the risk, the unseen risks that we see. So I think just to wrap up, we want to use AI, but ultimately the risk associated with it cannot be whisked away. The risk of discrimination, ethics, bias, as Larry said, and so on and so forth. So yeah, those are the two main risks that tie to what I would call the most consequential acts that have happened in Nigeria in the last year.
Yeah, I had.
Yes, please.
In my book, I think the concept of, and I do agree with the points you've made, but one I struggle with is the idea of, I'm trying to say this in a nice way, the idea of data privacy. Now, I deal with a lot of data. We deal with a lot of data in a company, but I would tell you that data privacy is a luxury in sub-Saharan Africa. And here are the numbers. There are over 1 billion people globally that do not have any form of ID. You don't know who they are. 81% of that number stays in sub-Saharan Africa, right? So if you think about that, those are over 800 million people that the government cannot even identify, and the businesses also can identify and bid for. The average person and the average people in sub-Saharan Africa really are thinking about how to, technologies that would impact their life and also move from one societal category to another. And I've rated with a lot of them. I do not think they take the idea of data privacy as much as we that are kind of privileged take it. It's nice to have. However, I think a typical person living in sub-Saharan Africa would prefer for you to use their data and make their life better. And I think we need to talk about that more than we talk about, hey, we're going to protect your data. We're going to protect. I get the concept of protecting data, but I think we should change the conversation to how can we use your data to serve you more and make your life better.
Yeah, just to add on that, can you hear me? Is it
Question?
You can, oh, the battery's in.
Yeah, you can use this.
Okay. I was just going to say one thing to add on that, and I think it's actually a great point in that it's quite dangerous, I think, for regulators to just copy paste from other jurisdictions. Something that I wrestled with directly, as general counsel at Paystack, and the context matters. You were even talking about the products earlier, and so it's a great point. Just to echo your point, and it's not only in that space. I see it in other spaces as well.
Can I just respond
happy
to that? I think I'm not sure I agree, and the reason is quite simple. The data doesn't support it. Two proof points. The first is, we all know Google Trends. You can just check Google Trends to see, just search for the term data privacy and just limit it to Nigeria, and you see an explosion of people searching for their data rights. The second proof point I want to talk, I'll just link, is actually, you're probably familiar with this, maybe it was during your time at Paystack, when Paystack was joined in a lawsuit with Green Africa Airways. Yeah. So you're quite familiar with it. Historically, that would never have happened. Just for those that are not familiar with it, essentially a customer, data subject, essentially sued an airline, saying that the airline, it was, I think they were trying to get a refund, but as part of this lawsuit, they said the airline was not compliant with data privacy provisions. They didn't have a cookie policy, they didn't have a manner of things, and Paystack was joined. Paystack didn't essentially do any wrongdoing, but Paystack was joined in the suit, so there was a risk of the joinder risk. What we are seeing is that people are becoming more aware of their rights. They are aware of the fact that the regulator, the Nigerian Data Protection Commission, is singing and telling them that actually your rights can be preserved. And people are actually taking advantage of it. So whilst you say that people don't care. Maybe they don't, but the lawsuits are coming. They're getting judgments, and there's precedent now for all manner of things. But I might be wrong.
Yeah. Okay. Well, maybe we'll get back to that point. Thank you all for your contributions. I think the one thing that we're bringing out is that is data privacy or all of these things that we're talking about, are they useful to the market that we are serving? And maybe are we ahead of time? Maybe data privacy is not a big concern for that person living in Lagos right now or somewhere in Addis Ababa, but maybe in the future it could be, and should we prepare for that trend, right? So happy to move on to our other question before we wrap up. I know this has been a really good panel. And so part of what I do is trying to bridge the gap between US and African markets, especially in the regulatory ecosystem, and trying to delineate where the real risk is and maybe where arbitrage could be. And so, Petra, I would like to understand from you, given that you've been in the room, regulatory engagements with Stripe and also PayStack, where do you think African regulators possibly are ahead of the curve, if at all? And what are the things that we could do, or what lessons could the world learn from Africa, or what we're doing at the moment as you're sitting now in DC?
Yeah, happy to answer that. I mean, I'm by trade a financial services regulatory lawyer, so a lot of this will be in that space. From my experience, so Africa is ahead in the sense of, I mean, I think real-time payments and mobile money payments payments in Africa is actually some of the best in the world, payments in Africa. And I think a lot of that has to do with what I was trying to say earlier, which is the partnership between industry and the regulator in creating the right enabling environment for technologists to do their thing. And so those are two spaces that I think Africa has had. I think I've also seen in open banking in particular, where the idea is on the point of data, that customers essentially should own their own financial data and it should be portable. Here in the US, there was a law passed by the CFPP that was repealed recently. And so that open banking is essentially happening outside of the regulatory framework here, while again established in several markets. Again, one thing I should caveat all of this with is there's 50 plus countries and it's different kind of environments in each place. And I'm sort of, as I'm talking probably about the largest 4 or 5 in terms of economy size and population. So I think in those areas, Africa is ahead. There's a lot to be learned. I think there are opportunities, I think, for growth, if you will. So there's 2 that come to mind. I mean, one thing I think that's really challenging is around lending and capital allocation. What enables businesses to run, what enables small and medium-sized businesses to get off the ground is obviously going to be a loan. And so the question is sort of, what is the set of rules that can enable folks to understand ahead of time what the rules of engagement are? What are the terms upon which I need to repay, and what are the consumer protections that I have as a consumer as well around that? I think that's one huge challenge. I think the other one is around, I'll just say cross-border money movement in general, and that's both Africa, outside Africa, and also intra-trade within Africa. I understand that there's a lot of really complicated economic and other reasons why capital controls and other things exist in each of these markets, but as an investor thinking about where to put money, or as a business trying to scale across, like PayStack, scale across 6, 7, 8, 9 markets, it makes your treasury function really hard. It makes your ability to actually enable a payment. You know, Kenyan wanting to buy something from Nigeria becomes very complicated. And I think that there's a lot that the continent can do, both within countries, regionally, even bilateral trade corridors that should open up the ability to move funds across borders. And I think leveraging technology like stablecoin and like crypto, and that's just a great example of something that was stifled in a lot of markets across the continent, is just now recently sort of, I think there's legislation coming out in the last year or so. And I think these are all places for opportunity.
Thank you so much. Did you want to add something? Okay, just before we open up to the audience for questions. Just one more question I'd like to ask everyone, and that is, what is one decision, not a framework or anything complex, one decision that founders or regulators could make to be able to attract more capital in the fintech industry?
Should I go?
Yes, please.
I'm just going to go back to data. They have to invest in data infrastructures. My concern about how protective we are about data in Africa is you cannot have models, AI systems without allowing people first. We need to, and I'm trying to be politically correct here, so that it doesn't look like I just want to consume people's data. You cannot say we want to have cake and at the same time we want to overly say, do not share your butter. Models are built on data, simple. The reason why we have a lot of fraud happening in the continent is because you have a bank, someone commits fraud on the bank, and the bank does not want to expose that data, does not want to share that ever happens. Another bank cannot lend from that stuff, which is quite different from what happens here in the US. If fraud happens in the bank here in the US, they're mandated to report to the regulators, and then that data is kind of shared. So the other bank learns how this fraud happens, and so they kind of prevent it. My concern with the way we talk about data and how we hold on to it, in my mind, I think it's not kind of progressive. I think we could change the topic to say, can we invest in data infrastructures? We do not have enough data centers in Africa because we don't want to even share data. Can we have data infrastructures? How can we talk about AI when we're not investing in big data technologies? We're not investing in how people can say, you know what, I have the right to hold on to my data, but I can also willingly give out my data. And it sounds negative, but we can sound as ChatGPT would never exist if we didn't expose data to them, right? And we're all benefiting of ChatGPT right now, but somebody exposed the data to them. So there's a way we could possibly talk about how people can benefit from allowing innovators. Let us understand how you trade. Let us understand how you want banking to be for you. And we can only build AI system when we understand you. But when we say, no, don't share your data, hold on to your data and all that, we're not investing around it, I think we'll be left behind. That's my argument.
Yeah, I think one thing that regulators and founders need to prioritize, I'll go back to compliance. It's not enough we need to start looking at compliance as important as the payment infrastructure or as whatever payment rails you're designing. We can't, in good conscience, say we're trying to attract foreign capital and not hold ourselves to a higher level of standard. And so for me, founders need to consider payment or compliance as not a nice to have. It should be part of your fabric. It's the cost of operating. It's the cost of having a license. And for the regulators, they need to, they're already doing it and across different markets. It's almost like 2023, 2024, 2025 have been years where they've all sort of woken up and we've seen very consequential actions across multiple markets. So yes, I think compliance has to be the core of everything. And once there's a level playing field, questions start getting asked. And when there are questions, there's more clarity.
Sure, we'll have you. Not sure we'll have time for questions from the audience, but happy to have him to close this out.
Yeah, I think I'll just reemphasize something that I said earlier, which is ultimately investors are going to go where they can make a good return on their investment in some sort of predictable way. So I think earlier when I talked about deficit of trust between regulators and innovators, I think part of it is consistency in the regulation, notice, a process. I think those things, rule of law, are all critical. And then I think the other part is always going to be the ability to move the money out again. So I think those are the two areas where I think regulators, again, I understand the constraints that regulators are under. It's easy to say, much, much harder to do. But I think those are two areas to crack.
Thank you so much. So we have been able to get a clear understanding that AI in Africa is not a soft concept. It is engineered specifically for the market. We are trying to localize it. We are thinking through the regulatory relationship. And it's something that has to come with a good amount of intention. So if you can join me in thanking our panelists, Tomiwa, Petra, and Lauren. Thank you.
Thank you so much. Thank you. Round of applause as they leave the stage. Thank you. Okay, so as we move to the close of the event, we have our final session with Zach, Foster, and Macias. So the man of the hour, the man who put the whole event together. Can we have a round of applause, please, Zach? And is Foster close by, or Macias?
Yeah, they'll join us.
They'll join.
Yeah.
Okay, so over to you, Zach. Thank you.
Thank you, Claudia. So I'm just a figure. There's a real team here on site, and we have global team based out of Accra, Kigali, London, and across the globe. So they're all working 24 hours for the success of the summit. So first of all, thank you so much for joining us. It's been an absolute pleasure hosting you during this busy summit. In short, our next summit is in Kigali, Rwanda, November 18 to 19. So join us. Foster is going to give us more information. The Africa leg of our summit is a 3-day activity. One of it is actually the what we call it an Excellence in FinTech Award. We also have other content, ecosystem tour, and content. Mikias is giving us that information. So I'll pass over to you, Foster.
All right. How many of you have heard about the Africa Fintech Awards? Ever? You have? Yes. Except you. So we've been running the summits for the last 15 editions, this being the 15th and the 16th coming in Kigali. And we've traveled north, east, west, south of the African continent, showcasing every single countries where we've hosted the summits, priority areas. We travel with investors, we travel with innovators like you, we travel with parties who have interest in learning about the continent and opportunities available in these countries. But the most important value creation is driven by the innovators. And one of the best ways to keep the ecosystem stimulated is recognizing and acknowledging the effort of these innovators. And so we put together the Africa Fintech Awards as a platform that recognizes and acknowledges the efforts of the innovators and other actors, policymakers, regulators, and other peripheral players within the ecosystem. And so last year we revamped the awards, put some rigor and governance around it. We now have a diverse board of selection, subject matter experts across the continent with representation from Anglophone, Francophone, Lusophone African countries to ensure that there's clear and fair representation and understanding of what is happening in each one of those pockets of the African continent, and innovators are clearly identified, acknowledged, and recognized for their efforts. And that is how we launched the Africa Fintech. We relaunched the Africa Fintech Awards last year. We now run 3 schemes within the awards. The first is the honorary award scheme, which the selection is fully decided by the selection committee. This is an honorary award scheme that identifies players and actors who have contributed to shaping the ecosystem for more than 10 years. And for anyone to be listed to even be considered by the vetting committee, the person should have already hit that mark. And then we look at the metrics of your performances and your contribution towards the ecosystem. So last year we had the pioneering honorees. We also have the second category, which is half voting and half decided. So we shortlist to the selection committee and open for public voting, because these specific award categories, we believe the opinion of the public is a big contribution, is a key contributor to making those decisions. And the last category is fully public voting. So these are influencers and content creators and other actors who contribute to financial education using content and using other mediums. So they will fall under this category. These are also players who don't just work in the financial services space, but lend their expertise to panels, to events, and these mediums. And we allow the public to vote on these people to make sure that their efforts are recognized and rewarded efficiently. So this is why and how we have restructured the award scheme. And we have a very secure platform we now use called Award Force. Everything is purely automated. No judges or no selection committee members perspective is altered in any way. They sit in their respective countries, they go through the portal, they do their own scoring, they leave their own notes. It's an automated system. It sends feedback back to the nominees. And then we have an audit partner that audits the entire trail. Then we make the final decision and announce the winners at the ceremony at the main summit. So this is the Africa Fintech Awards. This is the technical structure around it, because most people find awards lately, they put a lot of question marks around them. So we wanted to take this opportunity to tell you how it is structured, so you understand that there's a high level of integrity that goes into recognizing someone for these awards. And this is our opportunity to tell you the portal is officially open. You can go in there, start the process, create an account. If you are nominating someone you know, or nominating a company, your friend's company, nominating whether they're in law, tech, fintech policy, whatever it is, nominate them, and then it goes through the process. It could be your own company as a founder. Please do not be shy. As an African, we typically are conservative. Do not be shy to tell your own story. And this is your opportunity to be able to do that. So I declare this officially open.
So I know I don't want to keep you waiting from the happy hour and networking, so I'll keep it brief. I just want to highlight, why are we choosing Rwanda as the next destination? Zacharias definitely touched on it. But after spending some time in Rwanda in February, Rwanda is very interesting. There might not be too much buzz in the fintech space and the technology space just yet, but in terms of policy innovation and the startups that now have access to multiple markets with one license in Rwanda through fintech passporting in Ghana and Kenya, Rwanda is really establishing itself as a node to do business in technology. So that is why we chose Rwanda to go next. You know, in Ghana, Zacharias has already mentioned, we've taken institutional capital to look at the different investment opportunities. Digital infrastructure is also really, really big in Rwanda. Some big investments by NVIDIA into Cassava Technologies in their Rwanda division. So Rwanda is fruitful. It's positioning itself in a very, very advantageous way. So do stay tuned and join us in Kigali in November. So I just wanted to close with that, and thank you so much for joining, everybody. We appreciate it.
Thank you very much. So while we're here, this morning we had 11 early stage startups who pitched from 9 countries, and Foster was actually chairman of the panel of judges. So we had 7 VCs and accelerators who've been investing in Africa as an independent panel of judges. We select the startups, but we don't make that decision. We leave it for the investors. So they've deliberated and they've selected the top 3 winners. So I will let Foster tell us who the winners were.
All right, thank you very much. I feel like the MVP today. The ball keeps coming back to me. Striker. Anyways, so I'm sure all of you were here to witness. Every year we go through a very rigorous process. We get almost 100, 200 submissions. And while we are managing all the logistics, going through filtering and then getting the committee to look at these startups, and then we give the opportunity to a number of startups. So DC, we have 12. Then we go to the host country. Last year in Ghana, we did almost 33 startups. Every single one of them received $25,000 of AWS. I think it even went above that, 50,000 later.
Yeah. So Our long partnership with AWS means that everyone received $25,000. Some of them actually get $50,000 worth of credit. So for Meron and the team, thank you so much to the entire AWS team.
And I know sometimes you may think, oh, it's cloud credit. Does not mean it's not a real check. It's not in my bank account. But if you look at your expense line as a startup, you are raising money to pay for server costs. You are raising money to pay for platform fees. So these are the ways we are galvanizing and gathering ways to minimize your barrier to entry or to give you enough runway in the beginning while you are trying to raise hard cash from investors to be able to keep your systems alive. Because it's a chicken and egg situation. They say, show me your prototype, show me traction, and I'll invest in you as an early stage venture. But you need the money to build the platform, to be able to show them, to invest in it. So that chicken and egg situation is what we are trying to solve for. I know Zach doesn't talk about this much, but he personally has written almost 30 checks to over 30 startups since we started the program. And I think he deserves a round of applause. And in the coming months, we'll be announcing some very exciting things around going into the VC angel space to institutionalize what we do more properly and be able to write real checks beyond just the cloud credits. But these top three ventures, so the judging panel, you saw them on their phone while we're talking. We have a whole automated system that they just put in their scores, and then it's scores for you, it's scores for us. So it's a more, how do you call it? It's not a discussion about who is the best. It's the individual opinion of the judges, averaged, and then we shortlist the top three. But we believe that every single person who showed up is definitely a winner, and that is why each one of them still gets the cloud credits, amongst others. We have an unofficial announcement soon with Plaid as well to give some form of access to enterprise infrastructure to them. And these top three were actually the ones that demonstrated the most interest from the judges. Number three, drum roll, was Bloom Finance. Bloom Finance. Congratulations. So they are playing in a very interesting space, democratizing access to capital markets. The only way to unlock individual wealth creation is removing the barrier to entry. The traditional way of participating in capital market has been you need to have a trading account set up with a broker to act on your behalf. Here in the US, everybody just wakes up and they own an Apple stock. They own it. We can do the same in Africa, right? And we can also be able to do that cross-border, participate in other markets. If I am in Ghana and I use an iPhone, why can't I buy an Apple stock from Ghana? Everything you use, if it is listed, publicly listed, you should be able to participate. And we've seen Dangote about to do his massive IPO. And companies like Bloom are literally working towards making opportunities like this accessible to you. And for SMEs, the opportunity to raise capital on the market and make every single customer of yours own a share of your business. So that is part of the logic and I think reasoning why in my own opinion, I saw what they were doing very interesting. And the other judges, I believe, a reflection of same. Second was Fremo Pay. And Primo Pay also demonstrated their value proposition clearly in the financial services landscape. They are really doing something very interesting over there. And first, just so that I can quickly wrap up, drum roll, drum roll, drum roll, drum roll. Who was here? Who listened to the pitch? Who here listened to the pitch? I think you've seen that. I'm not going to ask you guys, except who do you think was, if you had to write a check today and you know by next week you make money off that startup, which one was this going to be? Who here was actively listening and was like, you did? And was like, this is the company. Tanzanian guy, you mean? Oh, the South African lady with the.
Yeah.
That was close. Who else? Anyways, so the Tanzanian value proposition topped it all, right? They topped it all. These guys, I was like, don't even attempt raising money from anyone. Like you're already in a money pool. It's rare to find a product that already has policy, like it has some sort of guaranteed backing to support it. Lending money in an arbitrage opportunity between when a student gets their bi-monthly stipend from the government, they give you the money and then they deduct from source. You can be rest assured that these guys are going to be printing money every day, right? And we felt the level of maturity they had gained, the level of traction they had gained, they were also clear in their value proposition, clear in their business model. You could tell the confidence the founder had in what he was trying to do. The vision was very, very clear. He understood who and what is needed to get to where he's going, and he had all the necessary licensing requirements to be able to expand on the operations that he's currently running. So this is why El Deserve Financial Services won the pitch competition here in DC. So I'd like to wrap up by saying thank you all. Your efforts coming here, you could have been anywhere today. You chose to be here with us. We are really, really grateful to have all of you here. And I'm going to turn the mic back to Zach to give us the last and closing words as we wrap up with Claudine.
Yeah. Thank you very much, Foster. I try to avoid being a member of a panel of judges for the last 8 years. I would rather sit down and listen. And depending on the decisions they make, we would rather write check afterwards. But I will say something, as Foster has said it, everyone that pitched is a winner. We've seen that for the last 8 years. I can give you just 2 examples. So especially for those founders watching us live, every one of you are winners because we're giving you the visibility and access connectivity with founders as investors. You saw Barbara moderating the stablecoin panel. So she joined our summit in 2019 in Addis. She saw this Tanzanian company. At the time, actually, she was just raising her own fund. And that Tanzanian company was not even, they were not even a winner, but she met them. She kept in touch. A year later, she closed their fund and she led their 3 million seed round. That's one success story. How many of you know Yellow Card? Yeah. Yellow Card? Okay. So they're Nigerian-based stablecoin crypto companies. They were our Alpha Expo pitch company twice in 2018 and 2019. They didn't win both times. Fast forward in 2019, they joined our summit. We connected them and they met Jack Dorsey. A year later, Jack Dorsey led their Series A, $5 million. Now they're one of the most successful African companies. So every one of you are winners. That win in a form of check will come tomorrow. Having said that, I know that we're standing between you and your happy hour. So thank you so much. Thank you for the team. By the way, the team have been working 24 hours, both here in person and also across the globe virtually. So thank you so much. This wouldn't have been possible without the team working with the labor of love they have for the continent, but also volunteers, the speakers, and multiple meetings taking place in DC. You chose to be with us. Thank you so much. See you at the happy hour and in Kigali.
See the sunrise in the morning glow. People hustling, moving to and fro. Money flies with the speed of light. From a smartphone into the night. From Lagos to Accra, Nairobi, Cape Town. Mobile money future.